kutokea ajali.
Kwani umenisahau mimi kama driver?
Dereva hakui covered na comprehensive insurance, ila anajitafutia personal accident cover.
Umenichanua. Rose, hata nishughulikie hiyo insurance, nitakujia gari kesho.
Okay, sawa.
Motor vehicle insurance certificates are now issued electronically. Once you receive your digital certificate, you must verify.
Hello. Good morning. Good morning. How are you today? How is fantastic? I love that. Fantastic. So welcome to day 2 of the 8th Eastern and Southern Africa Regional Conference on Inclusive Insurance. I want to believe that I'm hoping that we all had restful nights and everyone is fine. And so far so good. If you may be having any challenge in any space, you can talk with me or any of the ladies you will see in the brownish t-shirts. We would like you to be as comfortable as you can. I'm wondering why we are all moving towards the blue. The white also needs to be filled. And I can see my director is actually moving to the back. I'm not understanding why, but karibu sana, Director Alice. I would like to invite our resident pastor, Abel. Kindly come and start the day in prayer. Thank you.
We can bow down and pray. Eternal Father, we thank you for today. We thank you for the sessions we are going to have. We commit every facilitator into your hand. Release your grace even upon this day. Thank you for the meals we shall eat. We declare they are blessed. Thank you, Lord. In Jesus' name we pray. Thank you.
Thank you, Abel. And again, as we start the day, just to remind us that we are still doing registrations for the field visits, courtesy of APA and Britam. If you want to participate in the agriculture themed field visit, kindly sign up with APA. If you are on the health side, then you sign up with Britam. As I was coming, I just came across some one-liner. It's not me, and the question was, what is common between men and insurance? What's the commonality between men and insurance policies? Security? Oh, wow. Nice. Peace of mind. Men come with peace of mind. I'm sure you can debate that until the cows come home. Any other? Fine. Security, peace of mind, granted. Both make big promises and deliver none. I didn't say that. He said it. Any other? Those are 3. The 4th one is that they don't mature. That's what they said. That men like insurance policies rarely mature. It's always come again. Come again. Did you read this clause? They take longer to mature. What about insurance and women? Sexy? Nice. Nice one. Another one that is commonality 1. Sorry? Both are hard to understand. And actually it says they are hard to understand and are complicated. And they're not what you always see. It's not what you see that you get. I don't know how true that is. Today we are going to talk about how to enable inclusive insurance market development and on the continent and specifically in East and Southern Africa. And I would like to welcome our facilitator for this session, Lemmy Manje, CEO, Finprobity Solutions, Zambia and Rwanda. Lemmy is very passionate about inclusive insurance. And allow me to say that even as whatever we are seeing and all the talks and all that, Lemi has been very crucial in putting all this together and even identifying some of the speakers who have done a very good job so far. So I would like to welcome Lemi up on stage for him to welcome his panelists. Welcome, Lemi.
If I can ask the technical team to bring the microphones to the stage. And good morning, everyone. Welcome to day 2 and welcome to session 2. Without much ado, I would like to invite my panelists. I think they'll be formally introduced once they're on stage, so please, if you can walk to the stage. Okay, whilst the panelists walk to the stage, can you please put the first deck? Okay, perfect. So just to get started before I can introduce my panelists. Yesterday we saw how the markets look very gloomy, and we finished off with a landscape session which talks about how inclusive insurance looks like in Eastern and Southern Africa. And we also looked at Kenya, and Anne did an excellent job to give us what Kenya looks like. And all that we saw was that there is so much work to do, and the current description that we're just making now may actually speak to what we were looking at. So I want to start with this statement that insurance markets do not naturally grow and become inclusive. You can debate the statement. To me, it sounds like if we left all the markets, insurance markets, without any interventions, without any conferences like this where we can share insights on what works and what doesn't work, we'll be 50 years and we'll be talking about the same story. So this session is about what can we do to change? And it's not only the insurers. We have development agencies, we have the regulator, we have associations, we have international development agencies that are looking at this theme. And this morning we want to look at what can we do to support these markets to grow. If you talk about why, the why question, why should we be talking about insurance market development? This is one graph that paints the picture that actually, when you look at Africa, most African countries are unprepared for risks. They are actually in the least prepared quintile. Just look at the colors. The orange color is actually the least prepared. And this is for even sovereign risks, like what would happen if there was a major risk. The next slide actually puts it to perspective. It actually looks at insurance penetration. And you see that, again, the orange color is dominant in Africa, and it shows that most African countries have low or very low insurance penetration. So that's really the picture. You can go into looking at insurance penetration, 1%, ranging from 1% to 3%, with the exception, of course, like you can see there, South Africa, but most of the countries in Africa, we are way, way below in terms of penetration. So we need to change this, and this is the reason why other stakeholders have to look at this subject. So today I want to end by saying we are going to cover a number of themes, and we're going to look at why is it important to develop national strategies, what's the role of associations, how can we engage stakeholders more proactively to actually move the markets, how can we build capacity, how can we go up over some of the challenges that were highlighted yesterday by some of the market players. So I'm very honored to have the panelists that we have. John Bosco Iyachu is the CEO of Access to Finance Rwanda. He'll talk more about what they do, but they are part of the network of financial sector deepening programs in Africa, which actually stimulate inclusive finance or access to finance. So he'll talk about that. And then we have, okay, it's gone. Oh, you want to put the bios? Okay, then we have Dr. Torek. Dr. Torek is the executive director or secretary general. Yes, or CEO of the Insurance Federation of Egypt, and I was privileged to work with him over the last month or so when he hosted us at the second microinsurance conference. And then we have Pedro. Pedro is the coordinator of IDF's Inclusive Insurance Working Group, and is also part of the microinsurance network team, and so privileged to have him. He'll share some insights, and more specifically some insights about the recent workshop that was done in Kenya and what needs to be done there. And then we have Mary, last but not the least, who is part of our host. Mary is one of the senior directors or managers, yes, in charge of prudential supervision at the Insurance Regulatory Authority here in Kenya. And she'll give us insights as well in terms of what the regulator here is doing. I think yesterday there was a preamble to that. So very distinguished panel and trying to solve the issue of how can we develop inclusive insurance market. So I'll start with a question to each panelist before they can give any remarks. I'll just ask them to say, when you look at the picture that we've just shown of what Africa is like, what in 2 words needs to be done? Okay? 2 words needs to be done from your end, and then we can get into the specific things that we'll do. I'll start with Mary.
Good morning. Yes. There is need to have a conducive environment to promote inclusive insurance so that, because the demand is there. So what do we do on the supply side? Thank you.
Yes, thank you, Lemmy. Good to be here. 2 words. I think you need to be intentional. It doesn't just happen, as Lemmy said. And you need to track progress over time. Thank you.
Okay.
Oh, yes.
Good morning, everyone. I think we have first to understand the client and to build the capacity.
To be very direct in 2 words, I think education and innovation, I would say.
Okay. So innovation and education, enabling environment. And yesterday we actually discovered that you can actually be profitable. So when you talk about supply side now is actually demonstrating that it can be profitable. So I'll now start with Pedro to just give us some insights in what IDF is doing, and also if you can talk about the outcomes of the recent workshop and what needs to be done. Yeah.
Thank you, Lemmy. Thank you all. Very good morning to you all. I'm very happy to be here. I would like to start by saying that I've been introduced already, but my role, I'm housed at the Microinsurance Network. My role is co-sponsored by UNDP and the IDF Secretariat, and I wouldn't be here in person today if it wasn't for the global index insurance facility of the World Bank. And the reason why I'm mentioning all these organizations is because I think the structure illustrates very well what the IDF Inclusive Insurance Working Group is trying to do and how it's trying to engage with the local markets such as Kenya and many others. What the IDF is trying to provide is an articulated, coordinated vision for the development of inclusive insurance markets when we talk about the Inclusive Insurance Working Group. And this is what we started doing here in Kenya last year, and I'm very happy to say that I think the workshop was very successful, and how success was measured for me was in terms of the turnout of the local market players and the inputs that were given by yourselves into the strategy that's being developed for the country, right? I was already looking forward to meeting some friends I made here last year. I think we're establishing a presence in Kenya, and something that really stayed with me from the workshop was, I think it was Elias who said that he hoped this was not going to be just another talk shop. And this was my own personal expectation as well. And I think with the virtual meeting that we had to share the results from the workshop, this conference happening right now, and with us having a presence here, I think we're really building the momentum and connecting the dots. I think the challenges are very clear. They were mentioned yesterday. I think Anne's presentation covered most of what I was planning to present today. So I have a legal background, but I really see my job as a job of an architect that's building bridges to the resources that already exist out there that are available to these markets to address the challenges that we all know that are present here. In terms of the IDF, I think I have...
Can you put the slides for Pedro?
I'd just like to explain a little bit of what the IDF is and what it's trying to do. The IDF is a platform that brings together global insurers, reinsurers, brokers, with international organizations that are working in development to increase people's resilience in the global south. I think this sums up what the IDF is doing. And what it has been most successful at so far is really working together with governments to build risk management capabilities and design macro sovereign insurance solutions for governments, such as insuring public schools so that kids have their right to education insured, or redesigning national agricultural schemes and many other programs. And this is done within a structure of different working groups. There's a working group that focuses on sovereign humanitarian solutions that came up with these projects that I'm mentioning. But Inclusive Insurance Working Group has to be seen as a piece of that puzzle, and a puzzle cannot be completed with all pieces, so it is a very important piece. And when we talk about inclusive insurance, I believe we have to bear in mind that it's, as the saying goes, it's not a silver bullet. It will not address all the challenges. There are risks that, because of their nature, in insurance terms, their frequency and severity will have to be addressed by governments, by sovereign schemes, by macro-level solutions, by meso-level solutions. But inclusive insurance does have a role in complementing social protection systems and these macro schemes as well. So I think the mandate of the Inclusive Insurance Working Group within the context of the IDF is to work together with this, with the other working groups to complement the existing strategies. And this is what we are looking to do, and the strategy that was established was to engage with local markets, trying to understand what are the existing gaps for the development of inclusive insurance. So this is what we did here in Kenya last year, or started doing. And based on this gap assessment, we come up with a country roadmap that's really designed by the local market with initiatives that will address those gaps, right? The slide that I had here was showing this risk layering approach. It's from the ICII report. So, I'm a very avid reader and user of the report. I recommend for all of you, in case you don't know it, to go to the Munich Re website and check it out. It's a very useful resource. And I guess I'll stop here, and then I'll go back to discuss the main challenges in the roadmap that we're designing.
Yeah, so just thanks so much for highlighting that, and I like the fact that you are facilitating the development of roadmaps. And the beauty about roadmaps is that it brings in different stakeholders, and it shows which stakeholders needs to do what for the market to move. So, Dr. Tariq, in Egypt, you are doing excellent work, and we were part of one of the initiatives just over the last month in March, when we're trying to stimulate and build the capacity and exposure of the industry. Can you give us more insights of what you are doing? And I'll ask the team to actually put your presentation so that at least we can benefit.
Okay, good morning, Hojambo. Hojambo is the correct word or not? Okay. I will give you just a quick picture about the Egyptian market today. Actually, in the Egyptian market, we have a very high potential for microinsurance. We can see from this slide simply that the penetration is extremely low now. The penetration in Egypt, the total penetration for insurance is 0.71%. It's less than 1%, and compared to 1.6 for the emerging EMEA markets. So this is our benchmark. So simply we have an insurance gap actual 100%. Our gross premium written in the market now is 2.8 US dollar, and we willing to double the volume of the insurance premium to fill the insurance gap. Also, when we dig into more details for life and non-life, the penetration is very low for both life and non-life or general insurances. So we are working hardly to fill the gap now and to try to double the premium over the 5 upcoming years. And I will tell you, I think 5 years is a very optimistic time, but the new law, insurance law in Egypt, provides 8 new compulsory insurances. The 8 lines will be compulsory according to the new law, and this will help us a lot to fill the gap. Also for insurance dynasty, can I have the slides again? Also for insurance dynasty, what does it mean? Insurance dynasty, simply the insurance premium per capita. We have $27.7 per capita in compared to 92 for the emerging EMEA. So again, we have a lot of things to do to fill the insurance gap in terms of the total premium written in the market, insurance penetration, and insurance dynasty as well. So we have a macroeconomic strategy developed by the Egyptian government. It's called Egyptian 2030 Vision. One of the main objectives is to diversify the economy, creating a competitive economy, elevating poverty, inclusive insurance, more sustainable economy, reducing inequality, working on gender equality. So all about having sustainable economy, and this can be cascading down to the insurance industry by having sustainable insurance and micro-insurance products. Also, the FRA, the Financial Regulatory Authority in Egypt, developed its strategy to enhance using financial technology to create more inclusive environment in Egypt. one of the main initiatives taken by the FRA is to introduce the Unified Insurance Law. This law is to be rectified by the Parliament very soon. They are discussing, we expect to get the law to get rectified in 2 months or 3 months maximum. This law introduced a new separate license for micro-insurance company with a minimum capital requirement of 30 million Egyptian pound, equals to $1 million. So this license will be composite license for both life and non-life, because we don't have composite license in Egyptian market now, either to work non-life or life. For micro-insurance specifically, the license will be composite for life and non-life. And also the FRA issued a new decree last week to allow insurance companies to use mobile network and electronic stores to distribute micro-insurance. So this will help in digitalization. So we expect a very high growth in the micro-insurance products and micro-insurance volume in the market after rectifying the law. Why? Because simply we will have a separate companies for micro-insurance, separate license for micro-insurance. We will have distribution through electronic mobile network and electronic stores, and also we will have 8 compulsory insurance will create a very high demand for insurance, especially for poor people. Also, there is 3 companies announced that they will apply for the license once the law will get rectified from the Parliament. Central Bank of Egypt has a financial inclusion strategy as well, and also Egypt Post. Actually, Egypt Post is a very important tool to achieve inclusivity in the Egyptian market. Why? Because simply Egypt Post, they have a 25 million saving account. 25 million saving accounts. The population in Egypt is 104. So they have about 25% of people have a saving accounts with the Egyptian Post. 4.8 million accounts are held by women, okay? And they have 4,300 post offices. They have many mobile applications for payment. So they are very equipped to achieve inclusive insurance in Egypt. Actually, they announced that they will get a joint venture with AXA Egypt to establish the first micro-insurance, specialized micro-insurance company in the Egyptian market. And again, they're waiting for the new law to get rectified. In IFE, we have some initiatives. Actually, we established 3 specialized committees, technical committees. Out of the 21, we have 21 technical committees in the IFE dealing with different lines of business. So we have dedicated committees for micro-insurance, agriculture insurance, and sustainable insurance. They work hardly to develop guidelines, business models, platforms to help micro-insurance and inclusive insurance in Egypt. Actually, we renamed and revamping the IT committee to be a digital transformation to support the insurance sector for digitalization. We developed elevating insurance literacy through many insurance awareness campaign. We have insurance awareness committee. It's a dedicated committee working to develop campaign. We conduct IFE marathon annually to pass message to people about inclusive and micro-insurance and sustainability concept. We're trying to build the capacity. We have 2 conferences every year, Sharm Rendezvous and Micro-Insurance Conference. Micro-Insurance Conference takes place in March. This year, we received about 300 participant delegates, and we had 18 speakers. We had many speakers from 18 countries. So this is a very good way to enhance the literacy and to building capacity in the insurance market. We have our annual conference called Rendezvous, attended by more than 1,000 delegates. We conducted many virtual workshops and focus group. Also, we're building a partnership with many international and regional organizations. We have protocol with microinsurance network, and we get the exclusive right to translate the microinsurance landscape into Arabic-speaking countries. Also, we have another protocol with AIO, with Egypt Post, with Ahl Masr Foundation, and with the Federation of Egyptian Industries. All these protocols are focusing on inclusive insurance and create the enabling environment to achieve the inclusive insurance and sustainable strategy. Actually, you have also a very synergistic approach among insurance and other financial service, non-banking and banking financial services to support the financial inclusion. We have protocol with the Egypt Post and with many banks to introduce new products for poor people. And also we work to enabling the ecosystem to achieve sustainable growth in the financial sector. This is the main initiatives by the IFE. Thank you. Asante sana. Okay, thank you.
Thank you so much, Dr. Tariq, for that. And I'm sure we'll definitely have some questions from the floor soon. Let me shift to our host, Mary. Okay, yes. So, yeah, we are in Kenya and we want to learn what you're doing from your office. And thank you for hosting this conference. But want to learn now more specifically what is the regulator doing in Kenya to actually develop this market, to change the picture that we saw from the landscape.
Okay, thank you. In Kenya, we did a study, and that one established that the demand for microinsurance is there. So to spur the supply, we realized that our laws were a bit of a hindrance, and the authority developed the microinsurance regulations, which went through the entire process, and finally they were approved by the cabinet in 2020. And in these regulations, we have relaxed the requirements to cater specifically for the suppliers or those entities who are interested in doing microinsurance. If you check the capital requirement is far much below that what is required for conventional insurance. The reporting requirements are also proportionate. And when I talk of proportionate can be on the higher side for those large entities and also on the lower side to cater for small entities like the micro insurers. And unlike our conventional insurance companies where we issue them with a license and the license remains valid until it is cancelled, for our micro insurers, they'll be required to renew on an annual basis. This is to ensure that we are also keeping in touch and following very closely, because even the type of products that we've allowed the micro insurers to underwrite are annual products. Then we don't allow them to underwrite long-term products because of the target market of these particular products. Working with our parent ministry, the National Treasury, the authority worked and developed a national insurance policy whose theme is on inclusivity, accessibility, and affordability. Once it is approved and we start implementing it, then we are going to roll out measures to ensure that insurance reaches to the most remote parts of this country. Thank you.
Very, very interesting. And when you talked about proportionality and also making sure that there's sound business for the microinsurers, I just wanted to find out, and this has been a debate in most markets, and the definition keeps changing. The idea of tying microinsurance to 12 months it has been a challenge in some markets. So, for instance, in one market, they underwrite, they had a challenge to actually cover micro finance loans or micro loans which were extending beyond the 12-month period. So how are you dealing with some of these issues? And I would imagine there is some dialogue with the market players.
Yeah, there is some dialogue, but as you see, most of these people, the target audience, those are people whose income is very low, and they rely on short-term finance arrangements. So we wouldn't want to open up if someone is able to take a loan of, let's say, 5 years and such. This is a person who is able to buy insurance from the conventional underwriters. But the target audience for the micro insurers are those people at the bottom of the pyramid. Most of them, they feed from hand to mouth. And should a risk arise, then these people will be pushed further into poverty. So the purpose of this microinsurance is to ensure that we are able, that the companies are able to cover these risks and ensure that those people don't go further. So by limiting to 1 year, I know there could be challenges, but when we look at who are the target audience, that's what guided the authority. Even the products, we've allowed the microinsurers, unlike the conventional underwriters, where an insurance company is authorized either to do only currently life or general. We don't allow composites. But for microinsurance, we've allowed the entities to bundle the products. So in one product, you can find that there is a life element, and there is one to cover maybe business continuity for those who have shops and such things. So because of that bundling together, we don't allow them to have long term. So every cover runs for 1 year and it is renewable. Yes.
I'll shift attention, and I'm sure some of those themes will be covered in the Q&A as well, because there are points of discussion as well in terms of inclusive insurance regulations. I'll shift to Rwanda. Bosco has been with Access to Finance Rwanda for quite a long time, and since I knew him, he became a disciple of inclusive insurance. So, yeah, can you talk about the journey that you've taken in Rwanda to push inclusive insurance? It's changed quite a lot. I remember doing the first landscape, and we had like 100,000 people covered by microinsurance, and now we have so much. Yeah, can you just give us some insights on?
Yes, thank you, Lemmy. Originally, I'm a banker, and when Lemmy brought this conversation, we had to debate a lot. I would request that they change the slides. I mean, there's another new version. I guess you have it. And that time, clearly, inclusive insurance was a hard talk to have with the industry. And when I talk about the industry, it's really from policy makers to the regulators, to the supply side, and even people, actually. The demand side also wasn't feeling that insurance is their product. They should actually have insurance because they knew one insurance product, which is quite common, the community-based health insurance program called Mutuelle de Santé, and they thought that's it for insurance, and they didn't think they would buy any other insurance from the market. We're so intentional to say, well, as a market facilitator, so Access to Finance Rwanda is part of the financial sector deepening network across sub-Saharan Africa, and we promote financial inclusion and financial sector development. Clearly, we felt insurance was one of the sectors that we haven't done much around 2016. And we said, well, we need first to get evidence. And that evidence really to paint the picture to the stakeholders and to see the problem and the magnitude of the problem. And that, I think, played very well over time. So we went ahead and had our, so we normally conduct what we call FinScope surveys across these markets. And we look at different subsectors within the financial sector. So this time we worked on a specific report, thematic report on inclusive insurance. And then we actually had 90% of the population that was saying, because it's a nationwide survey, they were saying that they have insurance, 9%. And that really was a huge, gap. And policymakers could see it. Market actors could see it. And the competition was very high for the underwriters within the traditional segment. So after that, we felt it was very important that we take them, we also look at the supply side to see who is doing what, who is even trying to serve this segment, the low-income segment. And clearly, how many? We had like 2, and those 2 were working with some development partners that I think ECA Africa or Syngenta Foundation then was supporting, but really they didn't even own the product within the institution. So that really pushed us to move to the next level of saying, well, let's, now that we understand and the picture is clear, we need to be deliberate. We need to be intentional and see what we can do. So we started with the regulator and said, well, as a regulator of the market, you need to provide a conducive environment. And that's when we pitched for a specific micro-insurance regulation. I think we're almost first or second in Africa to do that. And the regulator was open. So we supported, hired consultants, and we put it in place. 2018, it was up, and we were having conversations with different CEOs and saying, well, this is really a huge market you should be serving. And I like this brave soul that we saw in the market. And that's one CEO who said, by the way, I understand, because I've been trying to serve this market, but I haven't really pictured how I should. And they said, if you support me, we are happy to go with you and walk this journey. We said we are fully committed to this journey. The few months after the conversation, what happened, he was able to convince the board to put aside capital for a specific microinsurance fund. And that was really, I wasn't expecting that. It was I was like, well, that's really brave. Huh? And then we supported, and they got their license. We're talking to the policymakers to also support, and they started work. Now, beside that, we thought, yes, we have the first microinsurance firm in the market. What about really talking to government and saying, well, yes, there are so many risks that we see in the market, and government, if they are to provide some support, we can see traction in the market. So we introduced one big program, which is the National Agriculture Insurance Scheme, from design in 2018 until launch. And this particular program, or this scheme, I think was also a game changer because it was a private-public partnership. So we had 5 insurance companies that also partnered with government. Government was open to provide some subsidy on premium, up to 60%, 40%, and the farmers were paying 60%, and currently it's still the same. So government committed to provide some funds from the annual budget just to support this scheme. So it started, and every season you have 100,000 or 150,000 farmers every season benefiting from this scheme. And we're expanding to multiple crops, export crops, but also those crops that are in the domestic market. Another good initiative that we put in place, we're discussing around the informal sector pension scheme. As you know, across Africa, most of the those that have, I would say, savings for old age is the formal sector. And this formal sector is the only one that is deducting from source, and then they transfer to the pension fund. Now, all these informal workers who are very active, they can't save for old age because there are no products that suit their needs, because you need to deduct every month. So now these people don't have a monthly income. Some of the times they wait for the harvest after 3 months, 6 months. Or really, I mean, the income patterns are quite different. So we went ahead and designed a program that is now covering close to 2.4 million people. But we were because we had a plan around inclusive insurance, we said we actually bundled it with life cover. All these 2.4 million people have a life policy. Very interesting. So now, as you can see now the data, when we conducted the next FinScope survey in 2020, clearly we had moved from 9% to 17%. So it's really being intentional and tracking progress. Now, what would I say? I would say that, yes, we still have 83% that is not covered, and we know where they are. 90% are rural. We know that most of them have only primary level education. Most of them are farmers, almost half of them. And they're into the informal sector. 57% are women. So that's our next challenge. And the plans ahead is really to say, I mean, this year, we also working with both policymakers, regulators, and market actors, industry associations, now to draw a roadmap for the next 5 years to see what we can do together as an industry. And that will be completed before June this year. And we are also intentional to collect more data this year and publish another inclusive insurance thematic report early next year, just to show where we are and where we need to be. So that's the journey ahead, and we believe that after that we should be deploying some market interventions to continue supporting this sector. Thank you.
Thank you. Thank you so much. I think quite developments there from where you were and where you are. And like you said, I like the term intentional. And it's good, a market facilitator bringing all the stakeholders together, working with supply side, but working with the regulator as well. Let me shift a bit before I come to Pedro in a minute. To Mary, instruments. What instruments are you using to measure the success of microinsurance, both in terms of whether they are growing, but also whether they are creating value to the market?
As I indicated earlier, I think I didn't indicate that by the end of last year, we had one fully fledged microinsurance company. We now have several applications that are waiting approval. And we have our conventional insurance companies, which had been underwriting microinsurance before this change. And the law had given them a transition period of 3 years, which expired by February this year. So quite a number of them are now applying for a separate microinsurance license. So as we speak in Kenya, we cannot really say that we have that sufficient data. The only information that we have is for those conventional insurance companies which were underwriting microinsurance as a class and a general insurance business. So at the moment in our regulations, we've stipulated the type of returns that we are going to receive. And at the moment, we cannot really comment because it is still at its infancy. And I'm sure by the end of this year, we are going to have over 10 fully fledged microinsurance companies. Yeah.
And before I get to Dr. Tarek, you talked about engagement with the regulator. Is the aspect of reporting also on the table? because I think we've benefited from the work of the microinsurance network for years in terms of getting this data. But at some point, we kept on asking, well, if the regulators can actually collect some of this data, it will actually make the landscape studies a bit more, enriched and focus more on the qualitative bit. So is there a discussion that now you have a microinsurance license? Is there a discussion on reporting and data analytics to actually show trends also on the table?
Okay, thank you. This is a very good question, actually. I think the case in Egypt now that we have a very good regulatory environment already, and we have the IT infrastructure as well. But we have some obstacles and challenges to develop a microinsurance industry, a fully fledged microinsurance industry. Simply, we have to look at supply and the demand. As famous economist Alfred Marshall said, that the supply and the demand are like the two blades of the pair of scissors. They are equally important to cut a piece of paper. In Egypt, we have problem in demand. The insurance awareness is extremely low. We have to elevate the insurance awareness to create a sensible demand for microinsurance products. This is what we are trying to do in IFE and insurance companies with full support from the regulator. From the supply side, actually, we have two challenges. We have lack of actuaries in the insurance market. We have about 41 certified actuaries. 50% of them are over 70 years old. So our plan in IFE is to have 200 actuaries during the 5 upcoming years. We work with many international universities and institutes to build the capacity. Also, the very traditional way of marketing microinsurance. Many insurance companies, they think if they push the traditional product through a new distribution channel, sell the same insurance company with cheaper premiums, will be a microinsurance product. Actually not. We have to understand the client needs. We have to develop new products for the client need of the microinsurance business, because pushing old or traditional products through new distribution will not help in creating microinsurance products, because we have Arabic proverbs say this is old wine in new glasses. Now we know we need new wine and new glasses. This is basically the main point.
Thanks. Yeah, Pedro. So we need you now to share the insights from what's coming in Kenya, what needs to be done, who's going to be engaged, and I'm sure everyone is anxious. Can we put back the slide deck for Pedro?
Yeah, the clicker, please. Thank you. I'll go over the challenges we mapped and show you the roadmap we're suggesting. And then I'll comment on some of the insights that were provided here in the panel, because I think they're very interesting. Can you please put up the slides? This doesn't seem to be working. Yeah, there we go. So, well, the challenges, as I said, most of them have been mentioned already. I think education comes up as a major challenge, generating a culture of risk awareness and understanding insurance. And when I mention education here, we usually think about financial literacy, but we need to remember that insurance has some very specific basic principles that need to be embedded into national financial education strategies. And I know that this is something that associations can push together with governments when they're designing these broader financial education strategies. Policy wording, which relates to understanding of products. As I said at the beginning, innovation, so digitalization is a major issue. focus on products versus on customers, which brings many other challenges, such as the value proposition, low claims ratios, so really looking at the products that are available, whether they fit or not, the needs of the target population. Regulation is a very big word there, and we're suggesting a specific work stream on that. Training, funding was one of the challenges that we expected that many of the projects would point out as a major challenge for scaling up, since we know that there's a lot of funding available for pilots, but then once the pilot is over, usually it's difficult to scale it up. This was mentioned effectively by many of the stakeholders that we engaged with, but it's important to, I think, stress that funding is not the only constraint. It's not only about finding funding or technical assistance. There are many challenges that can be addressed by the local market working together in a coordinated manner. So what we're suggesting, you can see here, there are 5 work streams. One focuses on regulation, the second one on technical assistance. We're suggesting 2 very specific multidisciplinary, I'm calling them subgroups or squads with insurers, distribution platforms, and innovators focused on smallholder farmers and MSMEs, and these would be sort of product prototyping squads to really come up with innovative solutions and partnerships. And then there's a final one on insurance education. So when we talk about technical assistance, is really this creating a marketplace of projects that can then access the funding and technical assistance that is available internationally. I know we have a CBF here today, for example. They're members of the Inclusive Insurance Working Group. There are many other similar international organizations that have their processes in place for applications. But we could perhaps try to work together and streamline applications so that in a coordinated manner, the market can access these opportunities. Then I've mentioned the 2 multidisciplinary squads. These could be hosted perhaps in the Insurance Association, that's an idea, or if the supervisor would like to take it on board. I believe, as I said, it needs to be driven by the market. We have Anne Kamal here, who's a major champion. Now the MIN has Karimi on the ground, and I'm very happy about that because now we can rely on her, but I'm sure there are many other people who could help us drive this forward. I mentioned regulation, and here I would like to point out to some of the ideas that came up in this panel because I think they're very interesting. I always go a little bit out of my way when regulation is mentioned because I'm very passionate about it. I think I'm always trying to come up with ideas of incentives for traditional insurers to start doing inclusive insurance, right? Because when the regulatory frameworks are drafted, there's usually trying to register inclusive insurance products that are bundled, right? I don't know if that's addressed in Kenya. This is something we could discuss in this subgroup, right? As well as the 12-month limitation. I totally understand the reason for that, but perhaps we could discuss if there are any other instruments that are being used in other parts of the world that could translate to the Kenya context that we can then suggest and maybe test in a sandbox environment, for example, so that the supervisor can have a very close look at it and understand whether this suffices in terms of consumer protection. So these are the kind of ideas that we're fostering. And then there was, I think I mentioned to micropension, which I think is a very, a subject that we tend to overlook when we discuss inclusive insurance, and with the aging populations in our countries, in my own home country, it is the same. I think it's very important to consider. It's a major opportunity for the market, and it's a very, I think it's the ultimate level of sophistication in terms of risk awareness, right? Having the ability to think about your future, how you will be able to afford even other types of private insurance, such as health insurance, which becomes a major burden when you're older because it's more expensive and so on. So it's really intricate, but I really like the ideas that came up here. Thank you.
Perfect. Yeah, I think we are right in time to begin to get questions from the audience. Yes, please.
On the education side. Also for education, again, we have to see supply and demand. It's not about developing education programs or training programs, because actually the insurance is not a very attractive career for many people. So we have to know how to promote insurance as a career of choice. Because I personally, for example, it's a bit funny, I failed to convince my son to study insurance. He said banking is more prestigious and more promising. So it's not about having education program, it's about having demand, how to promote insurance career for young people. Thank you.
Thank you. All right, I open up now to questions from the floor. Israel, and yes, I have Israel, and I have, yes, I'll move through like that.
Thank you, Lemmy, and the panelists. Those were excellent presentations. There's a lot that I've learned, and there's a lot that I believe in Africa we will continue to learn from our host, Kenya. Now, if I can just start with Pedro Pinheiro and say, on your points there, I noticed competing priorities. I actually think that it's probably bigger than it currently appears on your screen, because I tend to see it interfering in many ways. I mean, for instance, just a good example, if I can just go back to Mary Koimu in terms of the regulatory authority in Kenya. In Hollard, the group where I come from, when we started agricultural insurance, we needed a time horizon of 5 years. Without a time horizon of 5 years, I wouldn't have a job by year 2 because there were no profits to talk about. So I would absolutely be completely exposed if in my country, in Mozambique, my license was 1 year and I opened a microinsurance dealing with agriculture. Because contrary, Pedro Pinheiro, to your observation, we have had massive claims experience, and I'll share links about how, starting with our pilot, we had a 270% loss ratio. But obviously we'd need time to talk about some of the things I think that happen through the insurance markets, including excessive extraction of transactional costs and the way things are structured in terms of reinsurance. But we will need time to get into that. But the point that I was raising is that within Hollard, starting from year 1, we knew that we were not going to make profits for the first 5 years. If that operation was a standalone, having to be subjected to application for a license after the first year, I am sure we would have faced massive challenges with a 270% loss ratio on year 1. My other challenge to the regulator in Kenya is that when you limit the time horizon for the license, are you also not limiting the investment that the private sector will do? Why am I raising this question? It's because in Mozambique, we don't have title deeds. We've got a land tenure system where after a certain defined period, the land doesn't belong to you. And guess what? The average person that has got that land tenure and that knows that this is not permanent, I might lose it, they do very minimal investments. So I tend to believe that there could be other alternative tools, especially market conduct and prudential regulatory frameworks that can be used to monitor and to check, not even on an annual basis. I actually believe that on a quarterly basis, the regulators should be monitoring the right indicators and taking the right interventions. That's just my belief. So this was the first issue where I see this question of competing priorities. Dr. Saif from Egypt, as part of his presentations, and supposedly due to the lack of demand, referred to introducing obligatory insurance. I come from the insurance sector. Nothing would give me as much pleasure as suddenly everyone is told insurance is obligatory. But with Africa, after we gained independence, what does it mean for the future of democracy if we start force-feeding? What does it mean with regards to encouraging the operators to innovate and to develop? Because if you can sit back and the consumers are going to be forced to buy, it tends actually to be not an incentive, I think, for innovation and development. But for the markets that have made products obligatory, those are case studies that we should continue to work. But I tend to believe that obligating versus innovation, there is an intrinsic contradiction, because if you're guaranteed with the market, often there is no pressure to innovate. Then I also had a question around competing priorities.
Allow you one more. One more. Just one.
One more. Final one. Pedro, one of the biggest financial regulatory challenges in Africa at the moment is what is called anti-money laundering legislation. And within this anti-money laundering legislation, insurers and bankers are supposed to apply what are called know your customer regulations that are intended to prevent money laundering. In the agricultural sector in Mozambique, where the average farmer is paying $1 to $5, I mean, what money laundering is he going to do? But the laws have been applied for everyone, and this is where, Mary, when you spoke about proportionality, in principle, it's a beautiful theme. In practice, do we actually have proportional regulations? So for me, I'm not saying let's remove the rules for money laundering. I'm saying, yes, my country in particular has had $2 billion involved in a scheme of money laundering from the Treasury. That's money laundering, not $1 or $2 premium from a smallholder farmers. What sort of mechanisms should we be having to ensure that there are proportional requirements as far as anti-money laundering legislation is concerned? Thank you.
Okay. Thanks, Israel. As always, tough questions, but highly debatable. Yes. Please, can you move the mic there?
Good morning, everyone. Lukania Makunda from FSD Kenya, and happy to see Bosco there, FSD Rwanda. My question is to Mary, very simple. My initial question was whether you had any microinsurance providers registered, but I think you answered that. So my follow-up question on that was sustainability, but I guess you said it's too early days. So my question is on the sandbox you're doing. How is that coming to play when you're trying to get the microinsurance providers to be part of this journey?
Okay. Yes, I'll take more questions, and then, so I'll take 1, 2, and Richard will be the last one, and then we can have the responses. Yes.
Good morning, everybody, and thank you, panelists, for those very good presentations. My name is Hazel Kingori. I work at the Association of Kenya Insurers. So I had a follow-up question to what has been asked to Jean. In terms of, you've talked about the retirement bundled life cover product that covers about 2.4 million, but you didn't go into the details of how exactly it works. I'd be keen to know, how do payments work? And is it being driven by a private firm or government, or is it a partnership?
Okay. Yes.
Thank you. My name is Michael Mackenzie, without a C and T at the end. I think the name in Kenya has been has had some issues. I happen to be one of the few people driving microinsurance in Kenya, and I think we are the first people to get a license. It's called Healthier Kenya. We started operation this year. The first quarter is a recruitment and putting things in place. I must thank the regulator for giving us that chance to drive that business. However, I have one or two issues that I'd like to put on the floor, and one of them is the cost of operation. At the micro level, definitely the shareholders at the end of the day need returns of investment. And I think there is one animal we are calling IFRS 17 in Kenya, which is not a cheap affair. And I'm happy somebody from Burundi, is it Rwanda, who said that 1 year is a very short duration to get to actually even breathe. So within the first 1 year, the cost of operation is very high. And you have too many stakeholders you're managing, your shareholders, the regulator, and it's very easy for some people to get fatigued and say, we are closing that business. So I'm appealing to the regulator also to look at that and see how they can assist or even defer such things like IFRS 17. The other thing is about the premium, minimum premium or minimum sum assured at the micro level. Inflation, I think currently the minimum sum assured is 500,000 Kenyan shillings. Now, when you go to sell, for example, a credit life or even a group life to a small organization, somebody is earning 50,000 or 40,000, you give a multiple of that. It already exceeds the minimum sum assured that we're looking at. Because you're looking at a multiple of 3 times of annual salary, then you're looking at close to $1 million. So probably, again, there are a few adjustments can be done to make sure that the micro is not locked completely from where the business is. Thank you very much.
Perfect. Okay, so before Richard, Sos, quickly, Sos, and then Richard will be there, and then we can ask this panel.
Good morning. So my name is Sostenes. I'm from Ghana. I work with BIMA. Again, on the back of what the lady asked, John Bosco, I'm also particularly interested in insurance and pensions. And the scheme that you have, I also want to know, is the scheme priced, the life insurance, is this priced as a group scheme or is it priced individually? I particularly have been pushing this in my country, but of course we have 2 separate regulators for insurance and pensions, and they've never been able to come together for us to build life on the back of pensions, which is compulsory. So for what you are doing, I just want to understand a bit more as well, how you guys are doing to be able to achieve a 2.4 million penetration at this level. Thank you.
Okay, perfect. Richard?
Okay, thank you very much, Remy. And mine is for Bosco. Thank you very much, Bosco, for the presentation. From FSD Somalia. FSD Somalia is still very young, and from your presentation, Bosco, there are a number of issues you have shared which actually resonate with what we already face in Somalia. To give you a background, of course, we have a challenge of drought, and right now we have animals dying. Of course, plants, we cannot talk about plants, but the question is about, you talked about PPP arrangements, especially for smallholder farmers. You wanted to know more about how that works out, especially given the topology and then the fact that drought is very prominent in Somalia, How are you doing it in Rwanda? And then also, yesterday I talked about the challenge of animal or livestock numbering. It's an issue that came up, and as part of arrangements to have cover, we are required to plan and have a program for livestock numbering across the whole country. So I wanted to know how you're doing it in terms of livestock cover, and then maybe smallholder farmers, the PPP arrangements. Thank you.
All right. Thank you so much, everyone, for the questions, very rich questions. And I'll ask the panelists, they were picking the questions as they were coming. So I'll ask each panelist to respond to the questions that pertain to what they presented. However, I must warn that perhaps the responses might not be comprehensively covered because of time. We are almost at the end of the time. Feel free to interact with the panelists over the break, over the gala dinner. It won't be just food. We'll also be talking inclusive insurance. So yeah, so let's start with Mary. So many questions for you. You can capture the ones that you were able to respond to.
Thanks a lot. This shows that you were very attentive. About the time horizon, the license is renewable. So the micro insurers apply for renewal of license every year. It's not that they are given a license and at the expiry, that is the end. So the micro insurers submit the application, they are given a license which runs up to 31st December, then they submit an application. You ask about the tracking. This would even be a time for the micro insurers to take stock of what is happening, the products we are offering, the pricing, our target audience. Is there anything that we need to change? So for us and as an authority, we are of the opinion that that provision is sufficient for now. As that subsector matures, and we also learn from the authority side, and the market also learns, then we'll move to issuing license, what we would call perpetual. The issue of money laundering and financing of terrorism that has been raised, that is the law, and as we've said, we apply proportionate. But even then, the micro-insurers are expected to conduct a money laundering and financing of terrorism risk assessment with respect to their products, their customers, how they distribute the channels, and the geographical locations of their customers. Once they've done that risk assessment, then they've profiled their customers. If the customer poses a lower ML risk, then they can undertake simplified measures. But if the customer poses a higher risk, then they're required to conduct an enhanced customer due diligence. With respect to the sandboxes, I didn't really get the question clearly. Maybe we can discuss later. Then there was a question on the cost of operation, which I've talked about the issue of IFRS 17. I don't know whether they were asking for deferring. Maybe we can discuss about that. But if you check on our regulations, we are encouraging our companies, not just the micro-insurers, but also the conventional underwriters, to make use of technology. With technology nowadays, we can reduce the cost of our operations. And in Kenya, with the use of the mobile money, we are encouraging, if you check our regulations, we are encouraging the micro-insurers even to do what we call group underwriting. If you approach like the border circles, you don't have to do an underwriting of each and every individual rider. So you can do a group underwriting of that particular circle unless a particular individual poses a higher risk that requires individual underwriting. I think those were the questions that were directed to me. But in case of anything, I'm around the whole day, we can discuss. Thank you.
Yes, thank you. Very interesting questions. I try to address those that were coming to me. About the life cover that is bundled with micro pensions. Probably more details. So it's the government that pays. So as you understand, the intent started with addressing the pension issue or challenge that was there. Now, the life cover that was introduced was an incentive, actually, for people to subscribe to this particular scheme. So government pays the premium, and it's a group scheme. And when they pay, they fully pay, so it's whenever you save, then you have that as a benefit. Something which is critical is that it's a PPP, so they run a competitive process to get an underwriter, and one was selected, and you understand that kind of level of business, so even the prices, I mean, the cost of premium went low, which is very interesting for the end user. But also it uses a digital platform. So the entire pension scheme, informal sector pension scheme, is digital. I mean, being contributions, being any payouts about these, any benefits around the life cover, it's all digital. So that also eases the process for this particular group. So that's what I can say, but happy to discuss more as part of this conversation. The Somalia case, I believe, I mean, climate risks are there across. It's a reality. And I think what we did in Rwanda was we tried weather index-based insurance. And it failed because of microclimates in Rwanda. It's quite a hilly landscape. And when that had failed, we went back to the Ministry of Agriculture and say, well, we can try something else. We can see what can be scaled as well, because that was very important, because you had different pilots here and there. And I recall the agreement was that we really design from scratch. Do a feasibility across the country, look at even localized risks, because it's not just drought and excess rain. There are other localized risks that farmers are facing, and if you don't address them, then trust in the insurance product will be lost. I just give you an example. So eastern part of Rwanda is prone to drought. Northern part is flooding. Now, other geographies, other regions, they have one of the regions which is near national parks. They have an issue with wild animals that come and destroy their crops. So bring drought and flooding cover doesn't address their core needs. So we had really to be sensitive to those localized risks, and that national insurance scheme has all of that. And we agreed on a premium that was affordable. I recall that when we started, livestock was around 4%, and crop insurance was around 8%. But something which was very important, we adopted an approach that we agreed as a market to test, learn, and adapt. Very important. As I talk now, 4% is no longer applying, and the 8% on crops. Why? Because, in fact, the loss ratios are very high. I think one fellow here mentioned that. And there's constant dialogue and conversations between government and private sector to say, well, this is not sustainable with 4%, 8%. So it has been increased a bit. And once again, the motivation is really to look for something that works both for the demand side, but also the supply side, very critical, which is sustainable. I'll just conclude on then we apply technology. I think that's very important. We know, like when we were starting, we knew that there are 1,500,000 cows in Rwanda that needed to be insured. So technology helped that. We place microchips that with Arida, you can know which cow is insured, and you have post-mortem kind of assessment. So you have everything. You know when it moves. So all of that came into play. So as I conclude, I would say that someone talked about financial viability and sustainability of microinsurance business. I just wanted to say that it's possible, it's viable. So this particular microinsurance firm that started in 2018, 3 years down the road, they broke even. So they're a profitable business. So it's workable. You just need to be a bit patient, but collaborate with regulators, collaborate with policymakers for different incentives, but also collaborate with development partners that can actually probably help on some aspects that require heavy investments. Thank you, at the start.
Actually, I don't know what is the question exactly because I understand it as a comment to what I said. If there is any question, I'm ready to. Yeah, but compulsory is not about democracy, actually. Compulsory is about protecting people because sometimes the regulator and has to intervene in the insurance market to protect for some weak people or some fragile people.
So I think his question was more on, are you using the compulsory as a way to get effective demand or demonstration cases? Because his point is that if we move so much into the mandatory side of things, we will not be getting effective demand. We'll, like people already deciding for themselves. So he was basically asking, what's your strategy with the compulsory? Is it a transition to getting somewhere where you can translate to a voluntary uptake?
Yeah, actually, I do agree. The matured market should depend on the voluntary insurance or demand coming from the customer. But sometimes we have to use the compulsory, especially if there is no insurance awareness. So we can use the compulsory insurance to protect some people till creating the needed awareness. This is my point of view, but definitely compulsory is not a solution for everything. We have to be very careful in using a compulsory, but to achieve the inclusive insurance now, the regulator in Egypt intervene and put some compulsory lines of business, but this is not necessarily a long-term strategy, but we need it for the time being. Okay?
Yes, I'll try to be very quick.
Yes.
But I wanted to start by appreciating you guys' participation because you are, I think Africans are the dream audience of every conference organizer. You know, it's not trivial. I think you guys are more in the present moment and paying attention and want to participate. So really thank you for that. I have two answers and one comment to Israel. I think it's Israel, right?
Yes.
Israel, on your first point about low claims ratios, you're absolutely right. I will adjust the slide. I think it must reflect that this exercise looked at different risk segments. And I'll take a wild guess, and I'll say that your product that you mentioned was a micro health insurance product. Was that the case? No? Life, personal accidents? What was it? Crop index, okay. So my point is I think I've never seen a market in which health insurance products don't have soaring claims ratios, and that's an issue. I think there are many misaligned incentives in the industry, and that makes for highest claims ratios. But so the exercise looked at different product segments, and that might not be the case for some of them. The second answer is related to the competing priorities. It's called a roadmap, and the road is very long. So there's definitely competing priorities. There's a competition for resources as well, and who will decide ultimately what will be targeted first, what are the low-hanging fruits, is the market players. So it's up to all of us together to decide what's going to be addressed first. And just to finish, because I had this idea when I was listening to you guys talking about reporting, and I think one thing, and I'll put myself out to be contested, but I think one very good idea for local markets and supervisors specifically to help with collecting inclusive insurance data would be to find ways of for private insurers to flag inclusive insurance products that are not within the category of microinsurance, but still address the same target audience and sort of comply with the concept of inclusive insurance, because I think those are not being captured by the formal frameworks of data reporting. It's only the microinsurance products that fit the definition of the regulation, right? So this is an idea, I'll put it out there, not only for Kenya, but also for the other jurisdictions, for you to take home and discuss, because I think this will also, it will make for more comparable data that's more useful for the local markets, and it will also make the landscape study much better, right? Thank you.
Perfect. So we are right at the very end of the panel, and thank you so much for your insights, for sharing openly. I want to take, we have Kenya, Egypt, and Rwanda as countries here, and I'll take you on spot. Visions for the future. How long will it take for your markets to cover at least 50% of the population? Guesstimate. No, this is unscripted and quoted. So I'll start with Egypt. How long do you think it will take to cover at least 50%?
50%?
Yeah, of the population.
I think this is very, very optimistic, but
don't worry, no one is going to cut you.
Again, with compulsory insurance. I think working to understand people's needs, working to support people, and to develop the needed products, again, not the conventional or traditional products. This is the way to, again, to create, understand the demand and create supply and create product, develop product, can meet the client needs.
Yeah.
Sometimes we'll need support maybe from the government.
Okay.
For some lines of business like
so how many years? 5, 10?
Years?
Okay. All right. Yeah. Bosco?
Well, I'm naturally optimistic. So I think, well, looking at where we are from, 2016 to 2020, those are 4 years. Yeah. Yes. We managed to move from 9% to 17%. Yeah. But as you heard, I mean, that was very intentional. Yeah. Making sure that everyone is doing the right thing. It's quite hard. It requires a lot of convincing, investments, and ensuring that people are accountable, because that's very critical. So I believe if we continue with that, I mean, especially for our case, with the new roadmap this year, and that brings accountability, because there's a sign-off on that clear interventions by each stakeholder. Yeah. I believe by 2050, we should be very above 50%. And I say it because also, I look at the journey of financial inclusion. I mean, we support financial inclusion as a whole. And clearly, 2008, we had 52% of the Rwandan population excluded from the financial sector. And when I say excluded, it's both formal and informal. Because, I mean, something I didn't mention is that we have 17% formally served with inclusive insurance, but 34% they are served informally. They're informal mechanisms, because the risks are real, and everyone wants to cope with any risk that comes their way. So if you combine those, clearly, currently we have 93% of Rwandan population that are financially included. And that's a journey from 2008 to now. So I believe it's possible if everyone does what they are meant to do. Thank you.
Okay, picking from what he has said, if everybody does what they are supposed to do, in 10 years or less than 10 years, we should hit the 50%. That's my vision and dream.
Okay. Yes. Oh, yes. There you go.
I need but to add something about the Egyptian case. Actually, there is a big problem in Egypt that 50% of economy is informal economy. Okay. It doesn't mean illegal, but it's informal. So one of the, I think the name of the game is how to push these people to enter to the formal economy. This will help a lot. And to summarize, affordability of the premium and the trust are very important criteria to achieve the inclusive. Thank you.
Thank you. A round of applause for our panelists again. Thank you so much. I put them on spot, and please don't quote them. I shouldn't see this in some article to say they'll achieve these targets in 50 years. But I think it's promising, and they're optimistic. So thank you so much. So please feel free to interact them over the tea break, over lunch, and over the gallatin as well. With me here, I have a payout in form of a car. So as usual, since this is an insurance conference, you have to bring your ID, bring one of your utility bills, and be able to tell me what is subscribed here. And lastly, your payslip might also help. So please make sure if you're the owner of these kids, do that. I'll invite Nohela now to just tell us our events about the teeth. Thank you very much.
Thank you. Let's appreciate our panelists. Thank you. Asanteni sana, Betro, Saif, and Bosco, and Mary. Asanteni sana. Thank you very much. Let's appreciate them, please. They have done a good job. I was even trying to ask Lemi, please stop there, please stop. But the topic was very good. Of course, I was also enjoying and getting new ideas. We are going for lunch, and I will request Apple Muhatia, breakfast, not lunch. Pravel Singh, just to see us there, we have your message, the two, from Microsoft and AM Communication. We have our tea here and coffee. Please, let's take it at 25 minutes. Thank you. Let's see who, 25 minutes. 20? Oh, yeah. Daka say 20. Thank you for saving time. Kindly, let's move. Karibuni sana. And those who came today, welcome to Nairobi and feel at home. Thank you.
Get inside. We need to start. I see the facilitator is already up. The panelists are all up. We are good to go. Climate risk and agricultural insurance. The big things that people are now talking about matters climate risk. Everybody's talking about, issues happening to the environment, the general climate outlay, how it's affecting business, what we are doing, what we are not doing, what we should be doing, and what we shouldn't be doing. And today, to take us through this session, we have very able speakers. I'm just going to call on Doug, who we've had a chance to listen to before, who is facilitating this session, to come up and introduce his panel. Welcome, Doug.
So welcome back again. And I invite everyone to come inside for this very interesting session. I did ask ChatGPT to facilitate that session, but it didn't agree, so you have to stick with me. But fun aside, this is about agricultural climate risk insurance. It's a topic that affects all of us. Why is agriculture important? How many people in the world do you think depend on agricultural income? Hands up. Volunteers. How many people globally depend on agricultural income? Guess. What do you guess? No, your hands was up? I saw your hand up. It's good. So how many people do you think in the world depend on agricultural income? 100%? Well, we all have to eat. We all have to eat. That's a good point. I should put that in my presentation. According to World Food Programme and others, it's 2.5 billion people globally depend on agricultural income directly. But certainly, as you said, we all have to eat. So food security is one of the key issues. It's part of the development goals as well. And we're going to talk about risk management around climate risk, agriculture, and livestock today. And I'll be very brief in introducing the speakers. So welcome to my speakers. Thank you very much for joining. Welcome Ashok Shah. He's Group CEO of Apollo APA Insurance. Welcome Isaac Magina from African Re. He's Head of Agriculture and Climate Risk. Welcome Sylvia Mwangi. I got it. Thanks. Zebri. She's project lead at Zebri for an index-based livestock insurance, the IBLI program, and the Drive, funded by the World Bank. And welcome Duncan Kalai. He's Regional Advisor, Climate Risk Transfer, East and Central African Region. Now we will have 4 introductory presentations, 4 short presentations, 10 minutes each. And I asked them, because we have very different backgrounds, we have 2 reinsurer, 1 insurer, 1 donor organization. I did give them 3 questions. Share key developments in programs that you are involved in your region in the past 3 to 5 years. But also talk about lessons learned and things you would do differently. What could stakeholders do different? What should be avoided in the future? And also in particular, how do we engage with farmers? We keep on hearing that people do not understand insurance, people do not see the value of insurance, maybe people do not get value products, maybe that's one of the problems. So I invite each speaker to talk about these topics, also about prerequisites, success factors, and I would like to start with Ashok with his presentation, and can we get his slide deck up? The presentation by Ashok, which we just checked. Yeah, thanks. You can come here, you can speak from there, you can walk around.
Yeah. Good morning. I think today, the earlier session obviously had some interesting facts, and that would help with what we are doing, what we are talking about now. But I'll very quickly I'll go through my presentation. I know we have a very short time. Basically, our response to climate risk as insurers, and what I would like to say is that in some cases, APA does the agriculture and livestock insurance on its own, and in another case where we have this consortium, which I'll talk about a little bit later, just now, is that one thing we have to understand that we live in a country where 70% of the Kenyan's rural population is in agriculture and farming, mostly subsistence agriculture. And there is no really any support to them when it comes to irrigation. So it's all rain-fed agriculture, and that's something that we have to look at. We entered into weather index. We started our agriculture insurance as on weather index, and we realized that it's really not sustainable business because nobody understood weather index. And Bosco earlier on mentioned that there were so many microclimates. And from weather index, we moved into area yield cover. And area yield cover works very well because then we base our risk on the area yield and charge the premium on area yield. Several years ago, with support of the World Bank, we formed the Kenya Agriculture Insurance Group, which is 7 insurers that came together. And the reason the 7 of them got together was because individually we did not have the capacity to cover the risks that we had, and at the same time we were not able to obtain reinsurance. But as a group of 7, we actually were able to retain 20% of the risk and get 80% covers from different reinsurers. The first one was Swiss Re. And the benefits of this is that we were able to distribute better, look at a wider number of crops, and get more support. The 3 main areas that we have is that, and these are all really climate risk areas that we have to worry about. The first one is the pastoralist in northern Kenya. And there the cover is not covering the animals, but we are covering the forage on the ground. The second one is basically things like hailstorms and other climatic conditions which affect our crops. And the third one is really the effects of the drought. And this is something that we have found that by giving covers giving covers to different farmers, we have been able to give them better benefit and mitigating the risk from the drought. They get 70% cover for their crops. And that means that even though the drought might have affected them badly, they will continue having an income all the time. Under the Kenya Livestock Program, we basically paid over 700 million shillings in claim, and that's always been a very negative portfolio for the insurance sector that we have. But on the agriculture side, we have been very fortunate in that we've been able to balance the portfolio, and we find that in some areas we will pay large claims, but on the other areas we'll make money. So on the agriculture, the crop side, we actually make money. The basic, you can see the difference when it comes to when we pay out through mobile phones, and we make sure that the claims are paid immediately once the triggers have been reached. So for livestock, we would send money to the pastoralist, and they would be able to buy feed for the animals. And for the crop, they will get the money, and they will have enough money to look after themselves for the season, for the rest of the season, and be able to plant again in the incoming season. So our approach is really to make sure that there is awareness and understanding. And this is one area where we have a big problem. Not all farmers or pastoralists or dairy cattle owners understand insurance. And that's something that we need to look at how we will make them aware of it. Then we have to provide value additions to covers that we provide for the, and right now this is for agriculture, we give bundled covers, credit life cover, and also we give the funeral covers to the aggregators. And through the aggregators, the farmers benefit. Then we have innovations coming in, and these innovations are actually designed to work with the aggregators. And we also have, we make sure that all these products are affordable. And that's something that was discussed yesterday. Affordability is not the cost, but it's the affordability that is important. And then the other thing is reliability, that we are there every season to cover them. So every year we go back to the farmers through the aggregators, and they continue getting the covers. And support, obviously we require the support of the regulator to make sure that our policy and the environment is correct for them when it comes to the regulatory side. The main lessons that we have learned is that large partnerships are bureaucratic and they do not work. We've had lots of problems with the CLIP schemes where we have to rely on the STL to provide us the premiums in time, and sometimes we never get the premiums and the cover has to be cancelled. The demand side is always high, but the thing is that when we work with aggregators, we are able to make sure that we can cover the farmers that the aggregator has brought to the table. Also, the other area that we are looking at is timely funding to the county governments to support the programs that is a challenge. And we, as I think you might have read, that the county government has not received money. So we find that support is not there to the farmers in their areas. And we basically are looking at long-term agreements for 3 to 5 years for PPP. And it's always talked about that we will sign a PPP with you, but the problem is when it comes to signing, it's never signed. So that's the area that we have. But so at the end of the day, we really work as private sector with other private sector players, and we make sure that there is an alignment between us. So in many ways, we decide that to work with the government is difficult, and really, if we can avoid it, we will avoid it. Sorry. This is a payout that we had. The payout, we do it every quarter, every 3 months, 6 months, whenever the payouts have to be made. And we work across the whole country. So we find that, we are able to support the farmers in all this area. And the payouts also make sure that there is awareness of the farmers in that region. The other thing that we have is we basically, with the aggregators, with the county governments, and we make sure that there is awareness. We look at different ways of getting the awareness going. We also have support of organizations like AB Consultants. They have the Resilient Me game, which helps the farmers and the pastoralists and the dairy farmers understand what insurance is all about. So it's something, and I know we have Barbara and Anne here who can tell us more about it. And finally, we have basically success factors for the successful agriculture insurance scheme is the support and the passion and the way we go and work with the farmers. So, and we make sure that we provide value to the clients. And at the end of the day, we have 100% support of the people that we work with, and make sure that we are able to provide the agriculture covers that are required. And up till now, we've always been very timely on payouts, and those payouts mean a lot to the farmers, but also to keep our names and our reputations at the high level. So with that.
Thank you very much. Also, this is not working, okay. Thank you very much, Ashok, also for sticking to the time. I noted down so many things. I could write immediately a summary on success factors from your perspective. Thank you very much for that very clear presentation. And I would like to hand over immediately to my friend on the left, Isaac Magina, and to give your thoughts and experience in agricultural climate risk insurance.
Thank you, Doug. I think I will take this while standing. Good morning and greetings from my country, Nigeria. So Africa is very committed to supporting the climate risk and agricultural insurance landscape in Africa, because we think that there is need of ownership for this projects. For a long time, this has been a space that is dominated by foreign reinsurers, and for you, the role that a foreign reinsurer plays is very critical, because they are at the top of the food chain, and so they bring in a lot of expertise. And so Africa Re has been doing this for quite some time as a regional insurer. But then what has interested us particularly is the fact that agriculture is a very important sector in the economy, because most of the population in Africa really depends on agriculture. And it's a very important ingredient as far as economic development is concerned. So for several years now, we have been working with many insurance companies. We providing reinsurance capacity to over 50 insurance companies across Africa. We also doing a lot of work in the space of livestock, index insurance together with crop insurance, and our approach is open because we think that really the local industry has the necessary technical expertise, but then also there's sufficient capital to really hedge the agricultural sector, as well as from the pressures coming in the advent of climate change. We have sufficient capital really to protect people who stakeholders who are involved in that. And we have been involved in various projects, including providing reinsurance cover to the Kenya Livestock Insurance Program in the past. There are several programs like CP in Ethiopia, and we see a lot of traction in the coming, in Africa. One of the most important things that we see also is that the African market is really emerging as far as this topic is concerned. It's still a greenfield, but for sure we see a lot of traction. And so we cannot talk about agriculture insurance for Kenya alone, or can we talk about for Africa alone? The issue is when we look at a global perspective, you will be surprised that Africa, we're doing very badly. I mean, we're talking about 1% of the global insurance premiums only coming from Africa. But then when you try to break down that figure, you realize that 90% of that 1% is coming from South Africa. But an interesting statistic here is that when you look at the distribution of over 32 billion size of agricultural and climate risk market in the world, we have got equal distribution between Europe, Americas, and APAC, for example. Europe has got around 13% thereabout. But then 10 years ago, this was not the case. Most of that business was coming from Europe and Americas. And it was only when APAC, particularly China and India, came in the space that now we started seeing a lot of traction. But then also, there is this conversation about index insurance versus indemnity products. And when you can look from the statistics, it gives very candid insights to what exactly is. No product is a silver bullet to climate risk or agriculture insurance. Even when you look in Asia, where index insurance has taken a lot of, there's a lot of innovation around that topic, we see less than 50% being index insurance. But then in Africa, we're talking about something less than 20%, actually less than 10%, being index insurance, and that is brought about because South Africa is the main market. But then, as we have been doing this, we have learned very important lessons. One of it has been what is needed? What have we learned since? And one of the things has been that data and infrastructure technology is needed, right? We have issues to do with data, which is a challenge. Technology, I mean, a lot of startups and agri-tech have come into play. And this has been very important, especially in forming partnerships, right? We have issues to do with policy regulation, and I'm happy that really the regulators in Africa are taking this as part of the inclusive insurance, as part of their KPIs in increasing insurance penetration in their respective markets. And so regulators are playing a very crucial role. But then another important thing that we have seen is that we are operating in a market that financial literacy is still very low. But then also, there is a lot of suspicion on agriculture, on insurance in general. I mean, we are seated here. How many people just buy insurance for that, right? It is not like, it's not bread or milk. The issue is there is a lot of learning to be done on the African continent and in our markets as we're learning this new thing. So imagine when you're selling insurance to somebody who has not heard about it. So these are part of the challenges that you see. But then much more importantly, and this is something I think I can attest to it, I think when it comes to ownership and the investments needed, African insurers are doing very badly. As well, of course, it's not just only African insurers. I mean, we have got also the regional insurers who need to to play their rightful role in this game. And I think I'm very confident. I mean, Ashok has done a lot of great work in this area. And this is the kind of leadership that is needed, such that really these projects are not like supply-driven, but rather they are demand-driven from the bottom, so that we can really establish a sustainable agricultural insurance market. But then what investment are we talking about that is needed in this market, right? We have got 4 pillars that we have identified as reinsurers. First of all is product development. We have been talking about this for the last, I think, like 15 years now. A lot of investment has gone into this, but more, I think we have got a lot of improvement. When we started off, there was issues to do with basis risk. Now through technology, remote sensing, this is no longer a big problem, because this is an evolving conversation and there's a lot of investment going on. So in this house, we have got the brains needed to design the product, the technology, the delivery, etc., right? So the product has never been really like an issue, so to speak. There is the issue about underwriting and claims experience, and this really burden goes to the insurers, meaning that I like using this example where you find a first-class owner's degree agriculture graduate having an argument with a professional farmer who has been doing farming activity for the rest of his life. And you have knowledge and the experience, so you have to strike a balance. And so we think that also data is important. There is need of credibility in the programs that we have, right? And then we have the issue about incentive, which touches on what government can do. And issues about financial inclusion. These are issues that really we have to bring on board all the stakeholders and get. But then the last one, or the most important thing that we think we need to address, is the issue of institutional setup, right? We have the brains, the money is there, there's a lot of premium subsidies, there are a lot of donor money running out, but then why are we not achieving what we want as agriculture insurers in Africa? I will tell you, for example, in Kenya, I think the agriculture premium have gone down. Another classic example is about Nigeria, where I have got a better insight, is that we started off like 5 years ago. In the 3rd year, the total market premium and all the potential we talk about Nigeria, it was like 15 million. But then this has gone down to something less than $5 million. The reason was that the insurance companies were not prepared to really run with agricultural insurance. But then this is the question that we have to always confront. I mean, it's the big elephant in the room. If we are not, we keep talking about government support and whoever is supposed to. But then if we don't get the institutional setup right, we are bound to fail. And the key message for me is there is role for everyone to play. And then also there is need for ownership. I'm coming from a background where I've worked with a primary insurance company, Old Mutual, but then also I've worked with a global insurer, Swiss Re, and now with a regional insurer, Africa Re. All of those three partners have got a role to play. For example, Ashok knows where the farmers are. He knows where the pastoralists are. When it comes to delivery, nobody else can purport to know how to get to that space, right? You come to a regional insurer where Zebri Africa Re plays, you have a lot of public goodwill, especially from government engagement, right? And this is not something like, for example, this is a strength that Swiss Re or Munich Re does not have, right? But then come in research and development. Because of the size of their balance sheet, Munich Re or Swiss Re have the upper hand because then they bring in the strength that all of us don't have. And for sure, agricultural insurance in Kenya has grown, not even in Kenya alone, in Africa, because for the first 10 years, Swiss Re invested a lot. Now, when Swiss Re pulled out because of strategic reasons, not necessarily scaling, they scaled down in terms of the activities for East Africa and Sub-Saharan Africa, we saw a decline in the business, right? Meaning that really the ownership question was not there. And that's why the challenge then came to Africa Re, and we said, fine, we have to work very hard. But then I want to give you an example also what we're doing in Nigeria in terms of lessons learned. And the reason is we have a lot of knowledge which has been accumulated in this market, right? Starting from, I think we have the right team here, right? But then also we understand that for sure, we don't need to reinvent the wheel. And CLIB, for example, the index-based livestock insurance provided very valuable lessons. And so in northern Nigeria, which has a conflict between pastoralists and herders and farmers, we have thought about using the engine of IBLI basically to provide a product that really helps solve the conflict, the social, economic conflicts of a country. And so we have a feasibility going on that is really meant to provide an insurance solution. As you know, really insurance will play a very critical role going forward in alleviating, of course, promoting the welfare of humanity. And Africa Re, we have said, yes, this is a challenge we want to take on because we have the expertise, we have the capital, and we have got the goodwill from our partners. We know our insurers and our partners better than anybody can do that. And so we're hoping that this really comes along, everybody else comes along, be it researchers, we are aligned in what we're talking. So thank you for that short conversation. Thank you, Doug.
Thank you so much. Yes. There were a lot of hard learnings in this presentation, and I'm very happy to discuss this later. I think we have to be honest about the situation, and we have to really pull out the reason why the coverage is where it is. So thank you very much for that very honest presentation. And I'd like to hand over the mic to Sylvia on the left from Zebri to share your thoughts about lessons learned, things that go right, things that don't go as right.
Thank you, Doug. Yes, the mic does work. As my presentation comes up, quickly reintroducing myself, I am Sylvia Mwangi from Zebri here in Nairobi, and I'm going to be covering about pastoralist insurance with one large-scale program that is currently ongoing, but looking even wider to how can we scale that, what lessons are we learning, and what is the role of the different stakeholders. He did begin by a quick introduction of Africa Re, so let me do justice to quickly introducing Zebri, which is a commercial reinsurers whose biggest mandate is to retain business in the continent, as well as ensuring that we're increasing penetration in the different countries that we are working in the commercial region, which we have aggressively done and grown over the last years. We have been in operation for about 30 years. We'll be celebrating 30 years, and we hope we can celebrate that with a number of you in the room. But we really are working a lot on enhancing the insurance industry locally in our COMESA countries. And now, more and more, as I get to talk about pastoralist insurance, this is truly how do we increase penetration in a very significant sector in the continent. It works. Thank you. This is to contextualize where the risk of livestock insurance sits. And I mean, we all know how you would categorize risk between the frequency and the intensity or severity of the risk. And one of the major risks that attaches for pastoralists is drought. And drought is low in frequency, but when it occurs, it does occur in a very great intensity. I am not sure when this slide was done, and as we continue to progress to understand it, whether that is the case, because if you are from sub-Saharan Africa, we're coming out of one of the worst droughts in 40 years. So the frequency does not seem to have been low, at least for the last 4 years, but the severity has been intense, especially in the Horn of Africa, where we have lost cattle, sheep, goats, camels, generally all animals in all sorts of values in the millions. Different approaches can be used and have been used, from government putting aside budget to support its citizens when there's a drought, which is not necessarily the most efficient. We know we have a shrinking fiscal budget from the various governments, so that has not always worked appropriately. So what else has been done? And East Africa has had what is called index-based livestock insurance that has been scaled to a large extent in Kenya and in Ethiopia previously through a Kenya Livestock Insurance Program project and through a side project and other pockets of projects that have been done commercially in East Africa. But now we are getting into a much more large-scale project through an ex-ante approach where you insure the risk of drought, and when the risk attaches, a claims is paid out for pastoralists to access food and water to sustain the animals. So this is a livestock sustenance product and not when the livestock have died. So let's get to understand that a little bit, and we'll backflip a little bit to CLIP itself, which is a large-scale Kenya livestock insurance project, which made significant achievements over the last 10 years that it was operating in Kenya. Over 600,000 pastoralists were able to benefit from this program. It saved 1.2 billion. Claims were paid out by the insurance company. This is money that was put out back into the market for pastoralists to be able to help the livestock sustain. And the value of livestock that was actually protected by the 1.2 billion. Look at that multiplier. 1.2 multiplied all the way to 23 billion. So that huge multiplier effect of what is the value of livestock that was able to be protected by the program. And many, many other multiplier effects in terms of how was the market of pastoralists enhanced, how were they able to generally stabilize the production system in an economy that is truly marginalized or not seen as having a potential to be a bankable potential. But as CLIP was implemented, lots of learnings came out of it. And this is where we start the conversation today. What are those learnings that we have learned in terms of how do you do a large-scale project supported by governments and the insurance industry to support the vulnerable community? A product enhancement to achieve the very elusive two-tie. How do you achieve affordability? How do you ensure sustainability? How do you keep the pastoralists happy? How do you keep the risk takers happy? So this continues to have been a challenge where the loss ratios were significant. And then how do you think about enhancing that as you get to scale this program outside Kenya and outside livestock insurance itself to other value chains? The distribution channels to reach vulnerable pastoralists, because it is a micro product, it is not going to generally follow the standard channels of an agent that goes to the field to talk to someone, and I have 15 minutes with you and close a deal. How can we effectively distribute what is essentially a micro product to a very vulnerable community? And some of the learnings was that how do you leverage digital? How do you leverage non-typical distribution channel in the insurance industry? From this morning and from both Ashok and Isaac, the role of capacity building, the role of education, a lot of funding has been poured in ensuring that premiums are paid for or on behalf of or to help them support in the payment of the premiums, but how much of that has been poured to ensure that they understand what insurance is, appreciate it, and the proof of the pudding is, do they come back next year for a renewal? And that continuously capacity building is needed. And as CLIP was progressing, there was lots of learning of how can you bring in the right stakeholders to build a capacity for the industry, but also for the beneficiaries. Timeliness of claim payout, I'll not underpin that. There was a government involved in ensuring that claims were paid in good time. Government systems are not always efficient. Claims were sometimes paid 9 months later. For a drought that occurred in December, you're getting your claim sometime in July or September the following year. It totally beats the point. The entire herd is dead. How do you ensure an efficient payment of claims? Insurance is an enabler, and this is critical. All of us sitting in the room are insurance industry players, but the reality is that insurance is an enabler, and it should be used to help us build markets that support the health industry, markets that support the agricultural industry, the housing industry, and it is not an end in itself. And truly making the linkages in the market for where insurance is playing is critical, and we should not stop at just ensuring that claims are paid and people have money. What do they do with that money? The market system needs to be connected if insurance is going to make a difference in the penetration. The last one is a sustainability, which requires the crowding in of different pockets of funding, both from the private sector, the public sector, that's the government, and also from the different development partners. There's a lot of catalytic funding needed in inclusive insurance in the continent, and there's no shortage of catalytic funding from development partners. If you look, there's a lot of catalytic funding, and it should be used appropriately to build systems and institutions to ensure that this does run. I'm already in 2 minutes. Okay. I will then probably just took 2 or 3 other slides. So that was the lessons that we learned. And coming out of CLIP, there is a program called DRIVE. And I am the project coordinator of DRIVE. DRIVE is de-risking, inclusion, and value enhancement for pastoral communities in the Horn of Africa. And what this program is seeking to do is to protect pastoralists in the 4 countries you see there, Djibouti, Ethiopia, Kenya, and Somalia, initially funded by the World Bank to a tune of about $360.5 million. We're working very closely with the governments, and we want to achieve huge impact figures. But the biggest one, obviously 1.6 million is interesting, but the biggest one for me is more than $500 million catalyzed by the insurance industries from the premiums we're able to write and that the reinsurance are able to put in the market to protect. The multiplier for that is going to be more than 10x, as we saw for CLIP. So we are looking at massive amount of pastoralists being able to protect their livestock. Because of time, I will quickly run through this because it's important to understand why do we think that this drive is going to be different. It's going to be a game changer from other projects that have come and gone over the last 10, 15 years in this space of inclusive insurance. 3 main ones, and the first one is, for the first time, we're seeing the private sector playing a very significant role in developing the products, in ensuring distribution channels are correct, in aggregating the premiums, in making sure the claims payout are made in good time. So we do have a strong private sector hand working on behalf of the participating governments, on behalf of the government of Somalia. I remember there's a question from FSD Somalia, how do we do this? We're actually working very strongly with FGS to ensure that we are reaching the number of pastoralists there. Aggregation of risk is probably the most significant piece here. An aggregation of risks in that regional implementation helps us balance out the loss ratio. Case in point, in Kenya, we have made a payout of about 200 million Kenya shillings, that's about $1.7 million, just a couple of months ago. And that's a massive loss ratio, and it's not good. But when I look at a market like Somalia, where we equally did sell, but the drought was not as significant. So that helps balance out that risk, and it's a game of numbers also in insurance. How do you spread that risk so that you are having sustainability, but truly helping the pastoralists when they need it? We'll flip through that. That was details about the product. We are doing this with lots and lots of collaborations with a lot of you in the room, in the 4 countries that we are currently operating: insurance companies, banks, technical partners, retro partners, and partners that we call aggregators, which is our distribution channel, which is being done in a different, innovative way, and I'm happy to speak to that in more length. This is just the numbers to show massive appetite in the market. In just 6 months, we have been able to reach close to 170,000 pastoralists in the 3 countries. You can see the payouts that have already been paid, and we continue to see that this needs to be established in a way that continues to balance out the sustainability and affordability that we are continuously wanting to do correctly, but the impact is already being held, and the pastoralists are starting to appreciate what can be done. That's where I will stop, and the key stakeholders that are necessary to ensure a strong collaboration, and these are the stakeholders in the room, and how do these stakeholders contribute to the expansion and the growth and the sustainability of such programs in the different countries. The regulators in the 3 countries have been massively supportive in terms of how do we think about a product that we cannot lean to the Americas or the Europes to learn from. This is a unique product for the continent, and we continue building our history. How do we get distribution channels that are not necessarily going to align to a policy that we do not have? We've had Ethiopia, we've had Somalia, and we had the Kenyan regulator come to the table with us, and we've been innovative about the product and how we do the distribution channels. The product itself has had a lot of technical expertise. We did hear about basis risk, paying when you're not meant to pay, or not paying when you're meant to pay. What kind of innovative technology is needed to ensure that we have the right product that is going to, it's a parametric insurance product that we do have, and how do we continuously enhance that? And we've worked with global and local technical partners. The government is critical here because for such a community to reach them, government has the strongest currency and they have the strongest legitimacy. So we have leaned in very strongly for government to bring legitimacy to the project and continue bringing it to ensure that we are truly reaching the most vulnerable population. We continuously believe that aggregation to ensure the market that has broken is corrected is the key, because reaching one pastoralist is not going to be enough. You have to be able to do it at an aggregated level, and truly right now aggregation is still very weak, and this is the biggest question, is how do we think about breaking and ensuring that there is strong aggregation. Lastly, we do want to go beyond Horn of Africa. We do want to go beyond livestock. We do want to be able to aggregate the risk and different value chains from the learnings that we get from Drive, so that the elusive inclusive insurance is indeed achieved. Thank you.
Thank you so much. And with no further ado, I would like to hand over the microphone to Duncan from the World Food Programme to share your thoughts. And then I'm looking forward to the discussions. I made so many notes. I think we could discuss this here for the rest of the day. We don't have the time for that. So Duncan, the floor is yours.
Yeah, thank you so much. It works. My name is Duncan Halai from the World Food Program. And as you might know, WFP is a UN agency that deals with food security. And so someone might ask, what is the interest of a UN agency in insurance? We term ourselves as a client, but also as an enabler of insurance for those who are considered to be, marginalized. And the main issue why we are in agricultural insurance is because climate is a key driver of food insecurity. And so if you are in charge of distributing food globally from places where there's surplus to where there's deficit, then you might be interested in seeing that the production of that food is not affected by so many other factors, including climate. And that's why WFP took the initiative to invest in crop agriculture insurance, mainly focusing on crop under a flagship project called Rural Resilience Initiative, which is R4. And then we've also in this region been supporting livestock insurance. The satellite index insurance in Ethiopia is one of the projects which is a similar or a replica of CLIP in Kenya. WFP was one of the early institutions to take up the CLIP idea from Kenya and tried it in the Somali region of Ethiopia. But before then, I think I really associate with what has been said here, because I used to work with the International Livestock Research Institute here in Nairobi, and that's where CLIP and all the index-based livestock insurance initiatives began from. And back then, when it was still a research idea, research for development idea, it was quite interesting to see how things were taking shape on a pilot phase. When you're trying to insure 500 households for proof of concept, it becomes quite easy and straightforward, yeah? But the wheels start coming off when you are trying to go to scale. So, sorry, just the first slide, I'll not dwell on it so much. So, those initiatives were there about 10 years ago. It was all on pilot phase. And then when things started going to scale, I think most of the challenges were experienced by the initiatives that were now trying to take both the crop and livestock insurance initiatives to scale. So governments in this region, the private sector, donors have really invested in this. I think most of these initiatives have been either driven from the government side or from the private sector side or donor side. But all in all, it's a public-private initiative that has been driving these processes within this particular region. So the key developments we've seen over time, and I think this has also been mentioned, there have been a lot of, an increased access to index insurance products in the region by populations who ordinarily would not have accessed it. Because as you might know, historically, people just look at insurance as something that is meant for the elite in society, maybe, if I can put it that way. But to imagine that insurance will now then trickle down to the smallholder farmers or pastoralists in northern Kenya in places that are arid and poorly infrastructured, then it took the initiatives like these to deliver insurance to people who ordinarily wouldn't have had it. There's also been better understanding and buy-in by governments and policymakers of index insurance. You've seen a lot of transformations within the region in regards to policy. I think Kenya is one of the leading countries in terms of flexibility to allow for such innovative products to thrive. And I think even back then when the International Livestock Research Institute was trying to do the IBLI research, IRA was still there and allowed some of these products to be taken to the market by the insurance companies on a pilot scale without necessarily asking too many questions on what is going to be done and where is this headed. There's also been innovation in the distribution, also delivery of insurance, payout distribution, disbursement, training and awareness creation. Most of these processes are being digitized. And this is to help, as you go to scale, to maintain the standards, but also be able to deliver quality and prompt services to the beneficiaries or to the clients wherever you are serving them. The last development we've seen, and it's not these are not the only ones. I think the list can be longer than this. But the technology has also improved. The use of satellite data as one of the options, and also just being able to have near real-time monitoring of crop or even any other indicators that are being used, and also ground truthing. I think there are initiatives around crowdsourcing of information, picture-based index insurance in the region that is trying to be used as alternatives to ground truthing. So the challenges that are, more and more the challenges that are facing the industry in terms of data, like Isaac said, are being resolved. And so we're all looking forward to being able to utilize these in the best way possible. Sorry. So how do we engage farmers? And I just took the example of farmers, but I think when I speak, it's applicable to both farmers and pastoralists. But we all know that the number of decisions that you have to make as a farmer within a season, the micro decisions you have to make, to decide when to plant, when to plow, when to plant, when to weed, and even how you manage your harvest after you've harvested. These are the things that determine how much yield you'll get at the end of the season. So you can imagine where then insurance would rank in that whole list of decisions that I have to make as a farmer. And it will most likely, be driven by my perception of risk. And in circumstances where I feel like the exposure is not too much this particular season, then I will tend to avoid taking insurance, okay? Because I'm like, okay, I can save a few dollars here and buy better seeds than, paying for the premium, yet I know that the season is good. So there's always that competition between the farmers or the pastoralist perception of risk versus, their decision to purchase insurance. And apart from that, there's also the issue about willingness and ability to pay for insurance. And these two go together. There are places where you will find that people are able to pay for insurance, but they're not willing to pay for it. And there could be many reasons. One of them is awareness. I think Sylvia has also touched on this, that there has to be a continuous awareness creation, because while we make the assumption that the people we are dealing with might not have liquidity, they do, but their priorities are different. Insurance doesn't rank on top of the list of those priorities. But there's also the ability to pay where people are constrained. For example, now Kenya has had, I think, the fourth cycle or fifth cycle of drought since last year, and this season is when it has rained. And you expect to sell livestock insurance to those pastoralists who are losing at least 600 goats probably at one go. So challenge would be that they might not have the money to pay for that premium, even if they were convinced that they need to buy it. So this then comes, I think the idea of willingness to pay versus ability to pay depends on the socioeconomic setting of the people you are targeting. So we have to carefully assess what product goes to which target population, okay? If you come up with a product that might not necessarily suit the needs of your target, then they will not invest in it. There are situations where you structure the product in a way, the product is suitable, yes, but the way it has been packaged is not acceptable to the target population. So the whole discussion around subsidies and the use of smart subsidies and ensuring that there's a balance between sustainability of the demand versus provision of subsidies, there are so much lessons that we've gotten from the Kenya Livestock Insurance Program. There are lessons that we had from the index-based livestock pilot program that was done by ILRI. Back then, I think within the audience, we do have, and I think even APA was leading in the sales and distribution of index-based livestock insurance. There was a 60%, I think, or 40% premium subsidy that was being provided by, back then, DFID. So the insurance companies would go and sell at a lower premium price, and then they would claim the subsidy from the donor. When that donor funding ran out and we are trying to sell the product at the full price at the market, then people just shunned the product because the idea was that we will try to motivate and expose them to the product by providing the subsidy. But we also didn't think that along with that subsidy, maybe we might have designed smart ways of delivering the subsidy so that when it's withdrawn, then demand can continue to be there. And that was one of the key learning points that we had back then with regards to IBLI. Before I go to delivering value, 2 minutes, okay. So in terms of delivering value, just because of time, one of the important things we might have to bear in mind is the proper management of processes. So whether it is registration, premium collection, documentation, more and more as you scale up, you realize, registering people on physical forms and then transferring that to an Excel sheet and then sending it to the insurance, it might not work. You'll end up mixing up the figures and the phone numbers and the IDs, and it becomes difficult to deliver the payouts eventually. I think CLIP had this challenge. Every other season, there was about 20 or 30% of the clients that couldn't be paid because the numbers are not matching, or the names are not matching the ID numbers. There's also the issue of data and analytics. KYC, very important. Tracking repeat clients is something that could also be of value. Then just knowing that no single risk management tool can fit the entire, everybody. So risk layering and bundling of products has been talked about here. These are some of the things that deliver or support the delivery of value to the clients. Then timeliness, payouts, I think, is a challenge, and it's been a challenge that we faced a lot, speaking from the client side as WFP. You probably have, I think we've been insuring about 12,000 households with APA in Kenya alone. And I think, of course, there's a lot of processes involved. We've been trying to see how to improve. We are trying to look at smart contracts, and so how then do we deliver timely payouts to those who are eligible for the payouts. To mention about the critical success factors that we have gathered over the years, one is product quality. I think we should, and even yesterday when the regulator was here, they said, let's not complicate things. We should have simple, transparent, and accurate products. As much as possible, try to lower the basis risk. In terms of implementation, effective implementation encompasses a lot of partners and a lot of processes. So, in terms of managing the partnerships, you should know who takes which role, so that when there is responsibility to be executed, then the role is not thrown around to the regulator or to the insurer. Someone has not delivered payouts 1 year later, what do you do about it? Policy regulation, I think I'll not even mention that. Value for money for the clients, be it a macro insurance scheme for governments or a micro insurance scheme for smallholders, you have to think about what value are you delivering. And then finally, we must think about harmonized response to climate shocks, because there are a lot of other interventions that are being done, both by the governments and the private sector and also the donor institutions. Again, to go back to the example of CLIP, in terms of targeting, CLIP was looking for households that were considered to be slightly, above the ultra poor, or those households that receive cash transfers from government. Because the idea is to support those who are able to invest back into their productive assets, so that over time, they are able to now start paying for their own premium. But if you target households that are considered to be ultra poor, they will still consider that as a cash transfer, and probably they might not have the money to pay for premiums later on. But what do you do about the overlaps? It means that those who are delivering insurance have to speak to those who are doing the Hunger Safety Net program. If it's Ethiopia, we do have the PSNP program, and decide exactly on what is the best targeting approach for sustainability. Okay, sorry. The final one is the key lessons. I still believe, and I think Ashok has talked about government involvement. It's really challenging to work with governments, but governments are big enablers and they are big movers. So with the right leadership, I think direct investment by governments, and the example of Drive is a key one, is very important for index insurance initiatives. Secondly, the private sectors, I think the roles and responsibility needs to be very clearly defined, also has been mentioned. And premium subsidies are vital for scaling, but we need proper management of those subsidies. Otherwise, blanket subsidies to people might have a negative effect that might not be easy to correct in the long term. Impact assessment, just being able to look back and see what is it that we are doing and what impact does it have, where are the areas we could improve. The other point is about demand. Informed demand is better than uninformed demand. And what I mean by informed demand is people should be enrolled to insurance, or rather people should take up insurance when they know what it is and when they have understood what it is. Because when they are given insurance, especially by a third party, and they really don't understand what it is, then the expectation that they will adopt to it is quite far-fetched. And finally, it's always good to start with the end in mind. Most of the initiatives that are supported by governments or private sector or donor entities begin with no clear end in mind. And so after 5 years of the project, we really don't know who is in charge. Is it the government that is going to take responsibility? Is it the private sector? Or is it the donor community or the development partners? So I'll stop with that, and thank you so much for the time.
Thank you so much, Duncan, for this very clear summary at the end, lessons learned and recommendations as well. And I would like to take this up because I would like to hear from the others again. If you look at I put it like in 3 phases. You develop a program, you start running it, and then you have to make sure that it actually keeps on running and it doesn't disappear after 1 or 2 years. So from your perspective, Sylvia, what would be success factors to really come to a long-term program that does not disappear after the first pilot phase? Everyone is awake now?
Yeah, I hope nobody was awake because you were asleep because now you're awake. Pertinent question, always asked. What is going to make this different, moving away from a project lens to something that is going to be more sustainable? And truly, there is not going to be a silver bullet, right? So you have to start layering elements that begin the journey there. Strong involvement of the private sector, I was saying, becomes important because it will begin to ensure that these could, in fact, start a path of operating independently. How much of government products in banking, how much of banking products are subsidized? We have lots of microloans that, are given to the very poor of the poor, and banks continue to sustain it because they found a model to reach and they pay back, right? So as we think of what is the right microinsurance product to reach the market, who is in the private sector working very closely with governments to think about the right product that eventually, after the subsidies phase, eventually after opening the gateway into the vulnerable community, the private sector can eventually fly and do there. And from an insurance perspective, finding retro partners or the real risk takers who have found a way of maintaining a sustainable loss ratio, a sustainable scale of customers begins to that path of sustainability. And then I also spoke about aggregation. Aggregation is going to be very key in microinsurance. Aggregating the risk in affordable housing, aggregating the risk is medical insurance, aggregating the risk in pastoralist insurance or crop insurance. It's not going to work with 1,000, 2,000 farmers in one location in northern Kenya. How do we actually get to Eastern and Southern Africa like this conference has brought together?
Thank you. So aggregation, we need big numbers. We need to get the right partners, the right products, and we need to get the insurers involved. Now, Asak, you said the industry is not prepared. That's what I wrote down. You said something like this. Just a question here, hands up, who works for an insurance company in this room? Hands up. Who of you is involved in agricultural insurance from the industry? Okay, there are some that are prepared, but I would like to hear more about. the unpreparedness of the industry. And you said also it's lacking ownership. And schemes disappear because no one's owning it, no one's really working for that. And then, Ashok, I give the microphone to you, but let's start with Isaac.
I've got an alternative view.
Let's start with Isaac first. And then.
Perfect. Thank you. I mean, it sounds very controversial, but let's face the elephant in the room, right? We have been offering agricultural insurance and climate risk programs in this market for over 10 years now, right? The Kenyan agricultural landscape has more or less gone to a level where we are like plummeted. I mean, there is growth, but it's not like meaningful growth, right? I also mentioned about Nigeria, where we have got 3 years ago, we had a market size of 15 million. Now we are talking about a market of $5 million in terms of premium, right? But then the issue about ownership for me is about what is important is stakeholder alignment for this to work and engaging each other with mutual respect, meaning that all of us have got a role to play. Reinsurers, insurers have a role to play, right? The donors in this particular case also have a role to play. I mean, Duncan has just highlighted what WFP is doing. Government has provided premium subsidies in cases which are not being, it's not, we expected that subsidies will be a magical bullet to change this, but it's not happening, right? We have narratives like, look, index insurance is the only solution to agricultural insurance problems in Africa, right? But from the picture we saw, I mean, yes, it is an emerging class of business, but also we cannot underrate indemnity products, right? Which lends themselves in the conversation about inclusive insurance, right? We have had situations where you can offer indemnity programs to smallholder farmers, right? And so we should not shy away. But then, for the benefit of doubt, I think what has worked in companies that have come out strongly, especially primary insurance company, and allow me, Ashok, to speak this, executive ownership at the top. Once you have the executives buying into these concepts, then the program received a lot of blessings. We don't have underwriters being asked questions, for example, why are you traveling to Narok, for example, to bring a premium of 100,000 only when in the actuals. And so this topic has to have a kind of strategic outlook. And also, this will direct the kind of investment that is needed into this, right? Without mentioning names, I think I have worked in an institution where it thrived, it was the market leader because the CEO actually bought into it. When climate risk stopped being a strategic conversation, then the business unit died completely. Now the same thing applies to what I said about Swiss Re, right? In a few years ago, for a long time, agriculture insurance was viewed like this thing that makes losses and can be used as a filler of other classes of business. But this is a product that can stand alone on its own when it's properly underwriting. We have this narrative that it's a loss-making class of business, right? But then also, the people who are talking about this don't want to invest in the technical skills because, I mean, it's a risk, and risk without proper understanding, it will definitely, you will suffer loss. So thank you.
Ashok, please, how can we create ownership, and how can we get more people like you that are prepared, that really want it?
No, my view, I said I've got an alternative view, whether the industry is prepared or not prepared. The main thing is for the industry is that, we talked about passion. And Isaac just mentioned that, there must be somebody at the top who is willing to support this exercise. Because what it is, all of us as insurers, all of us who belong to insurance companies here, wherever we are, we go for the easy peaks. If we can insure motor, we'll keep on insuring that motor vehicle all the time because we know why, we don't have to worry about production or getting premiums in. And the problem that we have anywhere in the world, most of the places, is that we are taking insurance to the people who are already insured. In Kenya, all of us only operate in major towns. And even our agents and distributors are only in major towns. They're not interested in the rural population. And rural population in Kenya, or even in East Africa, all of us have the same area, same dynamics, is that the rural population does not understand insurance. They are not aware of the insurance. And I think I said yesterday, some of them who are aware of the insurance think it's only for the rich, not for the poor. Now, for agriculture insurance, it's even a different kettle of fish, because what happens is agriculture and livestock, you have to work with another partner. Duncan talked about WFP. I think AP has been working with WFP for many years now. And what we have is we work with KESF, we worked with so many other partners who come in here, IFAD, we work with all of them. But the thing is that what we don't understand as insurers, and in some ways Isaac is correct in saying that, is we don't understand our client. Our ultimate client is the farmer. But we don't, as insurers, we don't have the capacity to go and understand that client. Now, if we understand that client, what would happen is that we can then make sure that we can give better covers, other things. But when we work with aggregators now, what we have found is that we create a stronger partnership with the aggregator. We don't only give covers for the crop or the livestock, but what we now do is the aggregator might have given them loans for inputs, so we provide cover for that input. We then give them credit life covers, and we give them funeral covers. The thing that we have now started giving to a lot of the farmers is the hospital cash covers. Is that when they are ill and they're in hospital, we provide the income to them so that they basically can benefit, the family can be looked after. So I think what it is that we have actually a dedicated group of insurers who are willing to plunge into the deep end and work and provide covers to the farmers, even knowing that it's a long haul.
Duncan, question to you. I mean, correct me if I'm wrong. When I look at climate risk insurance and if I look at donor activities, to me, in the past years, it feels like there's a lot of funding available. There's resilience programs, there is whatever. So whatever has the label of climate risk, it gets funding, right? At the same time, I hear we're making slight progress, maybe, but we could do a lot more. But at the same time, I see all these annual reports of the donors and everything looks nice. So should we ask donors to write a report in 10 years and then really look back at what they achieved? How can donors be more effective? What do you think? And maybe then also to the other panelists, what would you expect from the donors to be more effective, to leave more long-term impact?
Yeah, thank you so much. I think like you're saying, climate adaptation funding and insurance is classified under climate adaptation. It's available, it's there. And I think for the last, tracking back 10 years, there's been a lot of investment. We are also almost reaching what we call donor fatigue for insurance initiatives. But I think over the last 10 years, the support was towards things that were not yet very clear. It was just at the nascent stages, and people were trying out things. Some burnt their fingers, some got out with valuable lessons. But looking forward to the next 10 years, I think there are very, very good solutions that donors can look at. There are very good examples that could be scaled up. There are very good lessons that could now be carried into the future. I think also we need to manage donor expectations, and I think this problem comes back to us. We tend to be very optimistic in the way we kind of present some of the solutions that we are putting forward. And unless they are tried and tested, sometimes it becomes difficult because you beat more than you could chew. And I think looking at the context where you are working and how much you can deliver within a short period of time is a very important issue. In the region currently, not all the countries are on the same level. When you talk about insurance, talk about regulation, market, infrastructure, there's a lot of things that are not level playing field. So even just taking Kenya as an example, where we've come from and where we are going, it has taken a lot of efforts to level out the playing field. So there's still need for donor investment, but it has to be very intentional on what is going to be achieved. And secondly, as the people who are implementing insurance, let's not mix up our responsibilities. I feel like sometimes we are hopeful that insurance companies, like Ashok is saying, there are those that are willing to plunge to the deep end, but not all are willing to plunge to the deep end. It's not your core business following farmers wherever they are and pastoralists wherever they are. The operational cost of doing that is too high. So why don't we then start investing in intermediary institutions that have it written in their DNA to interact with farmers and bring that business to the insurance companies rather than getting, for example, WFP would get money to support an insurance company to go talk to farmers. And 3-4 years down the line, we've not hit our target. Because none of us is interacting with the farmers on a daily basis, but there are institutions that are talking to those farmers every day. And we could still work with them and teach them the business, and they could bring that business to us.
Thank you. Very brief answer, please.
Two things. Allow me to. Nobody? Yeah, I can speak now. Two things on where we would push the donors to really move the needle in inclusive insurance from a perspective of having understood this. One is moving beyond the premiums, as Duncan and our panelists have said. We need to move beyond the premiums and understand it is an ecosystem that needs much more than premiums to ensure there's an appreciation of insurance and that uptake. The capacity building and supporting insurance companies to actually reach the pastoralist is very critical. If you have donor funding and say 90% of that has got to premiums, great. When you move away, there's nothing that is going to be left. The 10% is not going to be able to help us sustain the pastoralist independently, or the farmers, or that hospital patient independently. Second, and very, I guess very critical in the space that we're operating in, to deploy a product that works appropriately requires a lot of innovation and technical support. Parametric insurance is operating from machinery from the US. It's operating from data from NASA. What stops us from building an African-led data information system? Why are we not finding more innovation funding in the space such that we are able to do it independently as Africa? I mean, there's a lot of nuance that needs to happen. The climate and the way the reflections are going to be read in North America is not the same way that they are going to be read in northern Somalia, right? So a targeted effort to ensure that innovation is properly suited to come up with insurance technology that suits the continent is critical for that sustainability, because if we continue leaning on them, we will indeed continue leaning on in them.
Yeah, my personal view sometimes is I feel that the big programs that we talk about, they're not based in the regions where they are supposed to work. So the ownership by all levels. And at the same time, sometimes, just give you one example, there was one scheme presented at our last international conference on inclusive insurance, and when we wrote the report, I was going back to them and say, share some figures on the clients and so on. And they said, oh, we currently don't have clients. So then I thought, should donors create a culture of failure as well? Fail fast, start all over again. Don't stick to the same program because someone just signed it off for 5 years. Then say, it's not going to work. We have to start again. So I think sometimes maybe that is an approach we should think about. So we only have a few more minutes left, and I would like to take some questions from the audience. Maybe we can collect 3 questions in the beginning. I would appreciate questions and not co-presentations, so that we get enough feedback from the panelists. And also, if you could share your name and who you address this question to. There's one hand up there. There is the lady here in the back, and there is the gentleman very much in the back right. So let's, and then let me in the second round. So start with Sarab in the back, or who's the microphone? Okay, please go ahead.
Hi everyone, I'm Liza Maru from Britam. I think for me, my question to all the experts is, with the continuous drought cycles, they've been very frequent recently, how would you encourage insurers to get in a sustainable way?
So that was...
Well, I don't think I'm an expert, but the thing is that our aim is to make, inclusive insurance to us, it seems to be the way of getting to that goal, to reach for the stars, because we don't insure 90% or 93%, 97% of the population. They stay out in the rural areas. Now, if we can make a success, earlier on somebody asked, how many years will it take you to get to insure 50% of the population? If we, to me, if we can insure in the next 5 years 10 million Kenyans, it will be a great achievement and it will be a great sustainability. But what we require is that we require people on the ground to believe in inclusive insurance and be able to market it for the sustainability and for the benefit of the people that we are insuring.
Thank you, Ashok. I think I will add something about drought, and I'll speak from our insurer's perspective, and it really lends itself. A drought is an important element in making the lives of humanity better, and especially in the context of climate change, the conversation is then how can insurance contribute to helping the general population really overcome or develop the needed resilience. And so it lends itself in the business model of our insurer, because the science, it is about pooling resources together, establishing the required risk pools that really will help cushion various communities distributed across the world. Because also, we look at drought as part of the larger conversation around climate risk, because in some areas it will be floods, hurricanes, etc. And so our business thinking is not all these risks attached at the same location at the same date. So we can spread this across the world using our basic reinsurance model, but then also are using our retro arrangement for those whose capital is not sufficient to offer the needed protection.
Let me give a tactical answer. I'm sorry. Because this has been in pain in trying to bring more and more partners to sign up to IBLI, which is historically been a very loss-making product. One, it has got to be long-term. You have got to have a long-term plan to this. Coming in for a year or 2 years has not been sustainable, and it needs to be strategically driven so that you are in the game for longer. But from an operational and fully understanding, once you get the data, because this is a process that is going to be driven by variables that are changeable, right? You have probably the loss ratio that you're not willing to go about. So what feeds into that loss ratio as you think about the product? It is the pricing, it is the risk triggers. How often do you pay? At what threshold are you willing to make a payment? Come around the table and let's fully understand what is driving this unsustainable loss ratio of 250, 300% for the last 2-3 years. Can the pricing change? Maybe not. Can subsidies change? Let's think about it. Can we increase the threshold so that we are not paying so often? Maybe that is a solution. It is not a static loss-making product. There are variables that needs to be pulled together, but an understanding of how that works needs to be relayed to all the stakeholders.
Thank you. Really engaging, Saurabh from Britam. My question is about the role of agri-insurtechs like Pula and Acre and AgriTask. So what we have observed on the continent, most of the agri-insurance value chain is actually owned by these insurtechs. So they own the customers, they own the product design, they own the crop cutting experiments. If I compare it to experience in Asia and countries like India and Bangladesh, it's mostly driven by the insurance companies. So maybe the question is to Isaac and Ashok, like, why do you see that's different on the continent? And what role do you see these agri-insurtechs playing in the evolution of this market?
So the role of the insurtechs, who wants to answer that question?
Good. I think, as I said, every partner has a role to play, and InsurTech play a very critical role in the advancement of especially parametric insurance in Africa. One thing that we should realize that this was a new area of innovation, right? And so the local insurance companies did not have the capability or the requisite technical skills to really, for example, design. It has taken a lot of investment from our partners really to upskill. I mean, when you look at 10 years ago, no insurance company really knew what a parametric product looked like. But then over time, we're seeing ownership, steps towards ownership, where now the local underwriters are learning the skills and getting on board. However, one thing that the insurtechs have brought on board is a different kind of thinking, whereby microinsurance or climate insurance or inclusive insurance, we cannot look it in the same lens with the conventional insurance. So for example, Democrats, for example, in the class they operate in, or say Acre Africa, the point is that they bring in a different risk perspectives that really are needed to advance these new lines of business. And then it lends to the question about for how long should these insurtechs be in the game? Because also we were supporting an insurance program, right? So we need to implement these programs with the clear mind that this is an insurance program that is needed to be, that needs regulation, right? And so, whereas I appreciate the roles that is being played by InsurTech, I will still go back to my my main point. There is need for ownership for the local underwriters, so that when we are sitting in the table, when they are sitting with these InsurTechs, we are talking about an equal position and negotiating from point of mutual respect, because the insurers have a lot of knowledge that also insurtechs don't have. For example, you understand better the client than what an insurtech is. And also the insurtechs, insurers have a lot of better insurance capability than what an insurtech can ever offer. And so these are the questions that really makes us to think that we can make, we are making progress, but really when we have executive ownership, then this conversation about investing, for example, what role can our enhancing our underwriting team such that it is not just looking at the conventional product, but also develop capabilities in structuring of index or parametric products. And this is requires investment and a lot of stakeholder engagement from everybody. Ashok, you wanted to say something?
Short.
Very short one. Penetration is 3%. There is a whole 97%. When we start arguing what is the role of Pula or Acre and what is the role of insurance company, I think that is a moot discussion. There is a lot of opportunity in where insurtechs can play. There's a lot of opportunity for where insurers can play. Going into to reach in agricultural space, it is almost very short-sighted to think that because we have an ACRE or we have an Apula or we have any other insurance company, you're actually eating into a market share for insurance company. That is 100% incorrect, and there is fully a lot of space for the different players to expand in our market currently situated.
I think the role of is quite interesting. There's a role for all stakeholders, but sometimes to me it feels that not everyone knows what exactly the role is. But that would be a different panel.
Thank you very much. Good afternoon, delegates. I have about 2 questions. I think one of my questions has already been answered. Quite brief. We had 3 very critical presentations, quite informative. My first question would be, have we done any impact assessments on these projects? What are the outcomes and how have they informed our future programming? And in terms of also scalability, and I think the part of sustainability has been answered. And then I think I saw for the Kenyan...
One question, please. We're running out of time,
okay.
sorry.
Thank you.
Okay. So who would like to take the question on the impact assessment?
Yeah, thanks so much. I think lots of impact assessments have been done to understand the role and the contribution of insurance in the region, especially if we talk about the Horn of Africa region. And those lessons have been incorporated over the years, but not everything that has been learned has been incorporated. So it depends with the interest of whoever is doing the impact assessment. Is it doing from a research perspective to understand the socio-economic impact on whoever is receiving insurance, or the impact on agriculture if it's being done by the government of Kenya, Ministry of Agriculture, or is it being done by the private sector? So based on your interests, there's a lot that is out there that has been done in terms of impact assessment. If you talk about CLIP, for example, if you talk about the agricultural programs from the early days, I think Kenya is one of the countries where there's a lot to look at. But the weakness that probably lies therein is in the uptake of these recommendations that come out of these impact assessments. Sometimes what has been the failures of one program might be ignored by the next program because their approach, they do believe, is different from the others. But I think more and more the pitfalls are the same. There's no shortcut to making things work. There's no shortcut to getting the numbers. We think we might have to just stick to the long method and what has been tried to and seen to be working, rather than trying to reinvent the wheel. So my thoughts on that is that there's a lot out there, but we need to be keen to take in those lessons.
Good. I will take, I think when you're talking about sustainability impact assessment, insurance industry is struggling to, not struggling, we're trying to take our rightful position as far as the conversation around SDG is concerned. And I will point to an impact study that was done by the University of Mannheim on behalf of GIZ, which was conducted on CLIP and the issue. One of the key lessons that came out after implementation in northern Kenya, there was this bringing up of associated value chains like fodder development, and which meant that now this was part of the reason why pastoralists now or business people had the confidence to set up supply chains for fodder was because there was direct money coming from insurance payout. And for us, that is a very important contribution of insurance to the conversation about tackling climate change and making society more resilient.
Sorry, for donor-funded programs, obviously the assessment is very important. But then there are the non-donor-funded programs where aggregators are there. And to us as insurers, how does it work? The thing that works for us as insurers is that are we basically delivering the covers to the people who need it the most through the aggregator? and the aggregator is able to go back to the same farmers year in, year out, and increasing the number of farmers. As soon as that happens to us, we know that sustainability is increasing, take-up is increasing, and we basically believe that now our programs are becoming more sustainable and profitable.
Thank you. So by just looking at the numbers, you get an idea if it's working or not. So one last question from Lemmy, and then we really need to wrap this up. Unfortunately, I could go on for the next 2 hours.
Okay, just a last question. Thanks again for all the great insights. My question is simple. We know that agriculture insurance depends on scale. And when we look at the potential for each market, it's wide. And Ashok was just talking, we can get to even 10 million farmers in Kenya. And it's the same. So I want to pose the question, and very similar with Dick's question on how can donor money be used more effectively. How can market players be supported more effectively? I think we've learned too much, and we know the role of the government. We've seen what the government has done in markets like India, and even in some of the markets in Africa. So how can we change so that when we have 5 years from now, we have a conference, we can talk about 10 million, 5 million, farmers covered. So just a very one or two insights from you in terms of what's your wish list on how you can change the landscape.
Thank you, Lemmy. I would like to add on to this the wrap-up of this session. So one is how can market players be more effective, but I would like to hear from all of you 1, 2 recommendations of players that are wanting to enter the climate risk agricultural livestock market, and maybe 1 or 2, not maybe, 1 or 2 not to do's. What did you learn that you would want to avoid in the future? So how can market players be more effective? What are the to-dos, the recommendations, 1 or 2, and what should be avoided? And all of you got 2 minutes. And I'd like to start with Sylvia on the left.
Series of questions. What not to do? I will not preempt because I know everybody will have a set of recommendations. What not to do is have a short-term approach to what is being done and fully strategically owning agricultural insurance as an institution to ensure that it does get executed and executed brutally. It is tough. It will require a bit of business unusual, and you truly have got to appreciate if insurance companies and reinsurance companies are to hold true that we are truly serving the elite. I mean, books have motor insurance. How much of our population own motor? If we are not penetrating in industries that are serving the people, so what is the role of the industry? A realization of that, and that ties a lot to what needs to change, a realization of the role of the insurance industry in the economy is critical. And if you are to serve the people, you have to be operating in the sectors that are going to be sectors that affect the majority. There's agriculture, there's education, there's health. How much of that insurance is not led by commercial players in the industry, but actually led by the people consuming education, the people consuming agriculture? So let the executive own that strategy and brutally push it, appreciating that there will be years where there's loss making, there will be years where implementation is done correctly.
Yeah, thank you so much. I think I'll start with the positives and talk about what has worked well. I think continuous research and innovation in this space is required. The discussion about insurance being a purely private sector, market-driven product and leaving out research, I think if we look at ourselves 10 years later, we would have missed a lot of things if we don't consider research and innovation in this space. The second to-do thing is I still believe that public-private partnerships are important. No single entity can drive this process on their own. It is not an ordinary product when you talk about agricultural insurance, and it is not any single entity's responsibility to ensure that farmers or pastoralists are insured, whether it is from government side, from donor side, private sector. It's everyone's responsibility. So it's a baby that needs to be raised by the society. Two things that the not to do's, and I think there's a lot more to think about, but one of the main ones would to not invest in infrastructure for the delivery of insurance and awareness creation to the targets. Whoever it is that you want or you are targeting with the insurance product, I think awareness creation it's a missing link. You might have a very good product, but how you communicate that particular product to the target population will make or break that particular solution. Secondly, another thing that I'm beginning to be convinced as a not to do is to try and sell insurance as a standalone product. Just going to the market with agricultural insurance or crop insurance or livestock insurance as a single product that you're pushing for. I think if you look around from within the ecosystem, there's a lot more that you could bundle insurance and create more value for it, rather than trying to go for it as a single strand kind of thing. So I think the examples from Zambia, the FISIP program, there are a lot of lessons, success stories, and a few other things that we can drop. But I think the whole idea is to try and package it along with other products and services within that ecosystem. Thank you.
No, yeah, Duncan has mentioned a couple of things that was very in my mind, but I'll just elaborate on them. In all our countries, the government does a lot of support. They provide fertilizers at subsidized rates. They do other things. So what happens is what Duncan mentioned about Zambia is very important to learn from it. We have to have a strong, we have never been able to tie up with the government of PPP. There has always been a talk about PPP. When we went into livestock, we were told that there will be a PPP done. It was never done. So what it is that what we need to do is that if we have a public-private partnership, and whenever there's, when we pay out, when we do it for KSF, what we do is we give an electronic voucher. The electronic voucher is given out, and they use the electronic voucher at the agrovet to get supplies for the next season. So there's something like that has to be elaborate and done quite well. The thing about what Duncan said, and I've been saying it at several forums, is lack of awareness of insurance by the people who need it the most. So we must also get an awareness program going. And the awareness program doesn't, has to be multi-tiered and multi-supported. So with donors, with the regulators, with the government, with the insurance players and aggregators, we can create an awareness program. The awareness program can then be going to the client and saying, this is what insurance will do. But the other thing is, we are going away from the single product insurance as a single product. What we are trying to do now is build a value chain, that we are part of a value chain. So we tie up with the seed supplier, we tie up with the input supplier, and we also then see how we can help with the marketing of the product. So if we can do that, then we change the, we don't become just insurer, but we become part of the value chain and we become the facilitator.
Good. For me, I think I will conclude by saying there is a business case for climate and agricultural insurance for insurers. And insurers have to take the leadership because they are better placed to provide leadership, the leadership needed on this topic, because we have got superior risk about knowledge, stakeholder management, and we have got capabilities that, say, the public sector or the humanitarian or the donor space has. So, because we're talking about this as being a risk program, and so that is why then we as insurance can contribute based on our stronger understanding and capabilities in this area. So it is our space, we have to play there. A second is there is role for everyone. And we have to appreciate each other, that really no individual partner is going to make this work on their own right. And so we have to have a platform of engagement that is bound on the understanding and the honesty of each other's contribution to the value chain. And so this will really improve our contribution towards providing protection to those who need it more. I'm talking about everybody, in this case, researchers, insurers, reinsurers, everybody, to name a few, government, regulators, etc. We have to address these issues through proper institutional setup.
Thank you very much, and join me in giving the panelists a nice round of applause. Thank you very much for being here, for all your hard preparations, and for the interesting discussions. So we took notes of all of this. We're going to write a short summary. So hopefully this is really taken home by all stakeholders in this room. Think about it. The market is there. There's a business to be made. We have the right solutions in our hand. We need a long-term approach. If we fail fast, start all over again. But don't let your clients down. They need risk management. Climate change is happening. The situation is not getting better. They need risk management, and you're the ones that can offer it. It plays a key role to make people's life better, and you have to take up the challenge. Thank you very much, and then I'll hand over the microphone to the master of the ceremony.
Let's appreciate them, please. Thank you, Sylvia, Karai, Magina, Heshok, Dak, you've done a good job. You made us proud. Please, let's appreciate them again. Ashok has been here every day and is going to be there tomorrow. We value you so much. Thank you. With that, we are late. We are now late with some minutes, but we are taking 1 hour, exactly 1 hour for lunch, and it will just be served first for those who can walk. You can use the stairs. Those who can take the lift, you can do it. Thank you, and let's see you after 1 hour, exactly after 1 hour. Karibuni sana. Thank you. You can maybe...
At 6 p.m. today, we are having a dinner hosted by Britam. And they have told us that if we thought we saw anything yesterday, we haven't seen a thing. So reserve your energies. Make sure that you have on proper shoes, because they've just told me that there's some shaking of a leg that has to be done. So make sure that you're in the right shape and form for that particular event. 6 p.m., we will be meeting on the room, the farthest on this same floor, right next door actually. That's where we are having the dinner. So you just get from here and you jump into the next room. 6 p.m. it is, dinner courtesy of Britam. We say all the time about health, and when we run our campaign messages at IRA, we talk about your health being your wealth and the importance of taking care of health. Some years ago, we had the big talk in this country about the Big Four agenda, and one of them was matters of universal health care, UHC. Right now, we are seeing county governments, every governor, trying to propagate matters of health to their voters or constituents. And so today we just want to have a hard talk on health insurance. What are the hits and what are the misses? And facilitating us for this session is one Elias Omondi, Senior Manager, Risk and Regulations, FSD Africa. I'll kindly ask Elias to come to the stage, where he'll invite his panelists. Elias is somebody we will call on these sides of the streets my boy, you know, my personal person. I would call him my person then, to make you know that he's not just my usual person, my personal person, you know. We would say when you're on the road, he's driving in the inner lane. He's that inner. Elias worked at IRA, allow me to say it. And we brag about he's our export. He's our export to the world, from IRA to the world. And we are very proud of what he's doing out there. So we taught him how to put on a suit. We taught him how to fasten his tie. And we are proud of how he's doing. Doesn't he look good? Come.
Thank you very much, Noella. It's a pleasure to be here this afternoon. I know we'll be fighting two things, sleep, but let me tell you, the team that I have this afternoon is great. They're going to give us quite insightful issues around health, and you know we are going to have a very good discussion. So I want us to make it easy, the way we are going to do this discussion this afternoon. But maybe just to mention, we know that healthcare investment in Africa is critical for sustainable growth, but also just to ensure that investments that we are making within the continent do reflect the social value, but also the economic value that this particular continent really deserves. Healthcare is an important component, and we've seen how governments are looking at issues around healthcare. We've seen public and private organizations taking healthcare to be a critical issue that really needs to be discussed. The challenge is that we haven't really addressed healthcare to that particular spectrum that it needs to be addressed. And this afternoon, I have a panel that we are going to discuss critical components that we need to take into this particular space, but also to kind of come up with some insights of what the continent really needs to do. I know all of us, in one or the other, might be having a card in your pocket, basically to show that you are protected in case there is a certain risk, particularly on healthcare. And this is not something that is enjoyed by very many Africans. In terms of statistics, it say that around 43% of our GDP is one or the other impacted through healthcare issues. And that really means that if we can have what we call a healthy continent in Africa, then we can, in one or the other, have a lot of resources that can be redirected in other facets that we really need to push these particular factors. So we are going to have what we call a TED-style talk. I did have a very interesting conversation with my panelists, and one of the questions that we've been asking ourselves, how can we make it more enjoyable this afternoon? So let me tell you, it will not be a boring session. It will be one of the best sessions of this conference. And also, you know, I hope that some of you manage to take some fruits to maybe increase your chances of not really attracting any form of ill health or some funny diseases that currently people talk about. So without further ado, I want to call upon my first panelist. I will call him Sauce. Yeah, it's called Sauce. So just call him Sauce for now. He's going to tell us what he does, and then we can take it over. So Sauce, come to the stage and let's have this conversation.
Yep. Good afternoon. Yeah, Sauce does it any day. The name is Sosthenes. It's a Greek name in the Bible somewhere, and everybody struggles with it, so Sauce does it for me all the time. You call me Sauce, I'm fine. I'm from Ghana. I work with Bima. Bima is a microinsurance and a telemedicine company. So, the slides, please. About 13 years ago, that's in 2010, two Swiss people, a lady and a gentleman, visited Ghana. Apparently, they came for a wedding, and then at that wedding, a conversation started. And on the back of that conversation, they came back to Ghana again later, and then Bima was formed. When Bima was formed, they were trying to get a name that represents insurance. Unfortunately, in Ghana, we couldn't find a word in any of our local languages that would just mean insurance. So we came all the way to East Africa to borrow Bima, which means insurance. And that's how Bima was formed. Now, the whole idea then was to say, how can the less privileged afford insurance or have access to insurance? Mobile phone technology had penetrated a lot at the time, and almost every Ghanaian had 2, 3, or 4 phones. So people were holding mobile phones in their hands, but of what value was that mobile phone? If the guy could afford credit every single day, they buy credit and they make calls, but the same guy would not be able to buy insurance or pay for or have a bank account. So they struck a partnership with Airtel at the time, now Airtel Tigo, and then, I don't know this for a fact, but I suspect for the first time in the world, people could pay for insurance using their mobile phone credit. So you buy your credit, and that credit eventually will be deducted to pay for your premiums, and then you are covered for a period. So that was done, and the penetration had really gone in there so much. Then M-Pesa happened. M-Pesa had happened in Kenya and was taking all the waves. Mobile money started in Ghana as well, and then had actually penetrated very much as well. Now, how do we transition from the airtime model, and then we move to what we call the DTC? What then that did was to allow all mobile networks to be able to participate in the insurance. This time around, you buy the insurance using your mobile money. We struck a deal with the telco partners, and on the first of every month, your premium is deducted from your mobile money account, and it pays for your premium. We had that, we call it DTC, direct-to-customer model. We ran that for some time. Obviously, customer experience, customer feedback, people wanted value and more value. How could we do this? What would we do to be able to get people hooked onto the product that they had? Of course, retention was an issue. So you have 100,000 people today. 3 months down the line, it comes to 80,000. 6 months, it comes to 50,000, and all of that. Now, how can we give them more value? Then we brought in the idea of telemedicine. Of course, universal health coverage, SDG 3, has been an issue all along at that time. What can we do to be able to make this a reality? So we introduced telemedicine, a professionally set up telemedicine service, and bundle it on the back of our insurance products so that our less privileged people or the people we've left behind who are the informal sector and then the lower society could also have access to telemedicine, access to medical services, as all of you here would have. That is how come we introduced telemedicine to our service. And then that has evolved again until today, where we've now been able to decouple the telemedicine service as a standalone, and we're able to do other partnerships with health insurance providers, with telecom companies, and many other services to be able to provide a service to our people. Obviously, as it stands today, Ghana has a population of 33.8 million people, but mobile phone penetration is 130%. Meanwhile, universal health coverage still remains a challenge. How can we use this to bridge access to health services so that every Ghanaian will be able to do this? Mobile phone technology, health insurance, teleconsultation, I believe, would give us that background to be able to get there. I'm not sure every Kenyan would be able, especially those outside of Nairobi, I'm not sure all of them will be able to have access to the same quality doctor service that in Nairobi would have. But then if that same doctor sits in a room here and is able to consult over the phone, the guy in the remotest part of Kenya would have that same equal access to that doctor, that consultant, that you would go and see, or you would call as well on the phone, so that we are democratizing access to health for all people in our country today. And I believe that's the way for us to go in Africa. Next slide, please. Do you have the clicker? Okay, let's see. Okay. Now, how do we provide our telemedicine service currently? One thing we are very clear about that we say all the time is we are not saying our telemedicine is here to replace traditional hospitals. We are complementary to the traditional hospitals. So we are saying that our complementarity to health service providers or hospitals is what will give us the access to enable us towards universal health coverage for Ghana and probably for Africa, even as other countries adopt it as well. How do we provide our service? Subscription-based service. Again, we say the informal sector or those at the lower base may not be able to afford if you were to price insurance as we price as an annual policy. So we do it on a monthly basis, and then you buy a subscription. We thought about doing it as pay as you go, but we believe that that will make it so expensive, so that was not the option we chose. So a subscription, you pay the equivalent of, for telemedicine, $1 a month, and then you have access to the doctor 24/7, anytime, anywhere you are, whatsoever time. We do have our Family Plus cover. You buy one insurance policy, and it's able to cover you, your spouse, up to 6 children, your parents, and your parent-in-laws. So one policy is able to provide access to 12 people who are able to have access to a doctor just because one of them has bought an insurance policy, and on the back of that policy have access to telemedicine. Our customer journey is very easy and very convenient. What we do is to say, we want to give you value. What people always say is, if I buy the insurance and do not fall sick, it means that all the money I'm paying is gone waste. No. The essence of the service is to give you health tidbits on a weekly basis. So on every week, when you buy the policy, you have 4 options to choose from, which are thematic. So health and wellness, family care, women care, and then something on another one. When you choose that thematic area, you receive text messages on that thematic area on a weekly basis. On monthly basis, we have what we call the IVR that goes out to these people. So you sit down, your phone rings, and then a machine speaks to you and says, hello, good morning. This is Bima calling you. This morning, we are talking to you about mental health. And then it goes on and on and on for the next 2 minutes, and then the call hangs up, or with the option of you to press 1 for it to be repeated, press 2 to be connected to a doctor. So it allows you access, and this IVR comes in your local language. At the point of onboarding, you choose a local language which we input in our system. So when we are sending out IVRs to you, the IVR comes to you in the particular local language that you've chosen, and then the education of the health education that comes to you comes in that language. So the point is, even if you are not well or you are not sick and you don't have to use the service, you still benefit from the value we bring to you, even as we give you this IVR and health tidbits. Proactive health and wellness engagement. Obviously, it's one thing we don't do very well in Africa. Until we are sick and bedridden, we don't think of going to the hospital. What we do here is to say, we will reach out to you anyway. So whether you like it or not, the fact that you are subscribed to our service, within the month, you will definitely receive a call from a doctor that calls you to say, how are you doing today? Is everything okay? We are checking up on you. And if you do have any concerns, you then bring them up, and the doctor helps you with it. 24 hours access to the consultation. Again, we are saying, unlike hospital where you can only go to the doctor when you are not well, this time around, by virtue of your access to the doctor, you can call the doctor yourself for any reason. If you want to find out about COVID, you call the doctor and speak to the doctor about what is COVID, or anything you want to know about. If you were to go to a traditional hospital, you may have to go and take a card and then pay for consultation to see a doctor to ask a question. So you're not going to do that. But this time around, you have access to be able to call the doctor at any time to do that. For you and I who is here, I'm sure you will definitely have a classmate or an auntie, a cousin who is a doctor, so you feel like that's what everybody else does. But those in the villages may not have that, and this service provides them direct access to a doctor as well. The other thing that we are proud of is to say, when you are not well and you go to the hospital, you go to the consulting room, the doctor is your God at that point in time. Whatever the doctor says is the gospel truth. If that doctor is killing you, you have no idea. If the medicine he's giving you is not the right medicine, you have no idea. You go home and go and die. This time around, for every consultation you are having, your calls are recorded, and there's a senior medical doctor with a quality team that sit down on a daily basis, and they are plugging in live onto the call, listening to the consultation, so that we can train the doctors further as on. Even aside the live listening in, all calls are recorded, and at least 30% of calls randomly are reviewed by the quality control team on a daily basis, so that if a particular doctor does something wrong or gives a wrong prescription, we would have picked it by the senior medical officer, and then that would have been corrected and reviewed. So again, it gives you more quality than you would have had if you went to the hospital, at least for this safety measure that it brings to you. CS quality review. Aside the consultations, aside the CMO and his team reviewing your consultation, our customer experience team will reach out to you, the patient or the customer, to say, yesterday you called the Bima Doctor Service. I'm calling you today just to find out, how do you see the service? Do you have any concerns? Did the doctor treat you right? Do you have any issues? And all those calls as well are recorded, and every issue that you bring up will come. If the need arises for us to then go back and review the consultation to be able to address whatever issue there is, we will do that. Mind you, I would not have access to those consultations or those videos, those recordings. I am not a medical doctor. Only the medical doctor team will be able to do that. But of course, the CS team recording I can know, because that's a conversation between the customer and our quality experience team. The other thing that we do here, which you will not have in a traditional hospital, is this. In traditional hospitals, especially in Ghana, for every review, every consultation you have, the doctor will normally tell you, come back for review after 2 weeks. Most of us would never go back. Why? The reason is simple. When you go back, you're going to end up paying for the cost of consultation again, probably just to say, well, there's nothing wrong, so you go home. Meanwhile, you'll now be charged for the cost of consultation again. For us in the Bima Doctor Service, automatically, on the 3rd day post-consultation, the system is configured such that we would definitely have to reach out to you to say, you called us 3 days ago, you were not well, we prescribed medication for you, we are calling to review to see how you are doing. Is the medication working well for you? Do you have any further concerns? Are there anything else you want us to address? That will be done for you. What we then do is to have offline partnerships especially with labs and with medicine or pharmacies. So we do have M-Pharma, Multi-Pharmacy, who are a medicine delivery company. So if you are prescribed medication, you sit at home wherever you are, and then the Multi-Pharmacy would bring your medication to you. And for every medication that you are buying from the Bima Doctor Service, you have a 10% discount on that medication, and it will be submitted to you at your location. If you are within the central parts of Accra, for free, and if you were outside of Accra, at a very small fee, you pay for consultation. Or if you then decide to go and buy your medicine by yourself, unfortunately then you go to a pharmacy, but you will not have access to the discount that we provide. If you were to go to a lab, we have partnerships with over 150 labs, and most of these labs will have multiple shops as well. So you have access to those labs. You go to the lab. If you were to go and do a urine RE or whatever, by the time you get to the lab, the request would have gotten to the lab ahead of you already. So you go to the lab, and then your lab is done. The results go back to the Bima Doctor Service. Bima doctor will call you and said, you had called earlier in the morning, I asked you to go for a lab, you went for the lab result is ready, I have it now, I can now confirm to you that your diagnosis is malaria and that I'm going to give you medication for malaria. That medication comes to you and then the multi-pharmacy will submit that medication to you wherever you are. We have what we call the medication support. Our premiums are built in where you have a certain amount of money that goes into a wallet for you. The reason being simple, the day you fall sick may not be the day that you have money on you, so that for every premium that you pay, a certain amount of money goes into a wallet for you, and the day you call the Bima doctor service, and then you are either referred to a lab or to a hospital or to a pharmacy, the money you had accumulated in your wallet will then come onto your mobile money, and then you use that money to go and buy your medicine or to pay for your lab services. Other thing we do, I don't know for Kenya, in Ghana, your medical records are like the doctor's personal property. You struggle to have access to that record. The doctor will never show it to you, and then you never know what actually was diagnosed. In this case, with the Bima app, every consultation you have had, every diagnosis, every medicine prescribed to you is on your app. So if I ask any of us, when was the last time you went to hospital and what diagnosis you were diagnosed with, I am not sure you would know that because you wouldn't keep that in mind. But with the Bima doctor service, all of that is on your app. You can refer to it as far back to 10 years if you want to. The other thing it does is the continuity of care. If you are to be referred now to a hospital now, whatever consultation you've had all over the period is on your phone. You go tell the doctor, this has been my medical history, and the continuity of care then continues from there. Then we say undifferentiated access to specialist care. Like I was saying earlier, specialists are not all over the place, especially in our part of the world. So you find all of them within Accra, or in this case, Nairobi. But what about those in the villages? They would also have equal access by being able to call the doctor, pediatrician, gynecologist, psychiatric, or any other specialist you want to speak to. You have equal access to that. Then we have what we call the condition management, chronic condition management. So if you have these chronic conditions, you wouldn't have to go to the hospital every day or every 2 weeks. We would follow up with you because we know your condition already. We'll follow up with you and remind you to take your medicine, remind you to come for review, take your BP and all of that, give us the results, and then we'll be advising you even as you move on. And then bundled to this again is our hospital cash benefit. Cosmo, I know you say it is not a benefit for Africa. I kind of disagree with that. In our part of the world, our hospital beds are not that bad, so people have access to hospital beds, and they're able to go to the hospital. And when they do, then we then pay you money for the lost revenue you would have lost for you not being able to be at work for that particular day, all bundled into this product. Typically, this is what our retail product portfolio is that we put out in the market. What have we done just the last quarter of last year? We have evolved this service now, decoupled the telemedicine as a service, and then now we are selling it to health insurance providers, to life insurance providers, bundling it into their life insurance products as retail products, working with health insurance providers to develop retail products such that now with the help of the telemedicine service, you are able to develop more affordable health insurance retail products. Hitherto, people struggle, health insurance companies struggle to be able to put out retail health insurance products because of all the various issues. What our teleconsultation does is to take away at least the expensive cost of consultation, such that most consultations, typically malaria, in my country, the cost of malaria treatment will be roughly $30, 300 Ghana cedis. Half of that cost is the cost of consultation, $15 to the doctor. Your cost of medicine, and mostly malaria. African doctors know malaria so well, you don't need to do any test for malaria. So you go to the hospital for malaria, they look at the symptoms and say you have malaria, and they prescribe medicine. You may actually not even do a test. So then the cost of the medicine is another $15. Now, if we partner with you from the telemedicine service, what it does to the health insurance provider is that the guy calls over the phone and reviews over the phone. He pays for $1, and then he ends up paying for the cost of the medicine. So even if the person is insured by the insurance company then reduces their cost of claims by a half just because they are taking away the cost of consultation from that thing, and they are able to go out there and service the people a lot more better. So these are the advantages we are bringing. What have we done recently? Acacia belongs to the Enterprise Group. Enterprise is the biggest insurance company in Ghana currently. They control over 30% of market share. And then this Acacia company, just this year, we signed a contract with them, and I've gone live with them, where they've partnered with us. And all their corporate customers, who are your typical bankers, your insurance companies, the mining companies, the gold refining companies, or who have access to their healthcare, now has an added advantage of the Bima Doctor service, where they are able to call us at any time to have a review done. What this is doing to Acacia is for us to help them reduce their cost of claims. And we are keenly monitoring this KPI to see over the years how we can demonstrate to everybody that indeed, by virtue of our telemedicine service, we are able to reduce the cost of premiums, and by so doing, help them to be able to reduce their cost of claims, so that by so doing, they are able to reduce their premiums and then get more people to be able to have access to healthcare, health insurance, and all of that. A video to show. Sound.
On your health insurance.
Oh. Please go back to my slides. Let me just play the video and then we are off.
Thank you for joining the Bima Doctor service. We shall explore how you get access to experienced and qualified doctors ready to support you on your health-related issues. On your health insurance policy, you and your family now have 24/7 unlimited access to call experienced and qualified doctors on any of your health-related issues. With your Bima Doctor, you are supported on your health-related issues with no distractions. Your Bima Doctor service also helps you avoid the risk of traveling far, seeking permission from your workplace or employer, and the time to spend long periods in hospital queues. If you need a Bima Doctor, you can call 0800 100 200 so you are given the required directions and guidelines for your health. Bima, protecting the future of every family.
This is what the onboarding video for Acacia was just recently when we launched and brought them on board. Just note also that the line to the Bima Doctor service is still free, so you do not pay anything. You can call the doctor 100 times a day if you want to do, and you can do as many times within the week if you want to do as well. Now, we have evolved this product now and selling directly to corporates. So to say, even as it is not health insurance as it is currently, you are still able to buy this for your SMEs who may not be able to afford full-scale health insurance, but then it gives them all the benefits I spoke about in the previous slide. And we have SMEs buying onto this policy as well now. We have life insurance companies who are using this to differentiate their offering in the market. So you have, Evans, next time you are going to sell your group life, you want to swing a scheme. Wisdom did that recently in Ghana, where he came to us to buy the telemedicine and then use that to give to the bank. What he did was then to be able to swing the business from insurer A onto insurer B, because he's able to use this as a benefit added and was able to swing business. These are the kind of things we are doing in Ghana, and this, I believe, should be the way forward for Africa towards universal health coverage. Thank you.
Right. Thank you very much, Sos. That's a very interesting component, how you could be able to bring mobile tech, health insurance, and telemedicine. You know, if you look at the insurance penetration in Africa, we talk about close to less than 3%, so around 2.78%. Now, interestingly, we are talking about telemedicine. And if you've managed to walk around the cities in our city in Nairobi, you'll realize that there are some certain posters written Daktari Kutoka Tanga that is highly penetrative. And you'll realize that these are the people that have kind of learned the art of telemedicine, because you start by calling them, and then they'll be able to kind of give you certain solutions around the issues that you are facing. In terms of domestic package insurance, they are good into that. So insurance companies need to recognize that you have a really key competitor that have started using some of the things that Sos was talking about. Now I want to go to my next panelist. I'll call him Shama or Shorab. Director Emerging Markets from Britam. You can join me on stage and let's listen what he has in store for us. Thank you.
Hi, everyone. Good afternoon. I think more than health, this is a panel of difficult names here. After SOS, it's Saurabh Sharma, but as Elias said, you can just call me Sharma. I think that is the easier one. That's what everyone calls me at Britam as well. But if you have time to chat to me after the session, I'll teach you how to say the first name as well. I've learned that way in Britam itself. I'll talk about health, and I think I'll take you away from telemedicine to health microinsurance. Going back to the conversation this afternoon about agri, like how agriculture and crop insurance is very unsustainable and insurers have been running away from it. And I think that has been the case for health microinsurance as well for the longest time. In fact, most of the products that you see today in the market are around hospital cash product. However, at Britam, we have been able to offer comprehensive health microinsurance to SMEs, to informal workers, and that's what I'm going to talk about. And I think I'll talk about a very specific component of it, which is technology. That how technology has helped us to make health microinsurance work in Kenya. These are pretty good numbers. I think we have almost 1 million lives insured around our health microinsurance products. One thing that I am very proud about and I like to talk about a lot is that recently we crossed 3 billion shillings, which is around $30 million in claims, microinsurance claims. And that we believe provides the real value of health microinsurance. My slides are a bit messy. When Elias told me that I need to compress everything into 5-7 minutes, I really struggled with it. We have been doing health microinsurance for, I think, 10 years now. And there is just so much experience. There is some good experience, bad experience. It was just very difficult to compress everything. However, I'm going to try. And I think you'll bear with me for my messy slides. I'm sure my MBA professors won't be happy about the kind of slides that I'm going to project. But I'll start with customer. I think all health microinsurance conversations need to, or rather all microinsurance conversations need to start with the customer. So customer here is Esther. She's a 38-year-old. In Kenya, we called it Mama Boga. The Kenyans in the room, please bear with my Swahili pronunciation. 7 years later, I'm still learning. So they are called Mama Bogas. They are micro retailers. They have these small shops. So Esther sells fresh produce, fruits and vegetables in Nairobi. She's married. Her husband is a security guard. And they have 4 children, 2 of them currently in school. Health is a major need for her. I'll give you a statistic. The World Bank estimates that every year 1 million Kenyans risk falling into poverty because of health expenses. That is the magnitude of the problem that we are talking about. There are stories, there are amazing stories. I go into the field. There are stories where families are not able to bring their bodies of their loved ones who had passed away in the hospital because they are not able to pay hospital bills. We all know that those are real stories. We know how that experience is. And those are the same challenges that Esther faces. However, to protect her against these health risks, there are 3 main challenges that a microinsurer has to deal with. One is outreach. How do we reach Esther? Second is access. How do we provide access to valuable healthcare to Esther? And finally, value. Esther doesn't have a lot of disposable money. Her working capital is mostly caught up in the fresh produce that she has. So she is only going to buy your product if you are able to provide her some real value. And I'm going to talk about how we have used technology along each one of these dimensions. And very quickly is around go-to-market outreach. Over the time, we have used a lot of different ways. We work with conventional channels like brokers or agents, but we also work with a lot of non-traditional channels. And here is a spoiler to the next speaker. It's Dana from Swiss Capacity Building Fund, and I know she's going to talk about it. They have been supporting us in some of our work. So this is the project. She's my funder, so I had to talk about her project, isn't it? So they have been supporting us to do some very cool things. So what we are trying to do is test out different go-to-market strategies to see what is the best way to reach Esther. So on the left, as you see, talking about messy slides, are some of the examples of SMSs that we are trying out. So we are trying out different languages. We are trying to see, can you personalize? Can we say, can I send an SMS with Esther's name? Do I get a better response? Do I twist the language? Do I make it like about health insurance, or do I make the message emotional? Which connects more with the customer and which gets us better value for money? These questions sound very simple, testing different SMSs, but they are very, very critical. The amount of money that you have to spend to acquire microinsurance customers is not a lot. So every penny, every shilling counts. So this is what we are trying to do, and I think what is the most interesting bit in this slide is a table which shows our experience across different go-to-market strategies. We have used SMSs, we have used call centers, we have used web, which is like, buying ads on Instagram or such things, or on-ground activation. And as you can see, like each one of these channels give you different results. Web ads will give you a lot of visibility. Everyone is on Instagram, everyone is on TikTok. We don't give ads on TikTok. I was told that it's for too young people, but we are on Instagram, Facebook, and it gives you massive visibility. But the conversion rate is really, really low. If you talk about SMSs, these are targeted SMSs to people who have clicked on our ads. When we convert them, it's a lot better. So these are some of the methods that we need to use to reach these customers like Esther. You need to do the cost-benefit analysis of which approaches work the best. And for each of these slides, I'll actually make a guest appearance also, because I've been lucky to have some of my staff here, my team members. So Susan, if you can just stand and say hello to the team. So Susan actually manages all of our distribution activities. So you can talk to Susan about some of this work that we are doing. She can tell you in much better detail than me. I always say that they do all the work and I take the credit, as I'm doing here. But you can talk to Susan about some of this work. Moving on, the second question is access. How do we provide access to good healthcare to Esther? And we have been able to do that with almost a network of 450 hospitals. But there is a lot of challenges with managing a network of 450 hospitals. You can't do it manually. We tried doing it. We really struggled with it. So sometime in 2017, we came up with a very simple web portal that our hospitals can actually use. They can do very basic fundamental things. They can verify whether your insurance cover is active or not. They can see how much benefits do you have. And most importantly, they are able to submit claims through this portal. And with this, we are able to reduce the claims turnaround time significantly. The chart that you see below shows that before this portal, our manual process of hospital claims processing was taken almost 60 to 80 days. But with this portal, we are able to break down some of these activities. There is no data capture, multiple data capture, and we are able to reduce it to less than 10 days. And it brings a lot of value. I think I was talking about it yesterday, that hospitals are able to give us price discounts because we pay them very quickly. When you go to a hospital, you pay cash, the hospital charges you less, but if you go with your insurance card, they charge us more because we take time to pay them. And hospital is a cash flow based business, but if you can shorten the period you take to pay these hospitals, you can get those discounts. And because of that, we are able to transfer those discounts to customers like Esther. And with this technology, we are actually able to make health microinsurance more affordable. And that brings me to Geoffrey, who is also here with me. And Geoffrey actually now manages all of our provider network. So if you have any questions around this portal, how this technology works, you can actually talk to Geoffrey. Thank you. The next bit, and I'll touch on it very briefly, is around value. How do we improve value to our customers? And it's very similar to what the work that Sauce is doing, and I'm not going to talk about it a lot because I think he described telemedicine in really good details. We are trying to do something similar here as well. We actually came up with our telemedicine solution, and then we refined it for new and expecting mothers. So we are actually refining our telemedicine solutions to specific customer segments, who are customers who are able to now. The next step is to launch a chronic disease management telemedicine program. What is interesting is, I was discussing this with Elias and Sauce, is that in Kenya, the take-up of telemedicine is not at the same level as they've experienced in Ghana and Southeast Asia. So I think that is something we need to explore, that how do we bring in this digital health initiatives here. And which brings me to my last guest, who's Lisa, who's our head of innovation, and she takes care of a lot of these things. So you can talk to her about more detail about this. And which brings me to the last slide around what have we taken away from this experience. It's been a long journey. Like I said, if some of you were here in yesterday's session, we lost a lot of money in the beginning, but we are now making money out of it. What is more valuable, as I talked about almost $30 million of claims, is we are creating real value for our customers. And the three takeaways very simply is, let's not ignore operations. I think in microinsurance, we always think about product. Most of microinsurance discussions are around product. But let me tell you, product is not the difficult part. Anyone can design a hospital cash product. Anyone can design a health insurance product. The magic for microinsurance happens in the operations. You need to have your claims and underwriting team on the point. And if they are working properly, you can work with a very small sales team. In fact, at Britam, our emerging customers team has almost 30 people. Only 5 of them works in business development. The rest of them work in actually operations, trying to make these things work smoothly. Second is group products. We started with the retail product some time back. Kenyans in the room must remember Linda Jami. It wasn't a great experience. Anti-selection, high customer acquisition cost. So moving to group health microinsurance product helped us a lot. It brought in scale. It also removed anti-selection. And it helped us to turn profits into this business. And finally, and most importantly, you cannot run health microinsurance without having health professionals in your team. It's not like motor or traditional insurance product. Health is a complicated risk. It's very emotional. You are talking to your customers at their most vulnerable time. They are either admitted or their loved one is admitted in the hospital. You need people who understand that. And that's why having actual people who have health expertise is very important. They'll help you in product design, they'll help you to work with the hospitals, and they'll help you in communicating with your clients as well. And I think these are some of the takeaways that have helped us to make health microinsurance profitable and scalable at Britam. So thank you so much. Elias, back to you.
Right, so great. So it turning to be mathematical this afternoon, because we heard how you need to integrate health, you add medical insurance, and you add telemedicine. Then now there's some equation that Sharma has kind of brought in. There's outreach, access, value, and kind of how technology enables us to do that. Now, within the health ecosystem, it cannot be done by only looking at a facet from the healthcare providers. There are a lot of contingents that really needs to be brought together. And in this panel discussion, we have Dana. I'll call her Dana. If you come from other parts of the country, you know what Dana means, particularly if you come from where I come from. Dana means grandmother. So let's put our hands together as we welcome Dana on stage from SCBF.
Okay, so hi, my name is Dana Alice. I'm representing Swiss Capacity Building Facility, and that we like to call the best kept secret in town in terms of funding opportunities. And so I would like to tell you a little bit more about SCBF. So we are really an innovative public-private platform that really brings together public and private organizations that are based in Switzerland that look to advance financial inclusion in emerging contexts. And so basically since inception in 2011 until the end of last year, we have managed to fund over 180 projects that enabled to create access to financial products and services to around 3.4 million people globally. And so we are not restricted to basically providing funding to financial service providers only in Africa, but we sort of provide funding globally, and the funding is not restricted only to insurance products, but covers a wide range of financial products and services. So what do we do in health insurance? So I think the fact is that the poorer the people are, the more they're exposed to health-related risks, but they're also less likely to be actually covered by health insurance. And I've really tried to compress actually this presentation to 5 minutes because I'm a rules-abiding Swiss resident, so it's not going to be more than 5. And I have only one slide already. And so basically what we have provided funding for was really for creation of hospital cash programs in a number of countries, in Morocco with Al Amana, with Lead Foundation in Egypt. We expanded the hospital cash insurance program to cover family members. We provided also health insurance cover that really covers accidents, sickness, disability, and death for savings groups in Ghana and Malawi. Now, I would like to present actually one specific project and it really goes beyond Africa actually, because I think it's good to a little bit broaden the horizon and for you to see what else is being done in other markets, and it also sort of aligns in terms of our new strategy that we are hoping to adapt this year, and that really looks to foster more innovation in emerging contexts. So what we have done recently, we have launched a project that really looks to see or test if a trusted digital health platform, which is called Sad Health, which really provides infotainment to nudge health-changing behavior, basically, among low-income populations, if they are able to address some of the key challenges that are being faced in India in terms of building financial resilience, particularly as it relates to the missing middle. And so what we are doing with the SCBF funding is that we are basically extending the content that Sad Health is providing with financial literacy, and we are trying to see and what Sad is planning to do, they're planning to basically monetize these leads by creating links and helping people from low-income backgrounds to offer them or link them basically with financial products that are provided by different financial service providers in the country. We believe that this digital health platform is really well positioned to address some of these key challenges. Really, we have heard yesterday about the issues really on the demand side, which is lack of awareness, financial literacy, as well as price sensitivity and lack of trust in the insurance sector. And so we believe that Sad Health really can sort of address some of these key challenges because they have managed to demonstrate that they are able to get people's attention. They have quite decent retention numbers, and also they have been able to sustain the interest of people with the content, which really focuses on health, but now they're expanding it with financial literacy content. Additionally, Sad Health has been collecting insights that really look into what have been people's health expenses in the past years, as well as what have been the major health shocks that they have experienced in the past couple of months, as well as what is the prevalence of non-communicable diseases. And so organizations such as this one really provide an opportunity to address some of the key challenges that we've heard that are on the demand side, which is really lack of financial literacy, lack of awareness, lack of trust. And then on the supply side is really in terms of, on the supply side is cost-effective distribution of the financial products and services. And with that, I will stop here, and I'll hand over to Elias.
Thanks. Yeah, so, SCBF, ideally, they innovate around financial inclusion. So I know they have worked with a number of organizations, not only here in Kenya, but across Africa, and also, as she has mentioned, across the globe. So they enable funding, which is critical, particularly to financial service providers. I know that kind of provides a catalytic effect within various financial institutions that are looking into innovating some of much needed products. So SCBF, they do provide access to financial service providers, particularly to get grant funding to help them develop and tailor and scale innovative solutions that looks into addressing some of the challenges that we face across the world. And it's great that Dana had to travel all the way to come and join us to be part of this great discussion around the inclusive insurance. Now, without further ado, we know the role of government, particularly enabling issues around universal healthcare. And one of the key things that we have had is that various countries, particularly in the continent, have been trying to integrate UHC, the universal healthcare. But, it's something that we kind of try to talk about. It's something that we are trying to see how it can translate to real commitments. And one of the ways is that we need to look at how then it can become equitable, accessible, but also the quality of how then we provide universal healthcare is really, really important. So without further ado, I'll welcome on stage Juliet Mara. Allow me to call her Julie for the time being. She's going to talk to us about what NHIF is doing when it comes to issues of universal healthcare and what we should be looking forward to receive from the government. Welcome.
So good afternoon. My name is Juliet Mara from NHIF, and I know it's after lunch. And please, I indulge your attention. I know that in terms of health insurance and health coverage and medical care in Kenya, NHIF is a hot button issue. So please, let's follow through and we can engage after. So as you can see, we are here discussing how do we close the gap. Interestingly enough, SOS talked about telemedicine. Something about health-seeking behavior in Kenya is that around 40% more, we do what is called self-medication. We go pharmacy, I feel, they give you medication. The other is the peculiarity of Kenyans is that we prefer to see a doctor face-to-face. If I don't see a doctor, I don't feel like I have been treated. So the issue of telemedicine, we can relate as Kenyans, and that's why it's been slow in terms of uptake, but it's projected that in the next 5-10 years, we'll see a growth of around 28-29%. Just quickly, who we are as NHIF, we are legally constituted under Ministry of Health to provide social health insurance to all Kenyans. But previously, we had heavy focus on salaried workers because it was mandatory for all salaried workers to be NHIF members. But over the years, we've been able to extend coverage to the informal sector and also those who are poor and vulnerable. So in terms of coverage, informal sector, we have active members of 1.7 million principal members. That gives around 5 million covered beneficiaries through the informal sector workers, and 1.3 million poor households are also covered by NHIF. So in terms of the informal sector, they join NHIF on a voluntary basis, although last year in 2022, we had the amendment of the NHIF Act, which now ensured that every Kenyan must have an NHIF cover. So the issue that we are grappling with is how do we enforce with the informal sector. Nobody knows who they are, there's no database, there's no structure in terms of the informal sector coverage, where they are, so it's hard to really pinpoint who they are, but we've developed some mechanisms to help us get there. In terms of the poor, these are households identified by the State Department for Social Protection, and the government subsidizes their NHIF insurance contributions 100%. So all those 1.3 million, the government is paying through tax for their NHIF cover. So challenges have been mentioned in terms of what we are facing in terms of covering the uncovered, issues of identification, particularly for the informal and those who are poor. Adverse selection, like I mentioned, NHIF, when it comes to the informal sector, it has been mainly voluntary. So they join NHIF when they are sick, they utilize and drop off. So if you look at how much they pay in terms of their annual contribution and what they utilize, then it's very a big challenge for NHIF in terms of this population. Also, the cost pressure. It's very expensive to move around, mobilizing, identifying, and onboarding the informal sector workers. And even when you do issues of public education, when you implement such strategies, still you find many of them do not retain their membership. Other challenges, remote locations, where they are. Some of them, of course, don't want to be found. We have a peculiar issue with casual workers. Many, when you go to do registration and sensitize them on importance of NHIF, they'll even claim they do not have IDs, their national identification cards, because they do not want to be found for issues be known to them, maybe it's tax or other issues. Of course, low education levels and lack of experience with formal institutions like NHIF. So what have we done? In terms of the benefit package, for informal sector and those poor households that are being subsidized, the annual premium is $45, which is Kenya shilling 6,000 per year per household. So the household size doesn't matter. NHIF also doesn't discriminate against you in terms of age, in terms of disease, any pre-existing condition. So you register with NHIF regardless of how old you are, and that is the premium. So what we compensate, as you can see, inpatient care, including hospitalizations and prescribed drugs. We have outpatient care, basic lab investigations, consultations, diagnostic imaging, MRI, CT scans, management of chronic ailments, including cancer treatment, diabetes, renal care, rehab treatment for persons who are addicted to harmful substances. We also have a package for mental care, overseas treatment. We cover the cost of treatment for persons who would require services not available in Kenya. And we also have a package for surgeries. All surgical procedures are covered in this, except for cosmetic procedures. So this is how we reimburse our facilities. We use capitation to reimburse for outpatient services, and then a daily rebate or per diem model, where we reimburse for inpatient stays. And case-based model is for the specialized services, like I mentioned, oncology, radiology services, dialysis, rehab, and surgeries as well. So this is where our members can access, including those in the informal sector. We have a network of 8,000 facilities onboarded by NHIF. 75% of those are government facilities, and these are facilities nationwide. We use the biometric system in terms of registration for access to benefits, and this has been rolled out in the last 3-4 years as we are adopting technology to improve efficiency in terms of delivering services. So that is the distribution of healthcare providers, and this is what gives our members access to our benefit package. So we also have a very rigorous assessment model that we use to onboard facilities in terms of ensuring quality for our members. And many of the facilities that we've onboarded are also used by the private health insurance companies because of the thorough assessment that we do. We use the Kenya Quality Model criteria, and it assesses the facility level, the rebates that we will award, the scope of services, which will also determine the type of contract that the facility will have. We use an e-claim system to reimburse our healthcare providers. So all healthcare providers, the 8,000, are networked within the NHIF system. So we are able to tell real time all NHIF members who is accessing what services and where across the country. Then in terms of operations, our distribution channels. Targeting the informal sector, like I mentioned, is very tricky because we don't know exactly who they are. There's no database. So what we've done over the years is work with telco companies like Safaricom, pharma cooperatives, transport organizations and SACCOs, and organized groups to kind of target these groups to register their members and therefore increase membership among the low-income customers. We've also partnered with banks, which have a very wide network across the country, and these banks enable us to also collect contributions for our members and also help us in terms of reaching our members in those remote areas. And also, we use the banks as well in terms of reimbursing all healthcare providers. Then, informal sector members are also able to remit their contributions via their mobile phone through M-Pesa. And all these distribution channels, we rolled them out more than 10 years ago, and we've been improving on them over the years to be able to improve the customer experience and improve on convenience for our members. So this is where we are as NHIF. We have 156 service points across the country. And for our members, in terms of how they can interact with us, they use the mobile phone to register, to also get messages from NHIF on payment dates. If they are going to hospital, they get a notification on an authorization maybe they were seeking, etc. We also have the NHIF web application where our members can also do registration, check the list of hospitals that we have onboarded. And we also have a toll-free line that they can use to reach us. So in terms of coverage and impact, we have 7 million pregnant mothers who have accessed the free maternity program. It's among the subsidy programs that we have in NHIF. The subsidy programs cover the elderly, orphans and vulnerable children, and vulnerable pregnant mothers. And that is the uptake and what they have accessed, how many have accessed in the last almost 10 years now. Then for the informal sector, For the period like last financial year, NHIF was able to reimburse 131 million in terms of services rendered and accessed by the informal sector. 719 beneficiaries in the informal sector accessed the services. NHIF paid claims worth 2.8 million US dollars for beneficiaries covered through the subsidy programs, and over 500 poor families were able to access the services as of last year. So I hope I've kept within the time. Thank you for your audience.
Right, so thanks. We'll just have a quick discussion and basically start from where Juliet has just left. If you look at the total investment in terms of social protection, and that's something that you brought about, how you look at the tiering system around the Kenyan social protection aspect. The total investment in terms of contribution to the GDP, we kind of invest around 1.3%. Which basically around 0.2% is basically from NHIF for social health mechanisms. So maybe what are the challenges that is impacting the sector that we are not basically seeing a lot of investments around the universal healthcare, particularly targeting the groups, the vulnerable groups that we've talked about? How can we make these investments kind of go up? And how then, how does the private sector kind of complement and support in terms of putting more investments around the social protection ecosystem?
Yes, I think there's been, over the years, we've seen, in terms of health, there's very low investment in health, particularly in Kenya. And even as NHIF's contribution to healthcare financing, it's really a drop in the ocean. But we are seeing accelerated efforts by government to increase the percentage allocated to health as we move towards what was ideally and initially captured in the Abuja Declaration, indicating that at least 15% should be allocated to health. The challenges has been the fiscal space, and also in terms of getting the understanding of NHIF and the way it is structured, particularly in the country. It's more, it's a contributory system. So that's what, that is one of the things that has left many Kenyans exposed in terms of health and out-of-pocket expenditures. But looking at the current discussions taking place, we are seeing efforts to reform NHIF to become a social health insurer, where now we'll have government earmarking funds to cover those who are unable to at a larger scale. We are looking at 5.7 million poor households currently, according to the Kenya National Bureau of Statistics, identified as poor. So the government is looking at increasing the pool in terms of health insurance funding, and then also making sure that those who can pay must pay, working with both national and county governments, that any business that seeks to get a license through the counties must present NHIF compliance and other mechanisms in place. But because of the way NHIF is structured, it has limited the reach in terms of health, social health insurance coverage in the country. But with the latest amendments to the Act, which indicates that now health insurance is mandatory, NHIF is mandatory, and the government is now mandated to finance the health insurance for the poor, then I believe we are on our way to achieving UHC in the country.
Thank you very much. And ideally, also, I know there is this, the National Social Protection Policy that was released around 2012, and I think also kind of stipulates some of the things that will be done. Maybe just I want to jump to source, because if you look at what Juliet has mentioned in terms of how the government needs to be critical in terms of really working together and increasing investments, particularly in healthcare. What are the partnerships with the traditional health insurance companies that we can reflect to based on the experience that you've had in Ghana? Because it is critical that this particular issue around health insurance cannot only be dealt with from a private perspective. It requires a lot of private-public partnerships, and some of these might really require some complementation between the government and the private sector. Maybe what are some of the challenges and the learnings that you've kind of come across when this particular component was being implemented in Ghana?
Yeah, that's fine. Interesting, very interesting presentation. Indeed, we do have a national health insurance scheme in Ghana as well, which is a social scheme. So in Ghana's case, every employee, government sector or private sector, who contributes to pension, 2.5% of your income goes to the National Health Insurance Scheme. Of course, I mean, once it's government money, you can understand. Unfortunately, the money does not go to the scheme directly. It goes to the government coffers, and then the government must now embase the private health scheme. You know what happens with government when the government gets money in its hands. So that's another story for another day. So the scheme would never be as active because providers or health service providers to the scheme would always have their monies lagging behind to be able to come through. So that is where private health insurance companies step in. And for BIMA like us who are coming in and now partnering with health insurance providers, some of the challenges we are facing in that space will be how digital we are in our service production, in our service delivery. And these private health insurance providers have been traditionally what they are. For instance, if you were to make a claim, you go to the hospital, and then your bill is submitted in hard copy, signed off, stamped by the facility to the health insurance company before you are paid, right? In our case, everything we do is digital, so we do not have these things in place. When we set up the partnerships recently, we realized how difficult it was for us to do. But what then happened was to help the health insurance provider to quickly evolve to digital service as well, where now your bill and all of that is sent to the health insurance provider via a digital system, and then it doesn't have to be signed off and stamped and all of that. So indeed, we had difficulty in this space because we are very digital, while the traditional providers are very traditional, but we've been able to find a bridge where we are now finding common ground. And I believe with more such partnerships, we will be able to drive them all into digital space, and possibly the government scheme as well will then pick that up, and then we'll be able to then achieve the universal coverage, health coverage that we require.
Right, thank you, Sos. And I'll have a follow-up on some of the comments that you've made. But let me just kind of step up a bit. If you look at and maybe I'll go to Dana. If you look at the African continent, we talk about 85% of this continent is undersecured, whereby you'll get that only 15% of the people in this continent don't really need some form of assistance, particularly on a couple of instruments or components that they have. They can basically take care of themselves. 85% of this continent requires some form of assistance. And that's why I had a conversation with Juliet, we talked about social protection. Sos is talking about how then we can leverage partnership. How does funding unlock the value of basically enabling these 85% of people across African continent to get some form of protection? I know you deal with funding. How can SCBF really enable us as a continent unlock or catalyze health insurance within this space?
Thanks for the question. So I'm actually proud to say that almost a majority of the projects that we have funded took place on the African continent, and around 47% of those that took place on the African continent really touched on insurance. And I think actually part of the SCBA strategy that we are hoping to get approved at the end of June by our members of SCBF is really to support high-impact enterprises. And we had conversations with Charlotte from Jamie One, Democrats, and other organizations that are really the innovators, on the inclusive finance space. And they're really the ones so just to say, a lot of the funding is currently provided to established financial service providers, right? But really innovation is driven by a lot of these startup companies that typically face a lot of challenges in terms of excessive funding. So typically they're too large to access seed funding, but they don't have enough traction then to attract catalytic capital from private investors. And so what we are hoping to do is that SCBA will provide then this type of funding or boost in funding that will help them to scale, to gain this traction, and then also to then sort of catalyze the investments from the private world, sector world. So just to say that really the future is in innovation. and we are really hoping to offer a number of different financial tools. Currently, we have been providing only technical assistance funding, and the shift is now to focus other types of financing tools, which probably will include repayable grants, impact-linked finance, that again look to support the social enterprises that really have a high potential to impact a huge number of lives on the African continent. Thanks.
Thanks, Dana. Maybe I know you've kind of, Saurabh, you've received some funding, maybe to see how then we can unlock this space on health insurance. And you mentioned that Britam health microinsurance portfolio is profitable, which is something that most of us would want to hear, that, right, you're getting into the right business, you have shareholder value being generated. But also if you look at the other social impact side, health insurance or access to health also looks at the social impact side, particularly if you look at issues around ESG. What is the driver around the profitability that you are kind of seeing within the health micro insurance space? And maybe what are the learnings over time? Because you did mention 3 critical components that we can learn from. Maybe what are what is the driver of the profitability that you are seeing, and what are some of the learnings that we can also pick if we want to take this particular component just beyond the social impact to shareholder value?
Right. Thanks, Elias. And yes, I mean, Britam has been fortunate to receive donor funding from a lot of donors, including SCBF. And I would say like how that has helped us is to try innovations. Like with SCBF, what we are trying to do is using behavioral sciences to improve our go-to-market methods on digital health microinsurance. So similarly, like a lot of other donors, the UN, World Bank have helped us in this journey. However, coming specifically around profitability for health microinsurance, I think it's a very tough product. And I would say that there is no one answer to that. I would say that it's across the value chain. In fact, like I said, like when we started in 2014-15, we were making big losses. In fact, in 2014 and 15, we made losses of $2-3 million. Thankfully, Britam management decided to continue in spite of those losses. Most other insurers would have backed out. But over the period, we have made those changes. And those changes, as I said, are across the value chain. So you need to start with the product design itself. You need to see how the product design balances client value and your profitability. So what we have tried to do is, like, for example, one of our products, which has massive scale, almost 500,000 tea farmers and their families, is purely an inpatient product. And farmers can enroll for as low as 115 shilling, which is around $1 a month, to access that product. But within such low premiums, they are able to access inpatient care at mission and government hospitals completely. So while it's affordable at the client side, it also provides them good value, but also it reduces some of the anti-selection means that we were talking about. The second bit is around how are we looking at our providers. So by that I mean healthcare providers. Frankly, you can't do health insurance without having a good network, and how we have looked at our hospitals, not really as providers, but as partners. I was talking about how we have used technology to pay claims quickly, and that has given us discounts, but we also work with some very selective providers who share the same mission. So a lot of mission hospitals in our panel who are able to now give us that those kind of rates that we transfer to our clients. In fact, if some of you are attending the field visit tomorrow, you will get to meet one of our hospital partners to talk about how we are doing some of that. So product design, hospital partnerships, and I think the third bit, and this is not just for Health Alliance, but I think for most products, even Agri, we are always talking about claims, that claims are very high, but I think what we are ignoring is the expense ratio. Claims, you need a good, healthy claim ratio for your clients to see good value. But where you need to work on your sustainability is expense ratio. If you are able to control your distribution cost, whether it's health or it's agriculture, and whether you are able to control your own internal operation cost, you can make it profitable. Yeah.
Thanks. Let me come back to Juliet. If you look at what we call the social protection staircase, you'll be able to see that social health insurance kind of becomes the base. And over that, then you get that voluntary health insurance kind of complements that. What are some of the key elements that you think the private insurance sector can maybe leverage with what you are currently doing under the social protection staircase, particularly when we talk about healthcare? How can we partner? How do private sector partner with NHIF to basically take this particular discussion to the next level and provide proper access to the citizens, at the same time provide quality, because it's not only about access, but are the citizens getting quality healthcare? Are they getting the right medication? So how can these private sector players partner and kind of complement what you are currently doing in NHIF?
From experience, we've seen working with private medical insurance companies has really given a value add to the NHIF benefit that we offer. For example, we had partnered with CIC for our members to get personal accident and income loss benefit. And also, this helped in terms of improving the message and what we are selling to the informal sector. So in terms of that partnership, giving value add to our members, that is one of the ways that we have seen working for us within NHIF. Currently, we are doing a feasibility study with the International Labour Organization, the ILO, to introduce a maternity income benefit. And this particularly is targeted to the informal sector because of the nature and because they do not have this kind of protection, particularly for women workers in the informal sector. They do not have maternity protection. They are forced to go back to work immediately, which risks the health of the mother and the child. So this is something we are working with, and we are at the feasibility stage. We're doing an actuarial assessment jointly with the ILO and NHIF. And with this kind of benefits, then we are able to then partner with private insurance companies who will either be delivering this benefit in terms of the reimbursement or whichever mechanism we see in terms of their value as partners for NHIF. So this is something that we want to do. It's ongoing, and we hope it can be rolled out in the next year or so. For Kenyans. Yeah, thanks.
very exciting to hear that there's so many things that are already happening that the private sector can leverage on and basically take access to healthcare a notch higher. Maybe just to jump to source. You've heard what NHIF is doing and basically how then they're looking into complementing with the private sector. Juliet mentioned that we are not that good on doing telemedicine in Kenya, around 28%, and we really want to look at how then we can grow that. So I want you to give us a call for action. How then do we deepen and entrench telemedicine in the continent? Because you've kind of managed to do some bit of work. How can this be enabled within the continent?
I mean, to be very honest, it's not like it's universally accepted within Ghana as well. People are getting used to it. But of course, I hold the opinion that technology or change would never happen if you did not bring it up. So I'm still very strongly of the opinion that we should be able to start it. People, adoption of technology, adoption of anything new doesn't happen automatically. People would use it and become, I mean, until I joined BIMA, I had never used telemedicine service. And the first time I used it, I was pleasantly surprised how efficient it is. I mean, the doctors are so patient. You can have 10 minutes on the call. You can talk about anything you want to talk about and all of that. So it does work. And I think that when people use it once, they can then eventually get used to it. The other way we do is the engagements that we have. So the proactive calls that we do from our doctor service to the customers is what then tells them to be able to appreciate the service, because if you were to leave it to them calling alone, they may not eventually call. So we proactively reach out to you via text, via IVR, and phone calls, and then they then have the confidence, they then build the confidence in the system, and on the back of that, they eventually call. So for me, I think that we should start, and the like of partnerships that your NHIF is doing here, I think that that's the way I want us to go. The national scheme must be the user of the telemedicine service. If the national scheme gets to incorporate it, people would definitely get to use it. By the time you realize 2-3 years' time, people universally will come to accept that it works. And for me, I think that for all African countries, if we really want to reach universal health coverage, telemedicine is what gives us the quickest access to that, so that people, I mean, it's half a loaf is better than none. So that if I am in a remote village and I can have access to a doctor via phone, is that not better off than not having to see a doctor at all whatsoever? So that is, for me, what we should do. That is the call to action. And for me, that is what I think that every country should be able to start doing so that we can get the universal health coverage that we need.
Thank you. I've been told that we are out of time, but I want to allow for one question from the audience. So you can lift your hand. I'll have only 2 questions. There's a hand here. I need another hand. If there's no, okay, I'm blocked. You know, there's a problem of being short. Okay, fine. Let me stand. So yeah, so I can have a mic here, then there. Okay, fine. Let me bring the mic.
Thank you, Elias, and thank you to all the panelists. Really, really good contribution. I have a question for you, Sosthenes. What are the chances that a doctor may not be on call when I call, as in they may not be in a position to pick my call? And if they're not able to pick a call, what are the mechanisms in place to ensure that any patient who is calling is able to get the attention required?
Our queuing system is very accurate and on point. There is no way you would call the service and you wouldn't. So that's what we do. We know our peak periods. We know our what do you call them? The opposite of peak, the other one. So we schedule doctors and nurses on call based on history. Of course, there may come a time where a spike may happen within a peak season and calls will come in and then we miss calls. Every call that is missed is retained. And if we miss a call and we are retaining the call and you do not pick, the call goes through a queuing system such that if we call you, you do not pick, it goes round, the system is automated. After 2 hours, it rings again. The doctors do not dial the number. They are always on call behind the dialer. So the call goes through a system and then it gets back to you until you pick it. At least it goes about 4 times within the day. And if you do not pick, the following day, it tries 2 times again. The third day, it tries once. So within this number of calls, we'll definitely be able to reach you. But of course, even if you do not reach you, you would have seen that you've missed a call from the BIMA doctor service, and eventually you return the call, by which time it may not be a peak season, and then you'll be able to attend to.
Thank you. And it's for you again. Thank you so much for the presentation. What you're doing is inspirational. And one of the things I was looking most forward to in this, I have a million questions, and maybe we can take them over dinner. But what's the price? Who can afford this? And is it even financially sustainable for you to provide, especially this reach out care where you're actually treating people before they get sick at this point, or are you just investing a lot and then later on it will become affordable? So is it microinsurance? Who can afford it? And is it profitable?
Yeah, it's microinsurance. So we started as a microinsurance company, and relative to giving more value, then we brought in the service. We brought in the service and eventually developed it to this professional status as it is. We pay doctors per hourly rates, so we rate them like that. But because of the number of usage we have, and because it is a subscription service, the doctor service has never run at a loss. No, not at all. We are able to have enough at every point in time to pay our doctors on call at all points in time. So it's a good service, and it actually works. Of course, the insurance part of it is underwritten by traditional insurance companies, because we do not have an insurance license. We are a technical service provider to the insurance company. So the insurance aspect goes to the insurer. There may be times that you may have losses in that space, but then for the service, indeed, when we price the premiums, the cost of the doctor service is decoupled. So we take the cost of the doctor service out of the premium, and then we pay the premium, the risk premium, to the underwriter. So it's separated, and the doctor service never runs at a loss. So it's really an effective system and service, and I think that it's sustainable.
Right. So I want to appreciate the panel. I hope that for those questions, please reach out to these wonderful panelists. I know we are basically out of time, but some things that are coming out, it's important to urbanize healthcare, particularly through telemedicine. That can really take us to the last mile. Importantly, they have also mentioned the power of catalytic funding on how to kind of test solutions and gain technical assistance in terms of how this would be done. But most importantly, partnerships and how the private public sector can work together to entrench access of healthcare within the continent. So I want to really appreciate Sos, Sharma, Dana, Juliet for their time, and let us have a hand of applause to all of them. Thank you very much. Thank you, guys.
Good. We are doing well. Let's appreciate them once more. You've done a good job. I wish we can have this for 1 month, 2 months, the whole year. We'll live here being professionals. Thank you. So we are going for tea, and that will take us 30 minutes. Then we come and wrap up with the last session, just outside here. Karibuni. Karibuni means welcome, safe. Just outside. Karibuni.
84%. What that means is that 84% of adult Kenyans have access to a formal account. So it could be a bank account, could be a SACCO account, and then also insurance, have access to insurance. Those are formal services. So it's been growing since 06, but the orange line you see there is financial health. We started measuring it in 2016, and we were 39% of Kenyans were financially healthy. And what that means is I'm a Kenyan who has access to some financial solution, and then it's able to support me, or just access to that money is able to support me from the time I get my salary to the 30 days, or if I'm in business, the day I get money till the next round. I'm able to do that using the financial instrument. I'm able to deal with shocks, like when COVID hit, I had enough money to sort me out. I didn't need to struggle to get it. And then able to invest for the future. So that figure says that 39% of Kenyans could do that in 2016. But now in 2021, when we measured, only 17% were able to be financially healthy, meaning that even some of us here were unable to deal with some of those financial needs. And the next slide, I just picked a few products. And the first line is, the first chart is insurance. You can see insurance is growing. The figure there shows 23.7% of Kenyans have access to insurance. And this 23.7% means maybe you and I, but probably we have maybe 3 different insurance accounts, but you're counted as one person. And this is some of the discussions we have with ARA about the figures varying. I think how we calculate, I think the figure we currently have and the one I've had is about 3% of Kenyans having access to insurance. But this is now the number of Kenyans who have at least one. And then when you look at the ARA regulated 2021, that's only 7% of Kenyans who had access to that. And then if you compare that figure with other financial solutions, you can see mobile money is up there with 81% of Kenyans, and then bank users 44%. Insurance is growing, but I think there's potential to have it go higher. So basically, guys have accounts, but it's not making a difference in their lives. In terms of sources of livelihood, this, I think we also saw it yesterday. That's a number, how Kenyans, their sources of livelihoods are, yeah? And we split into, the first one is agriculture. We have 5.1 million Kenyans who practice agriculture as their main source of income. The orange one is what will be my focus, and the interest here is 3.9 million of Kenyans have businesses. And this number covers micro and small enterprises, which many surveys are not able to capture, because we're able to get that group of people because they're picked from the households. Because most of the time, these guys might not even have a location, and many surveys would go walk in the street and pick out that's a business person. But the FinAccess is able to capture the population that does micro businesses. So it's 3.9 million. With 1.1 million, we categorize them as small farms. These are the ones which have 1 to 20 employees. And then the urban micro businesses, no paid employees. This is a typical mama mboga we saw from the Britam example. And then we have the rural micro businesses. So the focus will be the business owners. You can see the other sources of income. We see employed. The number is actually lower than the business owners. So this is, you'd call it a very important segment. I'll try and go very quickly because I'm just giving numbers to what everybody said, yeah? Who was talking about micro businesses. So majority of women, the yellow, under gender. Age group, they are below 45 years. In terms of households, they're head of households, meaning this is a main source of income for many households. Education level, they have primary education and above, and then many are married, which is the typical demographic you'd see in most households. In terms of the two categories I'm focusing on this, you can see we said the incomes are very low. So Finaccess is able to give us the average median income of these people. So they're making about 10,000 Kenya shillings. These are the small farms, the ones with 1 to 20 employees. That's monthly income. And then the median monthly income revenue is 56,000 for the small farms. And then for the micro, you can see the figures there, roughly $70 per month, and about $332,000 or 45,000 shillings per month. Let me just pause there and say that Finaccess, other than because we do the Finaccess survey every 2 to 3 months, run by CBK and KNBS. But in between, like during COVID, we got a chance, we needed to know how the businesses are doing for the micro. And Finaccess provided the best sample you could use. So what we did is, in the 2019 sample, we're able to go back to people who say they have businesses as a source of income. So we made calls, and so we're able to get figures. We did like 3, they're calling them trackers. So we did 3 trackers to show how businesses are doing during COVID. And we need to know how resilient these businesses are. And that's why we're able to get some of the figures I will talk about later. So majority get their finance from, you can see the yellow figure, which is the reinvestments of profits. But you can look at the formal ones. You can see the loans up there. Very few rely on loans for their businesses. And then if it's formal, they're using their mobile money accounts. And this is what we know as Fuliza, or the, what is it called? Yeah, Fuliza, the Safaricom product. And then the red at the bottom, 7%. That's like the most important after the mobile money they use for their business. And it's the same across all other needs for the business. And I think somebody already talked about that. And the reason why they're using it is because it's convenient, it's affordable. And again, affordable here means, it could mean many things. And we're proposing that we dig deeper into that by having sort of like a follow-up survey. I hope our partners, ARA and KNBS, were able to do it so that we understand what affordability is. And once we do that, I think there have been so many questions on how do we tackle that affordability. And if you had that data, it would be great. And I believe Finaccess would be a very good source of data for the demand side understanding. Okay, so this is what I was driving at when I was saying we did a study in between during COVID. And you saw that many of the businesses closed down or just reduced. So currently we have just 13% of businesses being able to have an income the last time we measured. And some of them, most of them closed as COVID went on. And that's one of the issues most of these businesses have, yeah? What can they do to remain resilient? And I believe insurance could play a role in that. And then in terms of the shocks experienced, yeah, so this is where the bundled solutions can come into. So the business is also how the people are living in their households. So if they get a solution that deals with some of the major shocks experienced, you can see death in the family is key, medical, health, everybody's talked about that, loss of income, also climate-related shocks they're experiencing. And most of them don't even turn to insurance. You can see the next chart, that majority are turning to informal solutions to sort out. In fact, only about 0.5% of businesses are able to use insurance to deal with any shocks. And it's the same story when it comes to the other shocks. If they want to invest, nobody's using insurance. If they want to meet other needs, nobody seems to be using insurance. And I think it goes back to the issue of it's not speaking to their needs. And then the insurance gap. So this question was asked to both the ones who who do businesses as their main source of income and the ones, most of us who have the side biasharas, the side hustles. So you can see the insurance gap, what is colored there. 55% and 65% do not have insurance of the businesses. And the top reason, again, as we've already seen, it's affordability, which again, I said, we need to unpack. So indicators of digitization. I think the solution, and I think we've already seen experiences, we've talked about it, is digitization. And there are so many indicators in FinAccess that can show that these businesses actually are able to adopt to digitization. Throughout COVID, now we're able to track, like those who have smartphones, those who began using mobile money daily, those who are able to make digital payments for business and personal reasons, those who receive payments in digital formats, and we saw all this increasing, and I think this will get higher and higher. So there's opportunity to rely to build, to support these businesses digitally. Lastly, this I won't even dwell on it, but it's just to show that there's a lot of potential. And I think yesterday somebody talked about the potential in monetary value. So this is an estimation based on the FinAccess data. The small farms specifically, 256 billion is the opportunity in business for that sector. And all this is using demand-side data, but I know we can get more accurate figures if we looked at supply-side data. Yes, so that's the end of it. And all I was doing was just putting figures behind what everybody has said. So I'm going to stop there. Thank you.
Thank you, Lukania. I think you can actually keep this. So we're going to do something slightly different. In case somebody has a burning question that you'd really want to get clarification from Lukania, this is your moment, especially on the numbers, on the data you might forget. Lemmy, you have a question?
Yeah, just a quick one on the figure on those who said they would like to have insurance and cannot afford it. Do they demonstrate that they know what types of insurance products that they would have and what the cost is? Because sometimes the issue of affordability has this angle of the unknown. Like you fear and you have never even been told like this is what you can have. So I just wanted to find out whether there was also an inquiry on the first bit, understanding, knowing, and actually knowing the cost as well, because sometimes you just fear and you have never even been told what the premiums would be.
Yeah, thanks, Lemmy. And I'll just come back to you to help me define that question properly. So it's just a general question, and that's why I said I was looking at Robert, hoping that we'll do a deep dive. So the plan is to go back to Kenyans who gave us their numbers in the survey and who use insurance and just unpack that. And I'm saying you'd help us because I think you know what the kind of questions we need to ask. Thank you. Any other question?
Yeah, there's one. Are there any mics that can be given to there's a lady at the corner? Thank you.
Good afternoon. So mine is really brief. I just wanted you to speak a bit more on maybe the first graph that you showed us that showed between 2016 and 2021, there was an increase in what you'd call financial inclusion, but a decrease in the financial health of the same population.
Yeah. Sorry, what was the question?
Are you able to speak on to maybe what are the factors that would have led to this mismatch? Because we would have expected that with an increase in financial inclusion, the financial health of the people is actually better, not worse.
Okay. Yeah, and that's, I think, our dilemma with, as FSD Kenya. All this work has been done by the market. People have accounts, but there's no difference in their livelihoods, how they are living in terms of meeting their day-to-day needs. We're seeing Kenyans are more strained. Many people are borrowing to survive. And then, of course, shocks, when they come, we're all stuck. Somebody says when you get a health shock, you move back to poverty. People are unable to really invest for their futures. And that's what the financial system is supposed to help. So there's a mismatch in a way. And that's all about the value that the financial solutions are supposed to provide. What needs to be done to meet the needs of this Kenya? And it goes back to the design of all solutions, not necessarily only insurance, but any other solution that's meant to serve. We start from the customer need, then come up with a solution, as opposed to here's a solution, let's fit in people, yet it's not meeting their needs. I hope that sort of helps. But I know there's a lot the sector needs to do for that. Thanks.
So thank you, Lukania, and I think your presentation was very fascinating, and there's a lot more we can dive into. I can also see Wesley wants to ask a question, but I'll ask you to hold it, if you don't mind. Yeah, you'll ask right after we finish. I wanted just a few clarification questions. You'll get the first opportunity to ask when we open up again for Q&A. So I think at this point, I'd like to check whether Vera is online. Like I mentioned, Vera works for SendFree, and she wants to share this idea of a value-driven approach to MSME insurance. So Vera, are you there now? Maybe I can just ask, has she logged in? Because she's there, okay. If there's a challenge, we might move to jump over to the end, which is a practitioner's view, and then we'll come back to Vera on more of a policy approach. So maybe you could put up Japheth's presentation, and then he'll go ahead.
Thank you, Barbara, and good evening, everyone. So I can start by introduction as I wait for the slides to be put up. My name is Ogalo Japheth, the MD of Old Mutual General Insurance. So short-term business is what I oversee, part of Old Mutual Group, which has both long-term and short-term business. And also banking is also part of the entities within the group. I've made my presentation quite brief, just to give an overview from a practitioner's lens. And those are the 4 items that I want to quickly scan through and finish with a case study of what we're doing at Old Mutual. Starting with some numbers, just to give you some statistics there, to give us context of MSME, especially in Kenya. 95% of businesses in Kenya effectively employing 14.9 fall under what we call MSME. That is 80%. In terms of numbers, we have about 7 million. That is registered and non-registered MSMEs in Kenya. And All of this falls under what we call micro. Then when we look at when you look at the longevity of MSME, the studies have shown that 70% do not go beyond year 3 of operations. And that then gives us an opportunity as practitioners or protection providers or underwriters to give this protection to our MSMEs, 70% of them who don't go beyond year 3. If you look at the key trends that we are seeing in our country, Kenya, there's a deliberate effort by the government to encourage MSMEs. We've seen that, especially with the new government, keen on growth of MSMEs, with the rollout of what is famously known as ASLA Fund. And I think the enabling environment that the government is targeting to enable growth of MSMEs. So ASLA Fund, for those who might not be in the know, is a financing model that the government did introduce targeting MSMEs. These are entities that would otherwise not qualify for a formal bank loan, for example, in the mainstream financial sector. But the government has introduced a quick financing model, not very many documentation, and affordable interest rate to spur growth within this sector. We also see that the financial losses adversely affect MSME because they don't have any risk mitigation mechanisms. What they have are really informal risk mitigations, so that when they suffer losses, that speaks to the 70% longevity that I spoke to in year 3, that they don't go beyond the year 3. So then that brings us to the importance of MSMEs to our country, because they are the backbone of the economy. They fill the gap of unemployment, because you saw up there the number of people employed in this sector. And they favor also flexibility in innovation, so that it gives us the background of then how can we come in as underwriters to support this sector. If we look at the perspective of MSMEs, how they see us as insurers and the constraint that we have as insurers. Insurance cost viewed as high, so a typical MSME will pass and say, I don't have funds to buy insurance. They look at our solutions that do not really address their issues. The competing needs, so again, talking to number one, so insurance is seen as costly, and then they have all these other needs, so they put that aside. And generally, the knowledge of insurance is also very low in our country. I think the previous speaker in the morning spoke about, and we all know 3% penetration rate, it's actually under 3%. The last statistic I show was 2.7, 2.8. From our side, the constraints that we see as practitioners is the difficulty in tailoring solutions, because the risks are not homogeneous, they are heterogeneous. So that brings with it the difficulty in giving a solution that would apply to most, if not all, of SMEs. We don't understand MSMEs. Our understanding of them is limited, because we seem to play in the formal sector, which is easy to manage, understand their issues. Then distribution is also a problem, with difficulty in reaching out to MSMEs and the cost of serving this sector. So how can we then, insurers, manage SMEs? Because it is a sector that we must play in. There's need to provide that protection, and also for us as underwriters also provides opportunities for growth. So there must be a shift on how then we develop products for this segment, more of solutions than product because of the heterogeneity that I spoke to earlier. The understanding of risk, we need to have a clear understanding of the risk that face MSMEs and work with them to support the risk prevention and management mechanism rather than just giving them policies, because statistics have shown that those policies, sometimes they consider them as not favorable to their needs or risks that they face. Then direct approach to address the primary risk and offering the mitigation against what would be specific to MSMEs. Because what we have been accused of as practitioners is that the one-size-fits-all solutions or policies or products that we offer to MSMEs, they find them not applicable to their situation. A range of needs covering for employees and even the risk, the product risk that they face and the employees. So typically for an MSME in Kenya, you'll find there's the owner and under 5 employees that work with them. In the event that 2 or 1 is indisposed, then the MSME is unable to produce its daily or targeted daily numbers. So the solution then that could take care of the business and the employees is what then now us as underwriters would consider. And in that circle of us, so we are looking at all those risks that they face. So property, the liability, financial, agriculture, and all that MSMEs do face typically in their daily. Moving to InsurTech. InsurTech is why I highlighted here, because provides an opportunity for distribution, because the targeted premium, if you are to go traditional distribution method, it will be administratively unmanageable. So technology plays a big part in distribution of our solutions to the MNC, because the traditional distribution method then would not apply. And partnerships and aggregators, which also pooling of MSMEs so that we are able to reach a big pool of MSMEs through agent networks, cooperatives, government, digital platforms, and financial institutions would give access to a bigger pool of MSMEs, and then we reach them through the InsurTech that I mentioned earlier, so that we are able to effectively increase the uptake of insurance of this class. So partnerships is critical, and those are some of the ones that we could target as underwriters to pull MSMEs together and reach them in effectively then giving them the solutions. Awareness. So most Kenyans, if I include the population, the entire population, have limited information about insurance. So if you step down further, and now you're talking about MSMEs, you find 90% have little or no knowledge about MSMEs. So the need for raising of awareness is critical, so that they appreciate insurance, the solutions that it provides, the protection that it provides, and then they would be able to then interact and increase the uptake of this. So raising awareness through the partnerships that I spoke about earlier is critical to ensure that this segment is covered or captured and appreciate the financial protections that we provide as insurers. As I wind up, this is just to give you a case study of what we're doing back at Old Mutual, because we appreciated that this is a segment that we must play in, give solutions that speak to them. So the first one is, the photo is blocking it, so technician, you can move it a bit. Sorry? Yeah. Right, yeah, there we go. Thank you, thank you. So we have an array of solutions that we have provided for this segment. First one, I just sampled a few so that we could have appreciation of what Old Mutual is doing and how we are playing in this category. Biashara Shua, this is a bundle insurance for property, so takes care of business interruption, burglary, goods in transit, WIBA, fidelity, electronic equipment, and machinery breakdown, all bundled together and sold as one. On our life side, we have the Biashara Flexi, also taking care of, this is a life product that is taking care of disability, whether it's permanent or temporary, and full range of life in the event of death. On the medical side, we have SME Health, and this is targeted as MSME for registered organizations with 5 staff or employees and above. And this would take care of, actually 3, sorry, not 5, 3. And this would take care of their health needs, both inpatient, outpatient, admissions, and whenever they need access to healthcare needs within a panel of provider. We also have some financial, the integrated financial services with our asset management and Faulu as our bank. As you're aware, Faulu is part of the Old Mutual Group. So we provide unit trusts, we provide PA covers, and we provide financing under Faulu within the umbrella of IFS, that is Integrated Financial Services. So as a company, we continuing to play in this field, provide solutions that speaks to the needs of this segment, and listening to them so that we address the needs of this segment. Thank you very much for listening, and I would be able to now take questions and feedback from yourself. Thanks, Barbara.
Thank you very much, Japheth. I hope you're all taking notes so you can see how you can beat him next year and remove him from being the #1 underwriter. Any questions or clarifications from anyone before we move on to Vera? Clifford and Elias will take the 2, and then we will move on to Vera. I really hope she's online. Please test before we get to her in the next 5 minutes.
Right, Jeff, that's a great presentation. I just want to kind of look at the overview that you've mentioned in terms of the MSMEs, where the country's at. And you mentioned that these companies fail on the 3rd year. And that might just go beyond risk mitigation into forms of adaptation. So maybe as only providing insurance coverage, what are other mechanisms that you can play as an insurance company to support? Because, you know, we talk about every 3 years these companies fail. It might not only be providing an insurance solution, but how then do you de-risk further than just providing products? Maybe have you kind of thought about that from an institution perspective?
Thank you, Elias. So studies have shown, as I said, that 70% of MSMEs fail in year 3. And some of the reasons that were coming out prominently I'll just highlight three. So one was financial education. So MSMEs, and with the numbers also showed that, most of them have basic education, basic financial education. So when they start their business and how to, manage the business, control expenses, management expenses, and their own domestic need was coming out as one of the number one issue that affect this segment in terms of business longevity. The second item was on how to reach market, go to market with their product, because most of them are what you'd call the mama mboga in Kenya lingua. So reaching the market was a big problem. So they start off, they are limited to the area where they are based and fail to reach a wider market with their product, and that then becomes a problem. So as an institution, Old Mutual, so besides the financial protection that we provide, the solutions that we provide, we started about 3 years ago financial literacy, targeted at institutions, first of all universities, and now we've extended this to this segment of MSME, just to take them through financial literacy on how to manage their business, how to plan for their business, and that is besides the insurance policies that then we also offer to them. That is ongoing. I think the team has been going the entire country in terms of the counties. And we start with, the approach was to start with it from learning institutions. Then now we extended it to MSME. Then the products that we also bundled together then addresses also some of the challenges that came out in the study. So health was one big factor, and the studies have shown that 1 million people, households rather, in Africa are declared poor because of health cost or health needs. So that was a big number that we said, how can we help then MSMEs to not slide into poverty because of health problems? And then design of the product that takes care of health in the event that they need healthcare services and they don't fail then to go to their work. Because most of these members are on a daily wages. So the moment you fail to go to work for a week, then your business is almost headed to extinction. So health came out as also a big factor that we now addressed with the solution.
Perfect, thank you. Elias, I hope he's addressed at least 80% and you're satisfied. Clifford will take your question very quickly, and if you can get him a mic.
Good afternoon, everyone. Just to appreciate, my name is Clifford. I'm the chairman of the Professional Insurance Agency in Kenya. Well, I just want to make a comment that this discussion was more of inclusive insurance. As you are all aware that Kenyan market is strongly intermediated. The agency network and the brokerage, I think 60% of the business from the agencies. Just to bring this to your attention, to the regulator and to the speakers, that insurance agents need a lot of education on these products, and also you include them in the next program when you organize such a conference, because the reach of the agents is big, and the mabambogas and the small business people, they are able to reach out to these people. So you should consider that for the next conference.
Thank you, Clifford. Point well taken. So I'm so happy I saw Vera on the screen. So Vera, are you there? I can see you smiling, but I can't hear. Can you see her? Is she on the screen? She is. Okay. Vera, can you hear us? Okay. Could you unmute yourself, Vera? I'm assuming by now, I'm sure you probably have. Sami, are you there at the back? Are you able to assist? I don't know. Okay, this will be very unfortunate if we won't be able to have Vera present. This is when you're on the flight. Vera, try talk.
Can you hear me? Can you hear me? Can you hear me?
Okay. So, IT guys, what do you suggest? Do we move on without Vera?
Can you hear me now?
Yes, we can.
Okay, okay.
We were just about to
fantastic.
throw you under the bus and move on. So, it's over to you, Vera.
Okay, okay.
And
Thanks
sorry,
a lot.
Vera, you don't
And-
have a lot of time. I'll probably give you like maybe 7 minutes or 8, and then we'll take some questions for you as well.
Yes, no worries at all. And I think the screen sharing isn't enabled for some reason, but I'm happy to just proceed without it. Yeah, good evening, everyone. I'm Vera. I'm a research associate at Sanfree, and we are a nonprofit impact agency based both in Cape Town and Kigali. And we have already, I think now for a number of years, looked at how best can MSME resilience be strengthened, and what are really those underlying factors that prevent, both from a demand side but also from a supply side point of view, an increase in insurance uptake, but also in other risk management solutions among MSMEs. Okay, I see. I think the screen sharing is working now. So let me just do that quickly. Okay, perfect. And what we developed and also tried out past year in Egypt with another insurance company is to look at knowing what are the different challenges. And I think the previous speaker have already alluded to them. What could be maybe an approach that can be taken to overcome these challenges and to really come up with solutions that meet the needs of MSMEs, but that also overcome some of the supply side barriers that insurers face, such as that MSMEs are very heterogeneous and hard to reach, and that there is a lack of information out there with regards to MSMEs. And I'm just want to share this approach, and it's still, it might sound kind of conceptual, but we definitely have seen already insurers and other actors implementing some of these steps quite successfully. So the first step within this approach is to look at MSMEs and to segment them, because as already alluded to, MSMEs are not homogeneous. They really differ vastly in size, in terms of which activities do they do, in which sectors do they operate, in which areas do they operate, and obviously related to that, which risks do they actually face. And the segmentation, I think that's often done is, for instance, by micro, small, medium enterprise differentiations, or what we've also seen, I think, between urban and rural. And I think that's already a really important step. Looking beyond that, that's then to also look more at what are the different activities MSMEs do and what are the risks they face related to those activities. So looking at what are those core sectors that MSMEs are engaged in. So I think in a lot of countries, as we've also seen with the presentation earlier for Kenya, it's often the retail sector and obviously the agricultural sector, but then breaking further down, you know, what exactly is there further differentiation within the retail sector? Can we maybe also look at how MSMEs get their stock and that transport MSMEs that are involved in that segment? When we look at agriculture, what are the different value chains MSMEs are engaged here, obviously, and MSMEs in the dairy sector might face very different risks to an MSMEs in the tea value chain. So just looking at, if we're looking at different economic sectors and value chains, we can use that as an entry point to segment MSMEs further, to come up with segments of MSMEs that have sort of similar activities and a similar risk profile. And then in the second step, what that also allows insurers to do then is to look at how are these value chain structures and how are MSMEs within this particular economic sector or value chain actually aggregated. Because what was also mentioned earlier was that MSMEs are difficult to reach. They are often not banked. There's maybe not a very strong industry association yet. So it can be quite hard for insurers to actually reach the MSMEs. And looking at value chains, that can maybe open up or a view for what are those core aggregation points. So if we're looking, obviously in the retail market, I think what we often see is that MSMEs, for instance, need to order their stock somewhere, okay? So maybe they have quite strong relationships with those big supply companies, let's say Pepsi or other ones. Or there are also more and more platforms emerging in that space where these small retailers can order their stock from, like those B2B digital marketplaces that we see come up more and more, especially also during COVID. And these marketplaces can be then great partners for insurers, great distribution partners for insurance, and to overcome those difficulties in reaching MSMEs and also having a maybe more trusted partner on board. Because what was also mentioned is I think that MSMEs, there is often quite a bit of distrust towards insurance. We've also seen that in our own consumer research with MSMEs. So if there's maybe more trust toward that supplier the MSMEs order stock from, or towards that platform that's already in a well-established relationship, then if the insurer leverages this well-established relationship to distribute an insurance product, that can also really help to overcome those trust barriers. Other value chain aggregators can also be quite traditionally financial institutions, such as lenders, or also big payment aggregators that might have also additional functionalities that they provide to the MSMEs. But then maybe also in the agricultural value chains or in the transport ones, it might be the industry associations, it might be the cooperatives, so it might be also other institutions that can be identified. But by just plotting down the value chains and what are the relationships between MSMEs and other big companies, associations, platforms within that value chain can help to identify those distribution partner opportunities. And I think then the third step comes quite logically from that. So once we know this is kind of a value chain that seems to have a high potential, there's a high number of MSMEs within it, they have a similar risk profile, these risks seem to, at least to some extent, be insurable, then within these value chains, there also seem to be feasible distribution channels and partners that could be leveraged. Let's maybe look a bit deeper and see now from a demand side perspective, maybe do some research with those MSMEs to better understand their key risks and needs, to really see what are those core challenges they face. And I think here it's quite important to not only look at those insurable risks and challenges. I think Elias' questions also went a bit into that direction, but also into other risks and challenges that MSME face. So if we look at hazard risks, flood risks, fire risks, okay, yes, that's often insurable. If we look at financial risks, so liquidity, cash flow management risks, maybe less so. If we then also look at operational risks where MSMEs struggle with actually manage their business, maybe also digitalize their business and really keep up to speed with the rest of the market, maybe also not that insurable. So I think it's quite important to get a holistic view of the challenges and risks that these MSMEs face, and to see also what are they doing already in order to deal with those risks. What we often see, there are not many strategies in place, but it just really helps to see where's the gap. Where should a solution really come in and provide value to those enterprises? And then the fourth step also speaks a lot to what was said already, is to see how do we think about holistic resilience solutions that go beyond insurance. So let's say if we identified for an MSME that they struggle with theft risk, it's a small retailer, they struggle with theft risk, but they also kind of often have stock that is expiring because they don't really have a good inventory management solution. Then it's to say, okay, yes, we can insure the theft risk, and we can maybe combine that with an inventory management solution, because the solution will enable the retailer to better understand what is going on with the inventory, to keep more track, manage their business as a whole better. But then it will also give more data on the stock available, which helps obviously with the theft insurance policy. And then the theft risk insurance could be, for instance, bundled within the solution. So to really think through how can we bundle an insurance cover together maybe with a more risk management solution that enables business to proactively manage their challenges and risks, because that can then really also sustain the livelihood and of business owners, and can really help them to further grow and develop their businesses. So I think overall it's just kind of a conceptual approach, and not all of these steps obviously need to happen exactly in that way, but it's just to say, I think let's have a more segmented and nuanced approach towards which MSME segments do we want to target, instead of just having one off-the-shelf MSME product that's supposed to be for all MSME out there. Let's look at alternative distribution opportunities for this defined MSME segment, looking at both digital opportunities, but also maybe at big lead companies within those value chains or industry associations. Let's really understand all those challenges and risks they face, and see which solutions can be maybe bundled together for MSMEs to enable them to more holistically deal with those solutions. For instance, it could be, so to just really give them the opportunity to have a tangible product where they get daily value from it, and then if a big risk occurs, the insurance cover comes in, because that can also really help to improve the value proposition of insurance, and to make it just very attractive for MSMEs to take up that product, because otherwise it feels they're paying for it, but not really maybe gaining value from it, which is often a barrier for MSMEs to adopt insurance products. Okay, so just keeping it short and wrapping it up here, and happy to answer any questions.
Okay, thank you, Vera. I'll ask you the first question, and then we'll open up to anyone who wants to get some clarification. So you've introduced this, maybe not so new, but new thinking of a value-driven approach. And I think I heard something similar in Egypt earlier this year in a conference where this AXA was presenting about linking, small, farmers and MSMEs to a global value chain, and therefore being able to de-risk them, but from the end manufacturer, for example. So I'm wondering whether you could give us a practical example, and I'm just giving you 2 minutes, if possible. Just a case study or something.
Yes. Yes, no, of course, thanks. So one example we've seen, for instance, in South Africa was the SA Taxi Association, so for those mini taxis and buses. And they just really saw, there's a big need for insurance among those minibus operators, because those vehicles are really their main asset and is really important for their businesses, but they're often not insured. And that was also because there wasn't really a targeted insurance product out there. So this association actually just came up with their own insurance product in combination with asset-based lending. So to say, obviously those vehicles need to be purchased, but then it's also important to protect those vehicles in case of an accident. So here we just see, and that's just one example, that like a very targeted on one sector focused approach facilitated by an industry's association can be a good step to have really a value-driven product. Other instances we've seen is, I think Oye in Kenya for the Boda Boda drivers, where they also first really looked at, okay, this seems to be a good segment to look at, the e-hailing sector, then further evaluating what are really their needs. Okay, there are a lot of accidents, so that's maybe a key risk to insure, and then developing a product based on that and partnering with petrol companies in order to enable the product. So it's not all of the steps, but it just shows that looking at needs, looking at alternative distribution partners can be very helpful. I think one where we see risk management and insurance cover combined is, for instance, Lumkani in South Africa, which is a fire warning system. So it's more for households, but also for businesses. And they have partnered with Hollard, that then offers a fire protection cover. So it basically is that risk management technology device that enables those ones that are insured to more proactively manage the fire risk because they're better warned about it, but then it's combined with an insurance solution. So there you have this really tangible technology solution combined with an insurance cover. And yes, and for the work in Egypt, it was just to see what are different value chains, and we really saw, for instance, digital platforms are very strong in the retail one and can be great leveraged, and they often already offer solutions such as inventory solutions, payment and stock management solutions, credit solutions to MSMEs, and those can then be nicely combined and bundled with insurance products. But I think the MSME market is becoming more and more important for insurers, but it's also more like an emerging concept that we still need to see in its full application. I haven't seen an example for the full extent yet.
Thank you very much, Vera. I hope that brought it home. So I think we're going to open up for questions. We have about 5 minutes left, and we'll start with Wesley, and then to the gentleman and to Doug. So I don't know who can take a microphone. Thank you. Thank you.
All right. My name is Cosmas from Malawi. My question will go to the colleague, or maybe the colleague from Old Mutual. as a practitioner, as an underwriter. The segment of business we're talking about here, my experience, the biggest challenge to the underwriter is moral hazard. I have got experience like in Malawi, where vendors in the markets, they would go, after we did our investigation, markets were just burning anyhow. At the end of the day, we identified that because credit life cover offered to Finca had a fire policy attached to it. So if I've got a loan, $2,000, I'm failing to pay it, the best to be off the hook is fire. What has been your experience with this segment of business?
So I think we'll take the other two and then he will answer them all together. Thank you.
Yeah, thank you. I'm Wesley To from AR Insurance. I think for me, I just actually wanted to weigh in on what a lady on this other side did actually ask about the data. And probably what I really needed to maybe first of all inquire is whether the data took care of the aspect of COVID-19 in 2020 and 2021. I think some bit of that would actually be explained why we're seeing inclusion actually increasing, but then the health aspect is, the financial health is actually decreasing. So I really needed to maybe just put in, was this data after 2020, 2021? Are we able to see a more clearer picture, say after 2022, what is the experience, and probably removing the 2020, 2021, the COVID period?
Yeah, I'm Dirk Reinhardt from the Munich Re Foundation. Maybe I missed something, and I don't want to challenge you too much, but let me challenge you a bit. And maybe that question goes to Senfri. When we talk about MSMEs, I keep on hearing, oh, farmers are MSMEs as well. And then I keep on hearing, oh, drivers are MSMEs as well. Isn't there more? I mean, there are millions of micro and small and medium enterprises. Did I miss market research, or haven't we done market research to analyze what categories of enterprises are out there? What are the risks? He just mentioned COVID, business interruption, for example. I keep on hearing the same examples in the MSME discussion since many years, and I'm not seeing any progress there.
So Dak, your question is maybe the definition of MSMEs and what you're not feeling like you're seeing any progress in MSMEs, isn't it? So it's more of a challenge, possibly more than a question, but you can both comment, or the three of you can actually comment on it. So I think Japheth, will start with you and then go to Geraldine.
Thank you. So let me take the question from colleague from Malawi, and then my colleague here will answer questions on data. I think you handle more data. So it's true. I think the issue of fraud and moral hazard, it's an issue that permeates across all sectors. So not limited to MSME. Actually, our analysis shows that we have more coordinated moral hazard or fraud, if you may, in the formal sector than in the informal sector. The informal or sector, or the MSME, we've seen moral hazard on funeral expense products that we run. I think that is industry-based, not necessarily Old Mutual. But on the property side, the Biashara Shua, for example, product that I mentioned, and my colleagues are also here, there is not much fraudulent claims or fraudulent tendencies compared to the formal sector. So it's a challenge, and it goes beyond the informal sector, the MSME. It's across our industry. In fact, in Kenyan speak, we believe that between 35% of claims that we pay are fraudulent, and that exclude the MSME. So it's an issue that cuts across. But what we've seen with MSME, they're keen on their businesses. They want to be at their business so that they earn their daily bread. Aside from the life side, the last expense where we've seen elements of moral hazard or fraud that is a bit prevalent. So when we were developing solutions, we tried to put controls, we tried to put conditions then that, try to eliminate. We know we cannot entirely eliminate moral hazard 100%, but to bring it down so that the cost of insurance also comes down.
Thank you. So on the COVID question, so the survey was done in 2021. The previous round was done in 2019, so we got a chance to look at the impact of COVID, and then also mentioned there was a tracker that was done. The only way we could interview people, because we couldn't go to the field, was through the phones. So we're able to get the COVID impact. So one of the impacts on insurance, especially NHIF, we saw a drop from 2019 to 2021, and the reason for that was because many Kenyans had lost their livelihood, so they couldn't continue paying their premiums, and then also NHIF wasn't covering COVID, so people didn't see the need to have NHIF. On the business side, more businesses were closing, but again, I think we need to do more studies as to why businesses are closing, because it might be more than what we are seeing. And I just want to, let me take advantage of this time to announce a study we're doing on small farms diaries, where we're tracing about 300 farms for the past 12 months. And we're trying to, we'll be able to understand how they're doing their businesses. So I think questions about, like what you're asking, why there's no change, maybe the products that are there are targeting things that are not the issue with MSMEs. And I still believe data would help us understand that. And if I can give my closing remarks. I just say there's so much data that I have in FinAccess, and it's all publicly available. And FSD, CanBS, CBK are willing to work with anyone who needs that data to be able to respond to some of the queries we have. Because I think one of the things that was raised was that there's not enough data. I believe FinAccess in Kenya and other FinScope studies, we'll be able to provide you that data. And one of my passion is just to get people to use data to help design their solutions. Thank you.
Thank you, Lukania. So we've actually exhausted our time, and I know we are the obstacle before you get to dinner. So we're going to wind up now, but it's been, I really want to thank, I don't know, Japheth, if you have any closing remarks before we close off, and Vera as well, if you have a closing remark, to be great as well.
Yes, Barbara, then thanks. So in closing, I think what I did demonstrate, especially with the numbers, is the resilience of MSMEs and how we can come in as practitioners to take some of the risks, not all of them, but some of the risks that they face that make their business either not go beyond year 3 or to expand their businesses. And I would call out 2 things. One is partnerships. Partnerships with regulators, partnership with government, partnerships with technology has a big part to play in expansion or deepening of this sector. And we play our rightful role of risk mitigation to this sector. The second point that I want to make also is the solutions that we provide. So we move away from providing products. insurers have been accused, we've been accused that we are too traditional. So just one product, we want it to fit everyone, but that might not be speaking to this segment. So we move from providing products to providing solutions that speak to the specific needs of this segment. Thank you.
Vera, do you have anything to add? Thank you, Japheth.
Thanks. Yeah, I think my only final remark is when moving from insurance covers to more like the risk management solution side of things, just important to also segment MSMEs according to their economic profile and risks. Like a transport MSMEs might really struggle with coordination challenges and risks, with vehicle-related risk, agriculture ones with weather-related risks, retail ones with stock-related risks, whereas maybe in the construction sector, it's a lot of injury and accident-related risks. So just really important to take the segmented approach, and I think then very much aligned also on the holistic solution design. Thanks.
Thank you, Vera. What I'll just close with is to say thank you to Lukania, Vera, and Japheth. I think they've really brought a very wholesome approach to thinking about MSMEs. I think MSME, like the concern that Doug has raised, who are these MSMEs? And I know there are different definitions, and we actually steered away from talking about the definition because you can spend a whole 2 hours just discussing who are these MSMEs. But I'll also draw your attention to, there's a report by the World Economic Forum. It's called the Global Risks Perception Survey. I'd encourage all of you to read it because it really talks about as we go into maybe the next 1, 2, 3, into the next 10 years, we expect the risks for businesses to actually get more complex. These businesses will be affected even more by climate risk, and we never thought a business in Kenya would be affected by the war in Ukraine. So just all of us to think about these interconnections and possibly how we can work with insurers to develop suitable products, and even with Lukania to see how we can collect more data and more in-depth data that can answer some of the questions that were being asked. So thank you very much. I think for me, I've learned a lot, and thank you for sharing your knowledge with all of us.
Thank you, Barbara, for facilitating that very smoothly. I would like to thank Lukania for being a very able panelist, same to Mr. Ogolla, and of course Vera, who joined us online. And ladies and gentlemen, with that, we have come to the end of today's session, at least the presentations and the workshop. And before we step out, I would just like again to recognize our partners who've made this event a success. Old Mutual, we remain indebted to you for your support towards this function. Please let's clap for Old Mutual. Thank you so much for your support, your financial support towards this conference. We appreciate. CIC Group, we remain grateful for the support that has come from your way. Let's clap for CIC, please. Thank you. APA Insurance, asanteni sana. Let's clap for them. Africa Re, we also are grateful. A round of applause for Africa Re. And last but of course not least, Britam, who have also supported us by way of hosting the cocktail, and of course they'll also be hosting some delegates. Thank you so much. And so with that, we've come to the end. We have a cocktail courtesy of Britam, as said earlier. It's happening at this same floor, this same floor, next door. And Anne has told me it's not cocktail. She's that hungry. It's dinner. It's a sit-down dinner to be precise, yeah? And they told me that you need to have your dancing shoes on, or if whatever will make you dance in a good way, please get it ready. So with that, then I think we can call it a day for today. Hope to see all of us tomorrow at 9 a.m. We will have a session, then we will have the closing remarks, and then we can have the field visits. And we will wrap the 8th conference on inclusive insurance after that. I've been asked about transport arrangements for those who are doing the APA travel, the APA visit. Allow me to confirm at the dinner in terms of the farm transport arrangements for those who will be visiting APA in terms of the pickup and drop-off points. But for Britam, the pickup and drop-off points remain the College of Insurance. Otherwise, see you and enjoy your evening. Thank you so much.